एवरीवन, गुड आफ्टरनून, गुड मॉर्निंग, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल और नेचुरल गैस को। कल नेचुरल गैस रेजिस्टेंस पे था, थोड़ा बहुत मार्केट वहीं पर क्लोज हो गया था। अर्ली मॉर्निंग ओपन हुआ, उसी रेजिस्टेंस एरिया से सेलिंग कंटिन्यू है। सो इट इज स्टिल ऑन रेजिस्टेंस जब तक ब्रेकआउट नहीं होता। क्रूड ऑयल कल सपोर्ट एरिया से एक बाइंग काफ़ी अच्छी आई थी, आप लोगों को याद होगा। ऊपर एक रेजिस्टेंस था इसका काफ़ी देर, मतलब ऑलमोस्ट यहाँ पर 8 घंटे बिताने के बाद मार्केट ने क्लोजिंग होने होते ब्रेकआउट किया, रिटेस्ट किया, बाइंग आ गई वापस। थोड़ी सी एक पॉजिटिव न्यूज़ भी थी क्रूड ऑयल के लिए, दैट इज़ फ्रॉम यूएसए। यूएस ने एक्चुअली मॉर्निंग पर एक ईरान का ड्रोन शूट आउट कर दिया था, जो उनके एयरक्राफ्ट करियर की ओर जा रहा था, अब्राहम लिंकन, अरेबियन सी में। सो दैट विल बी अ न्यूज़, लाइक ऐसा कोई इमीडिएटली इम्पैक्ट तो नहीं है, बट ओवरऑल देखोगे दैट इज अ पॉजिटिव ओवरऑल फॉर क्रूड ऑयल। बाकी यूएस का शटडाउन भी एंड हो गया। इंडियन मार्केट भी देखोगे फ्लैट ही चल रहा है। मार्केट भी ऑलमोस्ट फ्लैट ही थे। गैप निफ्टी, गिफ्ट निफ्टी, बैंक निफ्टी को देखोगे, बैंक निफ्टी तो थोड़ा सा फ्लैट ओपनिंग फ्यूचर में अप साइड भी गया है, साइडवे चला गया। सेम फॉर निफ्टी, फ्लैट ओपनिंग हल्का सा अप साइड गया, फिर साइडवे चला गया। तो दोनों ही इंट्राडे में अभी साइडवेज ही है, कोई ट्रिगर पॉइंट नहीं है। एक कल का ट्रिगर पॉइंट था, दैट इज ऑलरेडी टेकन आउट। भी कुछ खास तो लग नहीं रहा है निफ्टी बैंक निफ्टी में। मॉर्निंग से एक रेंज के अंदर ही बना हुआ है मार्केट। ओवरऑल मेटल्स देखोगे थोड़ा बहुत रिबाउंड कर गए हैं। डॉलर इंडेक्स वापस देखोगे $97 के आसपास आ गया है। 97.50 के ऊपर सस्टेन ही नहीं कर रहा है। गोल्ड गैप अप ओपन हुआ, वो भी साइडवेज। फॉरेक्स में देखोगे कंटिन्यूअसली पॉजिटिव मोमेंटम बना हुआ है गोल्ड में। बहुत स्लो है 4 आवर टाइम फ्रेम पे, मैंने पहले भी वो चार्ट दिखाया था। स्टिल दैट लेवल स्टिल होल्डिंग। $95 के आसपास गोल्ड में भी रेजिस्टेंस ही है फॉरेक्स में। 5100 टू 200 के बीच में, $95 के अराउंड सिल्वर में। गोल्ड थोड़ा ज़्यादा रिबाउंड किया है एज कम्पेयर टू सिल्वर, इवन दो सिल्वर भी लोअर एंड से अच्छा मोमेंटम कर चुका है। नेचुरल गैस में सेलिंग का ट्रेड ही कंटिन्यू है इसमें, और कोई नया ट्रेड अभी है नहीं। क्रूड ऑयल में लेवल अपडेट कर देता हूँ। इसमें वैसे भी अब ऊपर कुछ खास लेवल मुझे दिख नहीं रहे, नीचे एक रीटेस्ट ही है जो हो सकता है। ऊपर देखना पड़ेगा, ऊपर सच कोई मेजर रेजिस्टेंस अभी के लिए दिख नहीं रहा है 15 मिनट टाइम फ्रेम पे। आउट हुआ है, मोस्ट प्रॉब्ली उसी का एक रीटेस्ट हो सकता है अगर मार्केट करता है, अगर आज इंट्राडे में। स्टिल ऑन सेलिंग ऑन फ्रॉम रेजिस्टेंस। कल रेजिस्टेंस को हिट करके आया है बिल्कुल डीप लेवल से, तो मेरे अकॉर्डिंग अब जितना सेलिंग आनी है आ जानी चाहिए आज नेचुरल गैस में। कि कोई फ्रेश सपोर्ट अभी है नहीं, नीचे ही एक सपोर्ट है 278 के अराउंड। नया कोई सपोर्ट अगर क्रिएट होता है दैट विल बी फाइन, देन देयर इज अ फाइट। अदरवाइज ठीक ठाक नीचे मोमेंटम एक्सपेक्टेड ही है, मार्केट में होना चाहिए। फ्रेश कोई एंट्री बनती है तो देखते हैं। अभी कोई और नेचुरल गैस में फ्रेश एंट्री है नहीं, बन सकती है, डिपेंड ऑन द कैंडल कैसी फॉर्म हो रही है, कहाँ पर फॉर्म हो रही है, फॉर सपोर्ट एंड रेजिस्टेंस बोथ। कि अब वापस उसी सेम रेजिस्टेंस पे आएगा तो सेम रेजिस्टेंस पे वापस सेल नहीं करेंगे। ऑलरेडी कल ही हिट करके गया है रेजिस्टेंस को सेलिंग में नेचुरल गैस, तो अगर अब साइड वापस जाता है तो फिर नेक्स्ट रेजिस्टेंस है अपर साइड पे, प्राइस डेफिनेटली फिर उस लेवल की ओर जा सकता है विच इज़ अराउंड 341। 341 है एक मेजर रेजिस्टेंस, एंड देन उसके ऊपर अगर निकल गया, मतलब उस लेवल पे अगर होल्ड नहीं करता है तो फिर 365 मैं एक्सपेक्ट करूंगा कि प्राइस थोड़ा सा इस लेवल को ऐसे टच करके जाए नीचे को, दोनों रेजिस्टेंस एक साथ ही कवर हो जाएंगे। ठीक है, दोनों ही दो रेजिस्टेंस है यहाँ पर एक्चुअली में। एक पॉसिबिलिटी है कि प्राइस यहाँ कहीं एक नया सपोर्ट बना दे, तब फाइट हो तो फिर ऊपर की ओर निकल सकता है, अदरवाइज एक सपोर्ट नीचे लोअर एंड पे 274 टू 278 के बीच में ही है अभी के लिए। ठीक है, क्रूड ऑयल को लेवल को रिफ्रेश कर देते हैं इसमें फ्रेश। कल का एक रेजिस्टेंस ही है जो मुझे लग रहा है सपोर्ट बन सकता है, और कोई नया सपोर्ट है नहीं ऊपर भी, वो रेजिस्टेंस मुझे कुछ ज़्यादा स्ट्रॉन्ग लग नहीं रहा है एटलीस्ट 15 मिनट में, ध्यान रखना। कल का ब्रेकआउट लेवल था, मार्केट ने कल ब्रेकआउट कर दिया था एक रेजिस्टेंस जोन का। सो इट एक्ट लाइक एज अ सपोर्ट। बेटर वैसे तो है कि एक नया सपोर्ट रेजिस्टेंस बना के गिरे। एक लेवल यहाँ से देखते हैं कि पॉइंट ऑफ इंटरेस्ट ही बनेंगे इसको, रेजिस्टेंस तो नहीं है ये। क्लोज होने देना। अगर ये कैंडल क्लोज होती है लास्ट कैंडल के लो के नीचे, बैक में एक यहाँ से सेलिंग प्लान करेंगे। टारगेट वही कल का जो ब्रेकआउट हुआ है उसका रीटेस्ट लेवल। नीचे 5400 से 420 से जो कल का सपोर्ट था 5500, दैट वाज अ स्ट्रॉन्ग सपोर्ट नाउ। उसके नीचे जाना मुश्किल है अब। एक इंटरमीडिएटरी सपोर्ट मिल सकता है इस रिटेस्ट जोन के अराउंड प्राइस को, मोस्ट प्रोबेबली। एंड अगर प्राइस ब्रेकआउट करके जाता है 5800 के ऊपर तो फिर भाई वही 6000 के अराउंड ही जाएगा, वही नेक्स्ट रेजिस्टेंस बनता है अगर ये रेजिस्टेंस होल्ड नहीं होता है बाय एनी चांस। ये कैंडल क्लोज हो गई है, इसमें पुल बैक में एंट्री कर सकते हैं। इंटरेस्ट ही है, सपोर्ट तो दूर ही है, तो पॉइंट ऑफ इंटरेस्ट के बिहाफ पर ही यहाँ पर एक सेलिंग का ट्रेड प्लान है, ध्यान रखना। ये कोई एग्जैक्ट रेजिस्टेंस नहीं है, रेजिस्टेंस काफ़ी दूर बना हुआ है। टेस्ट पे आना चाहिए प्राइस को, अगर ये रीटेस्ट पे आता है तो अच्छा है सपोर्ट बाई करने के लिए वापस से। ठीक है, ध्यान रखना पॉइंट ऑफ इंटरेस्ट से बाइंग कर रहे हैं जो हम। नीचे का जो रीटेस्ट जोन है थोड़ा सा काफ़ी बड़ा है, तो ध्यान रखना हम कहाँ से प्लान करेंगे। 5000 बेस्ट है, 5630 से 5590 के अराउंड आ जाए, वहाँ पर बाइंग बेस्ट रहेगी। from that particular retest zone. पूरा रिटेस्ट जोन ही है। बेस्ट केस सिनेरियो रहेगा कि मिडिल लेवल से लो लेवल के अराउंड आके सपोर्ट लेके जाए। ज़्यादा ऊपर से चला गया तो फिर एसएल काफ़ी बड़ा हो जाएगा कंपेयर टू दैट लेवल। न्यूज़ डेटा की बात कर रहे हो, शायद डेटा है आज एडीपी नॉन फॉर एम्प्लॉयमेंट चेंज का डेटा है और सर्विस पीएमआई का डेटा है एंड क्रूड ऑयल की इन्वेंट्री है। ये 3 डेटा शेड्यूल हैं आज। नीचे तो मुझे नहीं लग रहा जाता हुआ प्राइस 5590 लास्ट मान के चलो। ये बहुत ही स्ट्रॉन्ग सपोर्ट है क्योंकि कल एक काफ़ी स्ट्रॉन्ग रेजिस्टेंस था। मार्केट जिस हिसाब से यहाँ पर रुका था ना कल, लॉजिकली तो नीचे आना चाहिए था, एसएल चला गया था उसमें, तो वो ब्रेकआउट काफ़ी अच्छा हो गया है। स्ट्रॉन्ग रेजिस्टेंस था, ब्रेकआउट हुआ है, तो नाउ इट एक्ट लाइक अ वेरी स्ट्रॉन्ग सपोर्ट एज वेल। तो इसके नीचे तो मैं एक्सपेक्ट नहीं कर रहा हूँ। यहाँ से बाइंग ही आनी चाहिए मार्केट में वापस से। 5580 के नीचे कहीं अगर क्लोजिंग बेसिस पे चला गया तब फिर कल का लो और 5400 आ जा इजीली आ जाएगा। बट अभी के लिए मेरे को नहीं लग रहा 5580 के नीचे इतने इजीली जा पाएगा। हाँ, कंसोलिडेशन करे तो अलग बात है। सपोर्ट दैट वाज दिस रिटेस्ट जोन।
We're going to start to then shut down
the rate of return from it?
We have strong spending at the level of the group in terms of IT technology, several tens of billions of euros. What's important for us, though, is not so much the extent of the spending, but the nature of the spending. We want to make this spending more efficient. We want to develop AI. We want to also develop synergies at the level of the group, sharing more efficiently data, reducing the costs of KYC, reducing the administrative costs. And so one of our targets in particular in our medium-term plan is to divide by 2 the time to market. What's important is not the IT spending, but the way that it allows us to contribute to the development of our business efficiently and how it improves administrative costs.
Just coming, KYC is a really interesting area. So is that an area in which you think AI could do the job that people are doing at the moment? We're starting to see real concern within the software space that actually you don't need humans anymore. The products that are being produced by the big AI companies are going to do that job. How quickly do you think areas like KYC, know your customer, could change as a result of what AI can deliver?
We're always going to need humans in banks and in particular in Crédit Agricole. But it's true that we really want to use AI to improve the personalization of the solutions we provide to our customers. So it's really improving, increasing what the humans can provide. That's for customers. So advice, helping for the treating of emails. But in the administrative dimension, this time spent on KYC is too high for our advisors in the branches, for example, or in the different businesses. So we want to help these advisors concentrate on what's important, i.e. developing a long-term relationship with our customers, understanding their needs, providing a whole array of offers and services for them. So yes, AI is going to help us with KYC. It's going to help us with all of the compliance, fraud, all of the analysis of documents. All of these elements are going to benefit from AI, but all of this is in the interest of our customers, providing strong expertise, digital solutions for them in order to make their day-to-day banking easier.
Clotilde Langevin, the CFO and Deputy General Manager at Crédit Agricole, thank you very much indeed. That conversation takes us on perfectly to our next conversation. Does Infineon's CFO see an AI bubble?
We do not see that for the next years. Why? Because on the one hand, for us, and here we always need to look at the differences because we are talking about the power side and not the chips themselves. We are working together with a very broad international customer base of leading processor makers and hyperscalers. So very strong partners making lots of money with that business, with other business. So very profitable. It's not a niche business for them. It's the core technology platform they are developing.
CFO of Infineon, just one company producing numbers this morning. There are plenty of others. We will be back to that earnings story shortly. The OMV CEO is up next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Let's bring you the latest lines coming through from OMV, the Austrian oil and gas company. Of course, in the fourth quarter, clean CCS operating profit, so cost of supply operating profit, coming in at 1.15 billion euros, just below the estimates of 1.16 billion. And in terms of barrels of oil or estimates, that's coming in terms of production below, this is the forecast for 2026, below 300,000 in terms of barrels of oil or equivalent. The estimates had been for around 296,000. Let's bring in the CEO of OMV right now, Alfred Stern. Alfred, how do these numbers set you up for the year ahead? What is keeping production capped? Do you see any catalyst that could turn that around in terms of the demand-supply picture?
Well, good morning and great to be on your show. Maybe let me just start with a very short highlight of 2025. For us, the operating cash flow of 5.2 billion euros was really a very good testament to our integrated business model and the robustness of it that allows us to pay an attractive dividend again of 4.4 euros per share. We are very excited about this. The year ahead, as you said, if I'm looking at our core production in E&P, last year was about 305 barrels per day. We are looking for this year to be slightly below 300. And of course, we'll play our operational strength to get as close as possible there.
In the chemical space, there's a bit of a down cycle. There is a down cycle in chemicals. Do you see that turning around in 2026, Alfred?
So we still see in our integrated business model with energy, fuels and chemicals as a major growth path for our company. Why is that? Because improving living standards and the way we are driving technologies forward, lightweighting cars, packaging of food, the energy transition, wire and cable insulation will require more of those materials. You can actually see in the chemical sector, our polyolefins grew 2025 by about 3% above GDP, which is also a good sign of the demand requirement there. The prices are still under pressure because of significant capacity that has come on stream. So we see good demand in a difficult environment. However, we are really excited about Borouge Group International, the fourth largest polyolefin producer that we will create together with ADNOC, that will be excellently positioned in that market with about 70% of the production in advantaged feedstock production, plus very innovative product portfolio.
Yes, and Alfred, I see you've made comments this morning saying that the first quarter is still the plan to close that particular deal, with which you mentioned. When do we get more details on how you're going to run this and what it's going to do? The management team, for example.
Yeah, so the closing date is, of course, depending on regulatory approvals that we need to receive. We have made great progress on this. We have received all the necessary FDI approvals. We have received most of the regulatory approvals with only a few outstanding. So progress according to plan. And then because of that, we are still then counting on closing in the first quarter. Also, we have made good progress on several of the other fronts, like financing, like the structuring of the legal entities and so on. So that is all on track. Also, planning for the first day is on track. And we're in good shape. Management team and supervisory board will announce at the closing date.
Alfred, I know that there's still some of the winter to go, and we'll see how that goes. But thinking about gas storage in Europe, and you've said this morning that that it looks low. Is this concerning enough that governments are going to need to step in? Is that the kind of intervention you expect to see in the gas market?
Yeah, so what we have seen is we started this winter season off with lower storage than the year before. That was a result of negative summer-winter spreads that we had in 2025. And now we have a colder winter than anticipated. We at OMV, we believe there are still some cold spells ahead of us, which will further deplete the storages. And then that will require refilling of those storages in the summer. So we believe that gives some need to have attractive prices to attract LNG to Europe in order to do this refilling. So Austria is a little bit different than the rest of Europe. They have a couple of years ago decided to make a strategic gas storage that can be used. And that is something that is proving quite valuable at this point.
Alfred, good morning. It's Guy. Should European governments intervene to make sure that the gas is filled to sufficient levels? What kind of government intervention do you think could be required?
So we really think that this type of a strategic storage is a good approach to do this. The last couple of seasons, we had regulation in place with minimum storage levels. And unfortunately, that very rigid regulation was part of the reason why last season the summer-winter spreads were negative. So to address this, we need to modify that regulation. We are in favor of such strategic gas storages.
Okay. Taking the other side of that trade, it seems that there actually is a lot of LNG out there. New trains are coming on in America. We're seeing, obviously, America ramping up its exports. We've obviously got extra gas coming out of the Gulf as well, out of Qatar in particular. Is there sufficient gas on the global markets to keep prices low? Is there a glut of gas coming for the global market on the LNG front?
Yeah, there's sufficient gas. With our focus on the European gas market, we can say that if you currently look, the LNG regasification terminals in Europe are not used to the full capacity. There's additional LNG capacity on the market. The market is sufficiently liquid to attract additional quantities. However, that is, of course, a question of the pricing, and free market will, of course, make sure that this plays out in the right way. But the capacity is there. And we think after 2025, we had an average TTF price of about 37 euros per megawatt. We think 2025 will end up above 30, but with a trend down again. And looking back further, you have seen the last 3 years coming successively down because of the LNG market supply.
Availability. Great to catch up. Alfred, thank you very much indeed for your time. Alfred Stern, the OMV CEO. It is a busy morning. It is a bottom-up morning. It is a single stock story morning. Perfect territory for Chloe Mellet. What do you got?
Good morning, Guy. Let's see how those software and financial services stocks performed this morning after the massive sell-off that we saw yesterday. That was, of course, triggered by Anthropic releasing this AI tool that automates legal work. And that had a really, really negative impact on all of those names up here on the board yesterday. And that could continue today as investors try and limit as much as possible their exposure to stocks that they think might be AI losers, might be victims of this AI disruption. So we'll be watching out for any weakness in that sector this morning. Moving on to pharma, which is also in focus, and Novo in particular. Novo Nordisk said that it expects sales to decline this year, quite a big drop actually, and that reflects both Trump's efforts to cap drug prices in the US and also growing price competition in that obesity space. And then for Novartis, we have also got quite a challenging outlook because of generics competition that will also lead to a decline in profit this year. But on the other hand, GSK is actually showing quite resilient numbers this morning, and so could be doing doing a little better at the open. And finally, we had a lot of banks reporting today as well. We've got UBS beating estimates and announcing a big buyback. Santander announcing a $12 billion acquisition of Webster Financial in the US. And then on maybe a more negative side, Crédit Agricole missed estimates and also said it was dealing with higher costs and higher than expected provisions. And so that could be a little negative. There's a lot of earnings news to digest this morning, so we'll be keeping an eye on all of those movers at the open.
Chloe, thank you very much. Chloe Melly with us. So many earnings in focus, certainly UBS in focus, Santander from the banking sector and Crédit Agricole. The drug space really in focus on the drug pricing out of the US. That's certainly having a big impact. And Novo could fall substantially at the start of trade.
Yes. The Danish market is going to be interesting to watch this morning. Carlsberg, Novo. Novo is going to have a really big impact, I suspect, in terms of what we're going to see there. But I'm trying to wonder how you take a step back. What are we seeing in terms of the corporate story? What is the message we're getting? Is it a resilient consumer? Sounds a little like the consumer's okay. It was interesting, I was talking to Infineon, the car sector, maybe some signs of stability, at least from their point of view, emerging there. Maybe that market's beginning to trough out. Is it possible at this stage to get a read on what the corporate earnings story is telling us broadly, if you take the sort of top-down index level story?
Crédit Agricole CFO, interesting as well, I thought, when asked about loans and some distress there, and saying they are keeping a close eye on some sectors, including construction, for example. She was painting a very positive picture. But maybe the story around banks becomes a little bit more nuanced than just upside that we saw in 2025. We're seeing a divergence now across the banking space.
Yeah, we'll certainly keep up with the coverage of the banking sector. Santander still to come, that interview. We'll also watch the software stocks and anything related to AI, winners and losers at the start of trade once again this morning here in Europe. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Welcome back. A couple of minutes to go until the start of equity cash trading here in Europe. Let's talk about yesterday's session in the United States. Yesterday's session in the United States is going to be one to remember. Yesterday's session was about selling before you had really the answer to the question. The question is, what is going to happen to software stocks? And yesterday, as a result of what Anthropic did in terms of a small plug-in related to the legal sector, it saw devastation in software stocks in the United States and here in Europe to a certain extent. How much does that continue into today's session here in Europe is a really interesting question. But you can see the trajectory. We get a little bounce by the end of the session. Europe went out here, US closing just below that, and then we've got a whole range of earnings after the bell as well to digest. So there's a lot to factor in this morning. Kind of index level, maybe net neutral. Single stock level, I think you're going to see some volatility today, Tom.
SAS Copelix was the framing from some analysts out there. European stocks pointing high by 0.2%. To your point on earnings, of course, we focus in on pharmaceuticals, on Carlsberg, the drinks makers, on the chip space, Infineon. Guys been speaking there to executives at that company. All of that coming together with the banking space as well, the UBS and Santander. FTSE 100 futures pointed to gains of 18 points. DAX futures looking to add 76 points, up 0.3%. Anna.
Let's have a look at some of the individual names, in fact one, and some sectors that are firmly in focus this morning. Novo Nordisk is going to be in focus. Could this drop by more than 10% this morning? That seems to be the expectation that we're thinking about, given what it did yesterday over in the United States. Clearly the pricing, President Trump's moves around pricing have an impact there, along with the competitive environment. Bank stocks firmly in focus. UBS, Santander, Crédit Agricole, all out with numbers. Is loan loss provisioning a theme we need to watch? Software stocks very much in focus. As Tom, you talk about that SaaS apocalypse. Does that last into another day here in Europe?
We're about to find out. It's going to take a while, I think, to plug in some of these numbers. You're going to see some big moves on a number of single stocks this morning. So it's going to be interesting to see whether or not we get indexes open quickly. FTSE 100 is, as ever, always open first thing. And we are up a little bit this morning. What are the individual moves within that market going to look like this morning? I think that's going to be fascinating. But the Stock 600 is already slightly negative. In fact, the FTSE flips negative now. What's happening in the pharma space, I think, could be interesting there. Is there a read across? Obviously, we've got big news out of not only Novo, but lots of other stocks in that space as well this morning. The CAC is up by 0.5%. What does that tell us about what is happening maybe in the banking sector, in the luxury sector? The IBEX is down by 0.6%. Santander is a huge part of that market, and we're about to speak to the company in a couple of minutes' time. I suspect it'll take a while to get the DAX open and the SMI open this morning, the DAX in particular. So, Tom, what are we seeing in sectors?
In terms of the some of the top gains coming through, energy is up 1.4%, telecoms up 0.5%, but really the focus is on the sell-off coming through for healthcare. To your point around Novo, down 0.6%. That's the biggest loser right now across your sectors. Media also down 0.3%. Banks off by 0.2%, so not massive selling across that sector. Divergent stories again when it comes to Crédit Agricole, UBS and Santander. And again, on the upside, you've actually seen some upside coming through for autos and telecoms, but I think the focus needs to continue to be on the banking healthcare space. What are you seeing? What's jumping out to you, Anna?
Yes, absolutely. I mean, it's a bad sign for media stocks that they're down for another day, but only by 0.3% for the sector as a whole. But it is WPP and Publicis that are once again down. And WPP was down by more than 10% yesterday, down 1.4% today. Publicis down by 1.3%. So small gains versus yesterday, but still on the back foot. Healthcare, you're right to focus there because we're waiting for Novo Nordisk to open, I think. That's been halted, so that one's not even open, but we do see some moves downwards. Maybe that's responding to the wider pricing dynamics. Energy, by far and away, the best performing sector this morning. That sector is really up strongly, up by 1.5% on an oil price that is pretty flat this morning. But Shell, Total Energies, BP, all up by more than 1.5%.
AI is up as well. Schneider's doing fairly well. ASML's having a fairly good day. It's the banks as well. Santander's down by over 4% this morning on the back of numbers and an acquisition. But it's Novartis, Astra that are really the second biggest points drags this morning. As you say, though, still don't have Novo open. SAP is also in the mix on the downside. The sort of software for services sector of that tech world been under pressure, continues to be under pressure this morning. The London Stock Exchange down by another 1.2% this morning. So that trade has carried on out of yesterday, what we saw here in Europe and into the United States, into Asia and back now here into Europe. So there's still some pricing to happen.
And Santander does have some company in that Crédit Agricole, the other bank we spoke to this morning, that's also down and down by 4.7%. I wonder if she was very clear that the loan loss provisioning, it was about two very specific one-offs, and that other than that, things were looking stable on loan loss provisions. But maybe that's an area of issue. I haven't seen a UBS share price yet.
It's not doing very much.
Novo's now down 17%.
Novo's down 17%. So being absolutely hammered on the back of what was released last night, earlier than anticipated. Mike Dussault out with those numbers last night, and the market, he clearly wanted them to get them out early, get the market reaction, maybe stateside, but you're seeing that priced in this morning. We're now down by 18% on Novo.
It's quite amazing, isn't it? Because we know about the story about Eli. We know about the competitive environment. We knew all about these themes. There were no new themes necessarily. It's just the extent to which they will weigh on Novo's ability to make money, and that seems to be something that is weighing on the business. Now, the CFO at Novo telling a much more positive story, saying that, you know, the pills have started. That's going to be a good thing. There's no shortage of demand in the States and in many other places, as you can imagine, with this kind of product. So if you drop the price, do you increase demand? Do you get demand from other places? But that isn't helping in the very short term. She characterised it as short-term loss for longer-term gain. We'll see whether the market factors in any long-term gain, because right now the stock is down by 19%.
Because they grow out their market share, but at the cost of price. But maybe it's the lack of new themes that is a problem as well for Novo, that they don't have a convincing story to tell about what comes next into 2027.
So what do you do? Acquisitions? They've tried that. What happened with that acquisition story that we saw last quarter? That was a big theme then. Do they have to do more of that? Are we going to see more of that? Where can you go shopping for that kind of a story? UBS is fairly flat at the moment. No, it was down 0.3. It's now down by 1.3%. So that story is softening up, but relative to some of the other banks are looking actually not too bad this morning in terms of the overall sector performance. The wealth management story, maybe the drag there, the outperformance of the FX debt and equity traders maybe helping out. Certainly a big benefit for Sergio Mossi coming out of that group of the business, doing very well. But yeah, the stock is down by 1.4% now.
Very interesting that some parts of the financial services were impacted as well by the Anthropic story and the plug-in story. Today, Amundi is actually up 3.7%, but you had private equity in focus as well. Blackstone taking a hit in the session yesterday stateside alongside Apollo. The credit story linking to software is one that we need to keep an eye on as well. But we'll get back to the banking space now.
Yes, let's do that. Let's talk about what's going on in Spain. Spain's biggest lender, Banco Santander, has agreed to buy the US bank Webster Financial for $12 billion. Santander beat fourth quarter estimates for net income and also announced a share buyback. The stock is down by 4% this morning in trade. Let's speak now to Anna Botín, who is the Santander Group Executive Chair. Very pleased to welcome you, Anna, to the programme. Thank you very much for being with us. We'll come to the share price in a moment. Can you tell me a bit more about the rationale for Webster? I know that you've said that this is about efficiency and profitability, creating a top 10 national retail and commercial bank in the States. But why is it important to increase US exposure at this time?
So good morning and great to be here. Just a comment about our results, because we've delivered, again, record results. We have grown 8 million customers. We have grown revenues, reduced costs, and delivered 17% earnings per share growth, whilst growing capital to 13.5. Regarding the US has been one of the core markets in value creation for the last 5 years, top 3 for Santander shareholders in euros. And they have done a great job growing profits by 30% over the last 3 years. And why Webster and why now? Webster is a great bank, one of the best by profitability and efficiency. We're the best buyer. We're in the same footprint. They have 80% commercial business. We have mostly consumer. Together, we're going to take the Santander US, now with the corporate bank, also to 18% return on tangible equity. That is best-in-class profitability by 2028 among the top banks in the United States. Again, US has always been a core market. This is a bolt-on but strategically important acquisition because it drives us to our ultimate goal, which is to be one of the most profitable banks in each geography.
OK. Does the volatile policy-making environment in the States, Anna, at this point, did that give you pause for thought at all, or is this just absolutely the right deal at the right time?
It's the right deal at the right time. Volatility is the name of the game in all our markets. US is the biggest, most, I'd say attractive on a risk-return basis market in the world. It has huge connectivity for all our franchises in LATAM and Europe, not like Poland. That's why we sold Poland. We invested in the UK and in the US. Small acquisitions. Webster represents 4% of Santander loans and will greatly add to our ultimate goal, which is 20%, above 20% ROTE by 28, one of the most profitable banks in the world at that point.
You've told us a lot of the positives in the numbers and beating estimates at the net line seems to be one of them, the buyback, all of that, the market working its way through. The shares are down, though, 4% today. Do you think the market maybe needs a little more convincing about the Webster deal? Is there something in loan loss provisions that seem to be a little higher than expected that we need to know about?
As I said, Webster makes us at scale in the United States. So as we think about Santander, this is totally consistent with our capital hierarchy. We're investing in a bank that delivers 15% return on invested capital compared to share buybacks at 9%. We have, however, announced a $5 billion share buyback today. We'll be buying $5 billion over the next few months, which is keeping all the commitments we made to shareholders in terms of returns and being able to invest capital at 15% return on invested capital. That's huge. Santander is about growth. We got to our capital levels, we greatly increased distributions, and what you should expect is increasing distributions as we grow earnings. And Webster will add 7 to 8% earnings per share over the next few years. That's huge.
Anna, can I ask you about the Western Hemisphere? You clearly operate in we've talked about North America, you clearly operate in other parts of the Americas as well. Policy making in the United States creating quite a volatility story in that part of the world. I wonder if you see more opportunity as we watch the White House and the Don Road Doctrine, perhaps dubbed by President Trump, unfold. Are there more opportunities for you in the Western Hemisphere?
We will not do any more bolt-ons. We are at scale in all our core geographies. There were only two where this was not the case, the UK and the US. With 2 bolt-on acquisitions, those 2 markets will deliver best-in-class profitability both in the UK and US. That's our goal. And so our business model is, I used to say when I was in the UK, we're the most British of the British banks. Same thing in the US, Mexico, Brazil, or Spain. And we are present in Europe and the Americas. And that's it. We're not in Asia, not in Africa. We're not intending to be there. Our 5 large core markets are now at scale. And we'll get the group to over 20% profitability by 28. Again, one of the most profitable banks in the world with 180 million customers, where our in-market scale, we can say that now in all our markets, combines with our global scale. Again, a combination that's quite unique.
Anna, can I ask you about the insurance business? I hear what you're saying about no more bolt-ons. M&A seems to be done for a while. But people are asking, with the Danish compromise coming through on the insurance side, meaning that you'll maybe have more capital to play with, you don't have to deduct the whole of those insurance businesses from CET1. Does that mean you're interested in increasing exposure in the insurance space, perhaps playing a role in buying up some of the assets that Aegon is looking to sell? What's your stance on that sector?
One of the big upsides in Santander to get to that over 20% ROTE by 28 is insurance. And it's insurance, again, 180 million customers, one of the largest banks in the world by number of customers. We have a big gap versus our best competitors in each one of our markets. And there's a very strong organic plan to increase that. So we are working on insurance. We are building annuities that will allow us also to keep on our balance sheet longer-term loans that today we have to sell because they're not profitable enough. So there's a big opportunity in insurance, which is something we'll tell you about the market at Investor Day in a few weeks. So again, that's one of the many upsides. The other one is Brazil, where the macro has been totally against us, and we still have delivered on all the targets for 25.
We've talked about the US a little bit, but let me linger there, Anna. The US banking industry facing plenty of deregulation, lots of expectations that will come through. What kind of impact do you think that will have on your business? What kind of capital relief will you be expecting to get in the US as a result of changes in regulation?
So all the numbers we have provided, 15% return on invested capital, the 18% by 28, with today's capital requirements. We're not assuming any kind of relief on that. Webster is a great bank. It has a great team. And the fact that we are keeping them and they will lead the integration together with Santander really de-risks the integration numbers. Again, it's a very efficient bank, one of the most profitable regional banks, combined with the Santander scale platforms. We should get to those numbers. And again, no assumption on any capital relief.
Okay, so no other assumptions other than what we have at the moment. Just finally, Anna, can I ask you about AI? It seems that the AI trade is creating winners and losers at an incredible pace right now. And the banking sector, just like many others, really trying to work out what this means and how quickly you need to move. What do your AI plans look like versus a year ago? Are things moving so fast that plans are unrecognizable from just near history? How quickly are you having to reinvent these AI plans?
So AI matters, but machine learning and much more traditional data-based analysis is still a huge opportunity. So, for us, the driver of Santander, why are we able to do REN? Because our multiple is better than theirs, because we have a lot of synergies, a great team, and everything I just said. But it's also very important that, the combination of those banks will benefit from these global platforms at Santander. The way we call this is one transformation. One transformation depends on us. And all the plans we have, obviously the US and UK will be the integration plans, but across the group, is leading us to do more in revenues and less in cost. AI has an impact, yes. We are still not, and many others are not able to measure that precisely, but there's a lot of automation. And again, one transformation is about aligning common business models, having common tech platforms at scale. In today's economy, scale matters, and we have the scale. And so, again, a great acquisition with Webster, a great team, track record and integration, taking the US profitability to best in class among the top banks in the United States, and the group to top among global banks in profitability, 20% by 28.
Anna, thank you very much. Thank you for your time. Good to speak to you. Anna Botín, the Executive Chairman of Santander Group. The focus on the banking sector, firmly, Guy, but elsewhere, also other earnings stories.
Stocks a little softer, down by 4% as we come through the open here in Europe. Santander, one of the drags. It is not by any means the biggest drag. The biggest drag is Novo Nordisk, which is down and down hard. Let's get the details of the single stock moves with Chloe Mele.
Good morning, Guy. Indeed, Novo Nordisk is taking quite the hit this morning after saying it expects a big drop in sales for 2026. So Novo is dealing with a lot of pricing pressure that comes from both the fact that the Trump administration is trying to cap drug prices in the US, but also there's an intensifying price war between all of the companies that operate in that obesity space. And so Novo has seen a difficult 2025, and it looks like 2026 is also shaping up to be quite difficult. Moving on to Crédit Agricole, which is also down this morning. Oh, actually, we are talking about software. So this AI disruption trade is continuing today. All of those names, SAP, the London Stock Exchange, WPP, are all seen to be as potential AI losers. And so this is something that started yesterday, this big sell-off in those names. And that is continuing today. And we are in the red across the screen there for those software stocks. Now we're talking about Crédit Agricole, which is also down this morning after missing estimates. And that is because of higher costs related to the revamp of its Italian unit, and also higher than expected loan loss provisions. And so it is taking a little bit of a hit this morning, down almost 3%. Moving on to chips, and there we are up in the green this morning. Infineon and Nordic Semiconductor are in the green this morning, Nordic Semiconductor in particular. And Infineon has said that it expects growing sales this year thanks to this AI demand. And finally, Beazley, the insurer, is also up after Zurich Insurance increased its offer for that insurance firm to £8 billion. And the two firms have agreed in principle to that deal. And so we are seeing a big boost for Beazley this morning, more than 8%.
Chloe, thank you. Chloe Mele with those stocks on the move. Coming up, price pressures and steep competition drag on Novo Nordisk's sales outlook. As we've discussed, we're tracking that stock, a really big faller in today's session. The Danish giant very much on the back foot. More on that next. This is Bloomberg.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
20 past the hour. Infineon initially opens up 4.2. We faded that move now. We're up around 1.2% on the results that we've seen this morning. I spoke to the CFO a little bit earlier on, Sven Snyder. Two parts of this business. You've got the automotive industrial side of the business. That appears to be bottoming out on the chip side. They've made an acquisition in that space as well. We'll come back to that in a minute. But the AI side of the business, the AI build out, is where the real action is for this company. But two important stories coming out of the business this morning. As I say, I caught up with the CFO. Listen to what he had to say.
If we take the company and put it's very simplistic into two parts, non-AI and AI. I would say on the non-AI side, we see, as I said, some pickup in demand. For example, in the 3 Cs, communications, compute. We see here that there is clearly the beginning of an upturn. Whereas on automotive and industrial, these segments seem to have really achieved the trough and are beyond the trough, but the demand still has not really inflected. That's where we see the uncertainties. On the AI side, it is the opposite. The AI, which for us, just to repeat it, it's not the AI chips, it's powering AI from grid to core. That's where we see tremendous growth potential. It's going up quarter after quarter. It's for us the biggest growth driver in the history of the company. And that's why for this fiscal year, we are reiterating the $1.5 billion revenue number, which is double of last year. And we're even saying that for 27, we are again growing now from 1.5 to 2.5 billion because of this huge demand. And in order to do that, we are pulling in investments in our fab in Dresden, which we are going to open in summer. So that's a very positive development across the world.
You sound fairly confident on what that story is going to deliver for the business and the investment you're making around it. Others in the industry are voicing some caution. The TSMC CEO the other day saying what he sees in terms of the data center build out, the AI story, is making him, quote, nervous. How confident are you in what you see in terms of the AI demand picture?
Yeah, so this is a question, of course, we are getting very often. So fears about an AI bubble, as some people call it. Our view is we do not see that for the next years. Why? Because on the one hand, for us, and here we always need to look at the differences because we are talking about the power side and not the chips themselves. We are working together with a very broad international customer base of leading processor makers and hyperscalers. So very strong partners making lots of money with that business, with other business, so very profitable. It's not a niche business for them. It's the core technology platform they are developing. And very important other element is there is more and more also state support coming to the AI business, given that countries have declared that they want to become self-independent and self-sufficient on that area. So that's why we believe it's a very strong development, not only for 26, not 27, but for the next years.
Sven Schneider, the CFO of Infineon, catching up with me a few minutes ago. What's interesting here is that currently they've got two businesses, the kind of the automotive side, the industrial side, and the AI data center build-out side. But they've just made this acquisition from AMS Osram in terms of the sensor business they're getting in from that. And he's pointing to robotics as being a really interesting story as well. Not for now, but for further down the road. He's talking about humanoids, he's talking about robots. So that's going to be
it's not
one
just
to
Elon
watch.
Musk, it's the Germans and Infineon as well. Doesn't see an AI bubble. I wonder if we're still working through a bubble in GLPs and obesity drugs. Novo Nordisk down 17% right now. Let's bring in Sam Fazeli, of course, our expert from Bloomberg Intelligence. How worrying is the forward guidance, Sam?
I think, as the CEO said, good morning, on the interview that you had with him this morning, he had signaled this. So when you look back at the third quarter results, when you look back at the commentary at JP Morgan, specific questions about pricing, he had signaled it. What I think the market hadn't anticipated was the depth of it.
Okay.
I think there were some single-digit numbers being banded at some point. Whether it was people not wanting to hear it or the CEO wanting to... I just also think that he might have said, right, this is my chance. Let me just kitchen sink it. Right? Yeah. Let me just get out there and put this number out there and see if we can do better this year. They have a number of things growing, the number of new products. Normally, lower price will lead to volume, but of course, once you...
That was the line the CFO was giving.
Right.
That, if the price is lower, there's a lot of demand for this product. Yeah. So maybe we just get to serve more people. I mean, is that not an argument that cuts through and we end up with a share price down 17%?
It should cut through at some point, but I think this reaction is absolutely normal. Psychologically, it's very hard to sit there and think a company that's grown, and suddenly telling you I don't know when the last time was they said they're not going to grow. So,
is there a read across? I want to ask you about GSK, but is there a read across from Novo to Lilly?
Yeah,
Lilly's out later. What is Lilly going to say?
The thing that Lilly's got going for it is that it's been more successful in terms of the data that they have and the product that they have. Okay. They've been growing through this. The thing is, you drop prices, your business today drops. You take the volume you have. The thing is, what is the number you're going to project to? And that's what you don't want to overproject, that my volume is going to completely compensate for my price drop. So,
Sam, thank you. Lots to think about this morning, certainly for anybody who is invested or was invested in Novo Nordisk. Sam Fazeli, thank you very much, Bloomberg Intelligence Senior Pharmaceuticals Analyst. And sticking with Novo, we're going to be hearing from the CEO once again. We heard from them in the last 24 hours, but the CEO, Mike Duster, will be with the team. That is at 9:20 a.m. London time, perhaps giving extra time to reflect on the way the market has interpreted what he said yesterday. Did he foresee this as being quite such a negative market event?
Can I just point out, GSK's up nearly 2% this morning. So it's not doom and gloom completely across the pharma space this morning, some of the stocks. So there's differentiation in terms of the different spaces that you're occupying. Euroclear's CEO is going to be coming up very shortly. We'll come back to yet another CEO, CFO interview. We've got so many this morning. Definitely a bottom-up kind of a market. The differentiation between the stocks is fascinating. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Happy Wednesday. This is the opening trade. We are 30 minutes into today's session. You want to lift the lid and lift the hood, really, to get the stories today. It's an earnings theme, of course. Tech selling off as a sector. You're seeing farmers under pressure as well. The banks, it's a mixed picture. And we're starting to see a little bit of upside for the energy space. Across the benchmark in Europe, you're flat. But again, the idiosyncratic stories are there. The DAX is currently down just 10 points. It's a strong session over in France. The CAC growing up 0.6%. And a similar picture for the FTSE 100, adding 62 points so far. Guy, what do you see?
Energy's definitely up. You're seeing some of the pharma space up as well. That's maybe helping out what's going on in London. Higher, 386. Lower, nearly 200. Volume is very high, unsurprisingly. We're getting a netting effect. Tom just showed you what's happening at an index level. Not much. Below the surface, a lot. And that's the narrative we're working with this morning. Energy is definitely up. Shell, Total, doing very well this morning in this market. They are heavyweights. They are having a positive effect at the upper end of the index. There is plenty at the downside, on the downside of the index. GlaxoSmithKline out with numbers this morning. This is a heavyweight in the London market as well. It is up by 1.4%. Asthma's done well. HIV therapies have done well. That is where we're seeing the lift coming through for GSK. Let's talk about where the downside is. We've already alluded to some of these stocks that are softer this morning. Novo's the big one. Sam Fazeli may be suggesting there's a kitchen sinking going on here in terms of the numbers. Maybe that's the narrative, but the market reaction is certainly big. That stock is down by nearly 17%. Santander, acquisitions plus numbers. The stock is down by 3.21%. We spoke to Anna Botin just a short time ago. We've also spoken to Sergio Motti this morning. That stock down a little bit. Wealth management maybe a little bit softer, but FX trading, debt trading, equity trading, all done well. Again, a little bit of balancing maybe coming through there. UBS only down by 1%, Anna.
Let's get an update on some other news flow this morning, Guy. President Donald Trump has reiterated the US and Iran are maintaining diplomatic talks. It comes after an early skirmish in the Arabian Sea spooked oil markets. The US Central Command says a US F-35C warplane shot down a drone that, quote, aggressively approached the USS Abraham Lincoln with, quote, unclear intent. London's Metropolitan Police has started a criminal probe into the former Labour politician Peter Mandelson. The investigation is over alleged misconduct in public office after the UK government said it had referred communications between Mandelson and Jeffrey Epstein to the authorities. The probe follows Mandelson stepping down from the House of Lords just yesterday. And almost $500 billion has been wiped off cryptocurrencies in less than a week as a sell-off led by Bitcoin accelerated. The veteran investor Michael Burry warned that Bitcoin's plunge could deepen into a, quote, death spiral, inflicting lasting damage on companies that have spent the past year stockpiling the token. Tom.
OK, let's get back to the earnings story. There's a link between Bitcoin and what's happening in terms of financial services. Euroclear reporting a full-year net profit of 1.1 billion euros. The privately owned company, which settles and clears securities trades executed on European exchanges, saw a growth in underlying business income for the year. Interest and banking income decreased due to the lower rate environment. Joining us now is Valerie Aubin, CEO of Euroclear. Valerie, good morning. Thank you for joining us. What are going to be the main drivers of growth through 2026 for Euroclear?
So good morning. Well, actually, we have really increased in all the different business lines of Euroclear. I must say that 2025 has been a record year in terms of market valuation as well. So our assets under custody have grown substantially to 43 trillion, but also the volatility has been remarkable. And we have increased the turnover of the settlement instructions by 20%. And this has been really done across all the different asset classes. So typically, many more issuances in Eurobonds, in domestic assets, but also the funds business continue to increase, primarily ETFs. Not a big surprise, I suspect, to you. But as I said, really it's across geographies, across asset classes. And we are, of course, extremely grateful to our clients for the trust they put in us.
Yeah, and certainly a part of the conversation in 2025 as well was the question mark around those Russian assets that, of course, are held by Euroclear. What, more than $230 billion US or so. How has that discussion impacted the business? Have you seen, for example, Chinese clients rethinking whether they want to be working with Euroclear?
Well, first of all, what I would like to say that indeed I'm extremely also grateful to my people because, despite all that we have had to navigate the Russian topic, especially at the end of the year, we've continued to deliver day after day, our services to our clients. To come back specifically to your question, we have seen, of course, a number of clients being a little bit anxious about, the discussion that took place at the end of the year. I think that everybody was really adamant to make sure that we would continue to respect the rule of law. And so, yes, we have had many questions from different clients, but I wouldn't say that we have seen any clients leaving Euroclear. And I think the figures are just a good illustration of my point.
I wonder what is your response, Valerie, to the developments back in December where we see Europe decide not to use the Russian assets at Euroclear as some kind of backstop to a loan to Ukraine. How pleased were you with that? And would it have been possible to come to some kind of agreement? Was there a version of using those assets that would have been OK with Euroclear, or was this always just a non-starter?
Well, different things to your question. So first of all, we were very pleased to see that Europe decided indeed to continue to fund Ukraine. I think that's something that we were also, as a European, very happy to see happening. I think that was the right decision from the European Commission and from the European member states. On the reparation loan itself, I mean, there were a number of unintended consequences, which were very much almost a blocking factors in the sense that even with a good structuring of a reparation loan, I mean, there were a number of risks that would not have been mitigated. It was extremely complex and it would have cost as well to the European member states. But despite that, it would have certainly put in question quite substantially the confidence of some investors into the European capital markets. And so we feel that the decision which has been taken has been a very wise one, while at the same time we continue to support Ukraine, of course, but at the same time we continued as well to maintain the respect of the rule of law and therefore stability of the capital markets.
Valerie, there was a lot of conversation, though, about crafting an agreement that would share those risks around Europe. Was that never going to be possible? And which are the risks that you say would not have been mitigated?
Well, there were, of course, and I must say, I commend the European Commission for their listening skills and, trying also to understand the consequences and trying to find solutions. But there were, typically, it was very innovative from a legal perspective, meaning therefore that it would have been certainly questionable, meaning that it could have been prone to, legal claims. But more importantly, I think it was very difficult to work on the perception that this was not confiscation of assets. And of course, any confiscation of assets would lead to retaliation risks directly against Euroclear, but also against European assets in Russia. So that was certainly one of the big risks that could not have been mitigated. And also the point about the perception, again, as I said, of the non-respect of the rule of law, and therefore loss of confidence in the European market. So I think that there were, because a lot of things were very technical on one side, but on the other side, it was also about, the perception that some investors, some countries would have had. And this is quite difficult to, I would say, to control perception. In addition, there were
Valerie,
still
morning,
also a number. Sorry?
Finish your thought.
No, and I was saying, and in addition, there were also quite a number of technicalities behind the loan, which had not been, finalized, and for which there were still a lot of question marks, especially in terms of liquidity risk, but also in terms of credit risk that we would have had to bear.
Okay. Final quick question. We are seeing a lot of volatility in a number of asset classes at the moment. The metals is kind of one area we're seeing it, but there's plenty of others as well. Any hiccups, any problems, any issues that we need to be aware of? Are the systems holding up? Are there any clearing problems related to any of this? And do you expect the volatility to continue?
I believe there will continue to be volatility because there are quite a lot of uncertainty in the market, not only through the geopolitical risk, but also with all the new technology and how the new technology are impacting also the economics. So I do expect to see volatility in the market. Now, our role is to make sure that whatever volatility is the market, we continue to offer stability. So, I can assure you that, when we are in this middle of this type of volatile moments, our teams are really making sure that we can support the market and bring some stability in this uncertainty.
Okay, volatility to continue, but with some stability. That is the hope. Valerie Rebounds, Euroclear CEO. Thank you. Coming up in a big week for corporate earnings then, and central banks, we're going to check in on the markets with Joseph Pinto, CEO and of MNG Asset Management. That conversation is coming up. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
I met him 1988 after my past restaurants opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, I was traveling, the business. But of course, after people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He supports me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Morning, welcome back. 44 minutes into the market session that we are seeing very much focused on single stocks. Yesterday was actually maybe more of a theme story. Once again, we're keeping a close eye. Software technology stocks this morning. As a result, we've got this new AI tool, this plug-in from Anthropic, basically sparking a $300 billion rout in software stocks, in data stocks yesterday. What does that tell us, though, about where we are in this market narrative? Does it help? Does it propel the broadening story? What happens when it comes to the AI story and how you trade it? All difficult questions for the market to answer at the moment. Joseph Pinto is the CEO of M&G Asset Management. He's here to answer all of those questions.
Good morning.
Good morning.
Small task.
No pressure. What's your read on what is happening here?
Well, there are news every day on AI.
Yeah.
And when we want to step back about it, yes, there have been massive investments into it.
Yep.
The way we look at AI at M&G, we look at three categories of players. The first ones are what we call the enablers. You have data centers, chip manufacturers, all the ones who allow us actually to use AI. The second categories are the software companies, you mentioned some of them. And the third ones are the rest of the world, the enablers, the one or the users, if you prefer. All companies tomorrow will use AI. Today, we are just at the beginning of the wave. We see a lot of noise on the first two, massive investment into it. But we are a strong believers that when you want to invest into AI, as an asset manager, you have to diversify across the three buckets. And tomorrow, there will be massive winners in terms of cost efficiency, providing better services to clients, or even improving the way companies.
Are yet? Have you got any
I don't have, not yet. It's really early days.
When am I going to get that?
It takes time for companies to implement AIs. I'm sure there are great companies out there who do that. We have some Chinese names, insurance companies there, for example, but we need to apply it as well in Europe with our own regulatory framework, as well as it's been applied in the US. We are very confident we are going to apply it more and more. Ourselves are doing it. We start seeing some early benefits. But what you want is massive benefits. That's where companies, I think, will start probably announcing more and more news on that one.
Does AI need to get cheaper, though, for that to happen, I guess, is a key question.
For wider adoption, wider dispersion, and for enterprise and for the consumer to really adopt. Are you worried, when you embed AI into M&G Asset Management, are you looking, how closely is the CFO looking at the cost of some of these solutions? And are you starting to see a return on investment?
I think there are many ways to look at it. You can look at AI as effectively as a cost savings initiative. You can look at it as a better way to service your clients, or eventually to do, I would not say cost saving, but cost avoidance. We want to grow. We have to invest in Asia, for example, in private markets. Using AI will help us to invest cheaper and have a better outcome.
With a lower headcount.
Exactly. Well, lower headcounts, or let's say less hiring, or effectively and increasing the revenues faster. We don't need necessarily to reduce the headcounts.
Just in this moment, when we're looking at the sell-off in terms of software and the connections to private credit and private equity, and what's happening in the credit space and the CDS blowout that we're starting to see for some of these corporates, I guess I'm looking for the black swan. What breaks at this point? What are you most cautious about? Is credit the place to look? Is private equity the place to look?
We invest into credit. We are a massive credit player. It all depends on the quality of what you buy, as always. Yes.
Are you putting more scrutiny on those investments?
We have invested a lot in terms of research, so we are extremely cautious where we invest into. We pay attention to leverage as well, so we don't try to leverage our funds. So whenever we actually lend money to companies, we want to make sure those companies are sound. That's the basic of private credit for M&G. And we've been doing that extremely well. If I look at our default ratio, it's been extremely low, lower than the average of the market. That's how we do it.
So, good morning to you, Joseph. So you're doing lots of due diligence, doing lots of research before investing in these private credit names. But if we don't really have clarity, if the dust hasn't settled on who the winners and losers of AI are, we're all a little in the dark on that subject, are we?
Not necessarily, because effectively AI will help improve profitability of companies in the long run. There have been other factors that drive profitabilities of company. It's up to us to analyze them, to see that coming. And when it will be priced in the market, you will see it coming way before, if I may.
When you talk to clients, what do the conversations revolve around? Are they like this? Are they like what we've just discussed here? All this anxiety around AI? Or is it very different? Is it about
it is AI. It's AI, but it's much broader than AI. It's effectively the geopolitical tensions and effectively how we've seen rebalancing from clients last year. And we are back to what I have to admit a bit boring topic, which we like. It's diversification. Clients understood the benefit of diversification. Many of our clients were overinvested in the US last year, and they've decided to reallocate a bit more to Europe or to Asia. They are still heavily invested in the US, don't get me wrong, but they were way above what the MSCI index, global index, will say. So diversification is key. You have great pockets of investment, even geographically, Asia, emerging market, Europe for sure, and that's what we've been, pushing our clients to.
How are they feeling about gold?
Gold, it's more, a safety net for them. We don't advise them on gold.
You don't? Okay.
We don't. We are more in equity, fixed income, and private markets. And effectively, many of them do hold
Why
gold.
Not gold?
Well, it's just that we don't pretend to be excellent everywhere. We are just our center of excellence, and these are the ones.
You mentioned the allocation or reallocation out of the US. Where are we in that story? How much of a sell America trade is there? How much of a buy Europe trade is there?
Well, I don't want to give I may share some numbers from, let's say, a pool of clients. It may not be representative of the whole world. We've seen clients who were invested into, let's say, US at the level of 70% of their portfolio, 70, even 75, while the global index should say around 65 to 67. So just by rebalancing from 70% to 67, it is a massive rebalancing. We should never forget US is the biggest investable universe, on Earth. That's exactly what we are talking about. So we still see that trend, and we still see the demand in January from clients on that diversification. It is taking time, especially on private markets, as these are illiquid private asset classes. So it takes time for clients to decide how to reallocate money eventually in the medium or longer term to, let's say, broader market, not just the US.
And has the news around Kevin Walsh changed that US diversification conversation at all?
Not yet. It's still early days. We still want to understand how he will play versus Trump's agenda. Will he try to shrink the balance sheet of the Fed? Will he try to, try other, let's say, means against what Trump wants? I think more to come ahead of us. But it did give some confidence to the market.
US equity markets and the Fed have had a codependent relationship. Some people argue that the Fed's job basically has been to support the S&P. If he shrinks the balance sheet, what is that good and what is that bad for? Can he shrink the balance sheet without causing problems?
Well, first and foremost, looking at the balance sheet of the US Treasury is, so big compared to the banks. You look at the banks as intermediaries. They are not big enough, actually, to support all these $30 trillion effectively to hold those assets before selling them to investors. So first, there is a problem to solve here. That's why there will be some pressure on trying to reduce the balance sheet. There are other reasons why. And for sure, the government of the US will try to increase the balance sheet for other reasons. So we need to figure out who is going to win between the two. And yes, there will be it will be impacts on the currency, impact on the economy, and various impacts as well on inflation as well. So we have to watch out.
How do I invest around that?
Oh, you want to make money out of it?
Yeah. Tell me how I make money on that trade.
We are a long-term investor. We don't try to be too tactical.
But this is a long-term story.
Well, let's wait for him to be, at the job. Let's see how his first move will be. and don't try to, overplay. It's a bit too early for that.
Okay. When does the US debt story come home to roost?
It's been in the press all the time, huh?
Yeah.
So, and then we're going to be talking about it more and more. It's going to be a topic for 2026 for us.
A topic, but not necessarily a crisis.
It will be, moving from a topic to a crisis, we see a number of steps in between. Okay. So we have time to come back if you invite me again to talk about it.
I think you'll get that invite, yeah. Joseph, thank you very much.
It's been a pleasure.
Joseph Pinto, M&G Asset Management CEO. Let's have a look at what else is on the agenda today. 10 a.m. UK time, we're going to get Euro area January inflation data. We're going to be hearing from Lisa Cook of the Fed, talking of the Fed, speaking on monetary policy in Miami. And then on the earnings front, we're going to get more analysis shortly on this. But Alphabet is the big one. Qualcomm, of course, in the chip space. Uber and Eli Lilly on the back of the sell-off that we're seeing in Novo Nordisk. Eli will be pretty fascinating as well.
Yeah, let's focus in on Alphabet. We'll get those earnings. And what will that tell us about the business, the broader tech sector, the AI theme? Matt Bloxham, I'm pleased to say, is with us to help us get ready for this earnings story from Bloomberg Intelligence. Alphabet earnings then, Matt, what is going to be the focus for you? Because there's sort of a laundry list of things to watch.
Yeah, I mean, it's such a big company. Two different areas, revenue and CapEx. On the revenue side, obviously looking at the core advertising business, which makes up still the vast bulk of their revenue and profit, expected to grow around 13%, being surprisingly resilient to the AI disruption to kind of search advertising, partly because Gemini seems to have taken a recent lead over OpenAI in terms of kind of popularity. The other part of the revenue story is cloud, relatively small part of their business. They're playing catch up with bigger rivals. And the market's looking for kind of 30-35% revenue growth there. I'd say the story on AI and cloud revenue across the tech space this quarter has been pretty mixed. Hard to gauge how people are going to react to those numbers.
Thinking about SAP and others.
Yeah. I think on the CapEx side, obviously we heard Meta almost plan to double their CapEx this year. So we'll be seeing whether there's further upside to the consensus. So consensus for 2025 has CapEx of around $90 billion. Next year, they're looking for it to go to about $120 billion. So quite a big increase, but I guess there's probably wouldn't be that surprising if it ends up being higher than $120 billion.
CapEx takes me to Qualcomm. What's Qualcomm going to do?
I mean, obviously, there's a kind of huge amount of pressure in that kind of chip space about kind of supply, maybe kind of softening demand at the kind of lower end of the kind of smartphone market. So kind of really looking for kind of strength in the kind of more premium end and how they kind of manage some of those kind of supply constraints and pressure on memory costs. I think also, obviously, there's the whole kind of momentum behind the kind of on-device AI, which they were kind of an early leader on. And so to the extent to which that's kind of helping to support their overall outlook.
Matt, great stuff. Looking forward to all these numbers and the commentary around them. Matt Bloxham joining us from Bloomberg Intelligence. So what have we learnt this morning?
We have we drawn I wouldn't go as far as to say a line in the sand, but things are not as dramatic as they were yesterday in terms of selling the software story or selling the legal services story. But they're still there, still negative on many of those. I'm looking at, and the advertising story is still negative, down 3 or 4% on WPP and publicity.
A little caution around the consumer, I would say, from some of the conversations that we've had this morning, which I think is interesting. And that takes you to that advertising narrative, maybe, around what we're seeing. So maybe that's...
From the banks to the drink makers, Carlsberg, in terms of the consumer not looking robust. They're doing their best on efficiencies to try and mitigate some of that pressure. The consumer is clearly fragile at this point.
You do not want to upset this. You do not want to upset this market at the moment because you're getting some big reactions. What we're seeing in Nova this morning is dramatic, and some of the banking names also getting hit really hard.
Yes, exactly. Especially as Sam Fazeli was telling us that what the CEO of Novo said, it wasn't new. It was just the scale of it that's sort of finally dawning on the market. But that certainly is one of the big movers of the morning. Just want to point out that we have a brand new show launching. You can catch Bloomberg Deals. That's premiering 5 p.m. London time tonight. Danny Berger, I think, in the hot seat for that one. That is it for the opening trade. We will leave you with the pulse. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything. Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich, and these are your top stories. UBS announces a $3 billion buyback after better than expected fourth quarter profit, but its key wealth management unit disappoints. Novo Nordisk slumps after warning that sales this year will fall sharply. We'll be speaking with the chief executive this hour. Plus, shares in software companies plummet on concerns that a new AI tool from Anthropic will make them obsolete. So there is really quite a lot going on in the markets. We started the week with a metals, of course, runoff. Now, U.S. futures seem to be steady right now after this $285 billion global sell-off in stocks sensitive to artificial intelligence disruption. But it also meant that a lot of the private equity, I was looking at KKR and some of the others, Ares, very, very present in credit, also got sold off. A rotation into small caps and economically leveraged shares probably seems to be gathering momentum as there are renewed fears around this AI-driven disruption that continues rippling through markets. We also look at crude Brent 67.18. This is after there was a drone that was taken down by the U.S. Navy. Let's take a look at the European markets map now. Some of the individual stocks that we're looking at. I know I'm looking forward to speaking to the Novo Nordisk CEO, a good conversation on pricing, but also GLP-1s. And again, if you look at oil, it does seem to be advancing in WTI, but Brent pretty much stable on geopolitical tensions. Now, UBS has announced a $3 billion buyback alongside what analysts are describing as a mixed set of results. Now, fourth quarter net income of $1.2 billion beat expectations, but inflows at its key wealth management unit slumped. Well, I've been speaking with the chief executive, Sergio Armati.
The market is still, broadly constructive. If you look at the economic outlook, if you look at the investments that are going through in the economies, particularly in the U.S., in the areas of technology, infrastructure, energy, and it's going to be quite constructive for the economy, and therefore we see markets, broadly speaking, holding up well. But the level of asset prices is pretty high. It's very difficult to find areas of undervaluations, and the geopolitical and macroeconomic uncertainties are creating the volatility we saw so far in the last 4 weeks, I mean, we were not short of news and surprises. So I would say that it's a continuation of what we saw in the last few years. And this is something that I'm pretty convinced we're going to have to live with also in the next decade or so.
To this kind of extent, we're Wednesday. I think Monday we had a big metals sell-off. Yesterday we had a big software sell-off. Does it readjust, or is it just volatility name of the game?
It's a readjustment, but look, when you look at, for example, in the tech sector, I think it's quite clear there are pockets of excess in terms of valuations. I personally, I believe that the impact of technology and AI to our society, to our business, is going to be very profound. And I wouldn't say that the market is overvaluating that. But from a financial standpoint of view, I do believe that there is some reconciliations to be done, at very least, in terms of timing. How long it takes to realize economic value out of all this innovation. And of course, you're going to have winners and losers out of this process.
When you talk about a profound transformation, is that also for the banking sector, and how quickly could that come with AI or some of the software models? Like, how do you look at it?
I think yes. I don't think there is any industry that won't be touched by AI, directly or indirectly. Our business is a very process. We manage a lot of data. We have a lot of processes, and we will benefit not only in terms of efficiency but also effectiveness. So the accuracy of what we do, I'm pretty convinced, will increase. Now, it's going to take a few years to play out. So there is always an exaggeration on how fast people believe things are going to happen versus an underestimation on how deep it will change. So, for example, we see in the next 3 to 5 years clearly a significant impact on our operating model and our efficiencies.
Mm-hmm. When you look at geopolitics, I mean, there's everything actually. There's all of these dislocations or changing. Is it changing client behavior in certain regions?
Well, there is definitely, but this is something that has been going on for the last 2 or 3 years now. I would say that diversification from a geopolitical standpoint of view, not only in our business, not only on how people invest, but also where they book their assets. I mean, this is one of the reasons why, as the only truly global wealth manager, we are benefiting out of these trends, because people are moving geographically, are much more fungible, and they want also to create different, have the ability to have booking centers that are giving diversification while keeping a coherent and consistent service level. So, but this is one of the reasons you saw the big rally on commodities in precious metals. You saw emerging markets outperforming lately, because there is a desire to diversify.
Are your clients moving away from U.S. assets?
I wouldn't say that people are moving away, but I would say income or probably new income coming from dividend or interest is probably deployed in a different way. So I wouldn't talk about people moving away or dropping or selling assets, but it's rather using excess liquidity to diversify.
What's your take on, we have a new Fed chair nomination. Does that take away some of the volatility?
I think that's appointing a person that had already an experience at the Fed, is well recognized in the market, and has a very solid credential, has brought back the discussions into the right in the right terms. I think that the appointment, in my point of view, reflects the administration a desire to make clear that the stability of the system and stability of the dollar as a reserve currency should be guaranteed also going forward.
So you're stepping down in 2027. Who are you looking? What kind of replacement are you looking for?
Well, I mean, first of all, I think that people keep confusing when we say that I will stay at least until the early part of 27. Doesn't mean I'm going to step down. Having said that, our succession process is something that we have been working on from day one when I rejoined. is something that I care a lot about in making sure that we have a good set of internal candidates that can be presented to the board, and then I'm sure the board will also evaluate external people and come to the right decision when it will happen.
So it's not a done deal? You could stay on as CEO beyond April 27?
Right now, we are all focused. Myself, my team, and the board. We are very focused on executing and finalizing the integration. Now, we are making very good progress. We are almost there, but we haven't finished. So we cannot be distracted, and we're not going to let this discussion be led by external factors, but we stay focused in control.
I know, but you have quite a personality in Switzerland, so people are, of course there's speculation what you do next. Your own chairman said you'd be a great chairman after him.
Well, Colum is always very generous, but I think that right now I'm very focused on doing my job, and then I will see what's next.
Talk to me about capital requirements. Is there any progress with authorities on the way forward?
No, there is no news other than what we saw in the last few weeks before year-end, and also coming into the new year. There is more debate, of course, in Switzerland. The parliament and the political landscape is mobilizing and trying to understand what's going on. I think we welcome that interest, and it's very important that people fully understand what it means. And so we are confident that the process will result in a reasonable outcome.
UBS was looking potentially at moving headquarters to the US. Is that still on the table? Is it something that's being talked about in corridors?
We always say that our preferred options by far is to stay and operate out of Switzerland, and there is a lot of speculations. We keep hearing that kind of stories. We keep hearing statements like we are threatening to leave the country, which is absolutely inappropriate and not true. But we're going to stay focused on what we want. We want the best for UBS, for our people, our 30,000 plus people in Switzerland, for the Swiss economy, and we'll not going to let us being distracted by these noises.
Well, that was Sergio Armotti, the chief executive of UBS, speaking with me a little bit earlier. Now, U.S. futures pretty steady today. We did see a bit of a sell-off triggered by new AI automation tool from Anthropic, sparking fears for the software sector. Markets in Europe following Asia's lead and looking past some of these concerns. But let's take the broader picture. Let's get more on this with Wolf von Rotberg, equity strategist at J. Safra Saracen. Wolf, thank you so much for joining us. What a market, what a week we've had. I mean, it's gone up, it's down, it's metals, now it's AI software. What do you think is fundamentally priced into these markets?
Well, I mean, in general, I guess market pricing is fairly rich. So we have started a year at valuations in the US where we were at the beginning of last year. They've touched kind of a glass ceiling at around 22.5 times 12-month forward earnings, which makes it just very difficult to push higher unless you see earnings coming through, earnings being upgraded. And I think that's the reason why we see these bouts of volatility coming through, markets selling off in different segments on pretty kind of, let's say, smaller bits of news. While at the same time, the underlying macro backdrop remains in place, is fairly strong. But
when you see some of these corrections, is it correction? Because then you often have a bounce back straight afterwards. So are they warranted, or again, is it a little bit of underlying panic?
Well, I think there's always, let's say both elements matter. So there's definitely some element of panic in a way, like what we've seen over the past, let's say, 48 hours reminds me very much of the DeepSeek moment at the beginning of 2025. There's a bit of news coming through, and kind of the market is indiscriminately selling off a specific sector because it's pricing basically this bit of news into pretty much every company in the sector. But then, there is probably some reassessment over the coming days in which the market will say, look, which companies are actually being affected by what we've just heard. So both of this, it may not just go back to the same levels which we've seen before, but definitely some of the, let's say, names and individual stocks which have sold off will likely see a bit of a recovery here.
So what do you worry about? I know we had a good conversation with Sergio Armotti, and I asked him a little bit about the volatility. He says, look, we'll probably have to get used to it, but at the same time, there's a kind of readjustment because of the timeline in which some of these technologies, for example, take hold. What kind of readjustment do you see?
Yeah, definitely. I mean, the market is starting to price, let's say, implementation, adoption, implementation, and is trying to find where will AI be the most disruptive? And will it will it happen within companies which are being traded in specific sectors, or will it happen outside these companies? And are these companies being disrupted away, let's say? Yeah, and I think this is kind of what will concern us over the coming year or so.
But does it warrant like a 10% sell-off in software? Right, because Anthropic has a model that says, look, this is going to be a concern in the future. Are we going to have every couple of months
Probably
kind of like
not.
Big drop?
Probably not across the sector. Because if I look at the companies, obviously there are some companies in the software sector where I'd say, like, look, these are purely services providers. They don't have any proprietary data. They're not like deeply ingrained into the, let's say, workings of a company, something like that. Yeah. Their moat is very shallow. Yeah. So these companies will probably be the most affected by AI. They may be disrupted away in a sense. Others, though, which have also sold off over the past few days, which are owning proprietary data, which are kind of very unlikely to just disappear because AI is coming in. They may even benefit from it, using it. They should not have sold off to this extent. Yeah? So the 10% basically across the sector is probably unjustified. For some companies, though, it still is.
When you look at, for example, some of the healthcare, so we're going to speak to the Novo Nordisk chief executive. I mean, they got slammed because there's concerns about pricing in the US, GLP-1, and they actually, guided to the lower side. Are we again? Is this a sector-wide concern? Do you look at sectors, or do you really look at individual companies for underlying earning strength?
Yeah, I mean, Novo Nordisk is definitely a special case because it's very specific for the company, and what Novo Nordisk is losing, other healthcare names are gaining, let's say, because they're losing market share. The product is not as much of a monopolistic product as it used to be. For the sector in general, we are quite positive, but from a structural point of view, we were very positive from a technical point of view mid last year because we said like the political risks in the US won't materialize to the extent which was put forward by the president. Hasn't happened. Sector re-rated, still trading a bit cheap on relative valuations, but longer term structurally, I think apart from all the demographic arguments and what have you, this is a sector which will be heavily disrupted by AI, but in a positive sense that a lot of companies will manage to apply it. Yeah? And this is happening from drug development to diagnostics to medtech appliances and so forth. So there's a lot of stuff, I think, across the value chain in healthcare where AI will help the companies in the sector, but also everyone else outside the sector, basically all of us more or less, making healthcare more efficient and making it better.
So how do you pick the quality, basically not overvalued companies out there?
You would probably go for the ones which which have a, let's say, a strong pipeline on the pharma side, but then the ones also which have a product which is unrelated to AI, let's say, but is still cannot, which, like, let's say they own the space, they have a moat, they have a product, they have some sort of monopoly and can attach AI to it to make it better. That's, I think, the part of the sector which will benefit the most.
And do you see it now, or do you need to wait? Again, the models are also constantly changing. So do you need to wait 12 months? Is there a worry that some companies overspend now and then actually there's a much better model that's game-changing in a year or two?
On the AI side in general, you mean?
Well, or the AI that some of the companies that you like are using.
Yeah,
it's always double-edged.
Yeah. No, I think, the healthcare sector has done very well in the second half of 2025. It's re-rated quite sharply. Again, there's been a lot of optimism. I think the consensus has really moved towards a very preferential view on the sector. As such, I think for us, it's a structural call. I think the long-term let's say, components for healthcare to work in a diversified portfolio are very much in place. This has to do with AI adoption. But it also has to do with record high margins. This has to do with profitability and so forth. So it's a very high quality sector, which if it basically manages to attach AI to its product, it will benefit. But this is more like a longer term structural call from where we are right now.
Wolf, thank you so much for joining us. Wolf von Hodberg, equity strategist at J. Safra Sarasin, joining us today from the Zurich office. Now, coming up, shares in Novo Nordisk slump after it warned that obesity drug price wars will have a big impact on sales this year. We'll be speaking to the chief executive next, and this is Bloomberg.
up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Well, the conversations that matter, the insights you need. This is the Pulse, and I'm Francine Lacqua here in Zurich. Now, shares of Novo Nordisk plummeting this morning after it warned that sales will fall as much as 13% this year because of intensifying price wars in the obesity drug market. Huge demand for its blockbuster weight loss drugs Ozempic and Wegovy saw Novo become Europe's most valuable company. But now it faces multiple headwinds, including growing competition and the expiry of Ozempic's patent. Well, I'm delighted to be joined by the Chief Executive, Mike Doustar. Mike, thank you for joining us. If you look at the share price, it really is getting slammed. What's your message to investors today?
I would say that for the last 6-7 months, we have been speaking to the investors, trying to explain that in order to expand market, and we need to expand market in our business, we need to reduce the prices. So we increase affordability. Of course, it was well publicized that in the US, the prices from a very high level were coming down within the GLP-1. Our company is quite concentrated compared to many other pharma companies within the GLP-1 segment. So when you, of course, get a pricing headwind on your GLP-1 products, Wegovy and Ozempic, you feel the pressure of that more. But also on the back of course, being a focused company and being the best in what we do, we feel very confident that the volume buildup will happen script by script, and we have seen the early signals of that with our Wegovy pill launch. So I'm very hopeful that while we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
So you're basically saying, look, trust us until this happens, right? Until the volume uptake makes up for the price decreases. When? Is it this year? Give us a timeline of when you think you'll see that turn.
I think what most people would recognize with diabetes and obesity, this is a condition that unfortunately affects billions of people. Close to 2 billion people have diabetes, obesity, and overweight. Everyone also knows that together with our competitor, we are only treating some 20 million of these billions of people. Everyone notices that GLP-1 market as a segment is growing, and we have been able to actually show that we can take part of that growth. This year we'll be growing once again, and we'll be producing more than ever before, treating more patients than ever before. But of course, when your base gets repriced in the United States and US is some 55% of our business, you will basically see the headwind and the results of that within 2026. I am much, much more hopeful as we pass through this period that the volumes will compensate for the price decrease that you've seen.
I mean, given where we are now, can you rule out another round of layoffs?
We don't have any plans of mass layoffs, but I also tell our own employees as well as the external world that we are readjusting our business as we go forward. And as a result of that, in pockets of the company, we will be hiring more. I think right now, currently, we have some 400 open positions. But there are other parts of the business where we are reducing our capabilities. So that's business as usual. What you saw last year with 9,000 employee cuts is not in the plan for 2026. And as long as we grow and make more patients into our products, come into our products, then of course it's more of an upside than a downside when it comes to headcounts.
And this would be for the whole year, so you're basically ruling that off, even if the uptake in volumes could take longer than expected.
I am right now looking at the first early signs of volume uptake. That's our Wegovy pill that after 4 weeks has been given to 170,000 individuals. If you put that in the context, that's 2 times more than tirzepatide did in their first month of launch, or 15 times more than when we brought Wegovy injectable. When I see volume uptakes like that, I get encouraged about the longer-term future.
Do you worry that the oral Wegovy could cannibalize the Wegovy injection?
The early signals are that some 88% of the patients that are coming into Wegovy pill are buying the lowest dose, the 1.5 milligram of the product. That's a very strong signal to us that these are new patients and not those who are coming from the injectable ones. There could be some small cannibalizations, people who need, to take a pill instead of an injection. But I would say a lot of people have been waiting to use GLP-1s, but injectable was not the path they wanted to take. Wegovy pill gives them the same efficacy as the injectable Wegovy at 16.6% weight loss. So we're seeing a very good uptake of these new people coming in.
Do you feel confident that Novo can compete in the long term, in the long run, without a monthly obesity shot?
Absolutely. First of all, we do have monthly products in our pipeline, and we will share and show that in due course. But more importantly, I feel that Novo Nordisk, by being a focused company, probably has the best pipeline right now in the industry. And we also have manufacturing skills second to none. 2 things that many of the new players coming into this market sometimes underestimate. And then we have the commercial capabilities, and we are very quickly learning how to mass product these GLP-1s via our partners. So I feel very confident for the building blocks that Novo Nordisk is building the future.
Mike, I know there's a lot of hope for CagriSema. How confident are you that you'll get the right trials? I think we're expecting something quite soon on that. And how easy would it be then, if you do get the right approvals and the trials go well, to scale it up?
So we have filed for approval, and we hope to get that approval later on this year. That would make the CagriSema launch early next year, and perhaps the first amylin molecule, combined molecule, that will hit the market. So once again, testament to Novo Nordisk innovation powerhouse that it is within this area. It's a fantastic drug that I'm looking very much forward to, with the highest efficacy than any other product today marketed. So that's, of course, incredibly exciting. And more to that, we will try to make that the best launch again, only surpassing what we've done now with the Wegovy pill.
Okay, thank you so much for your time today. I hope to do it in person very soon. Mike Doustdar, the Chief Executive of Novo Nordisk. Now, coming up, analysts warn of a software apocalypse as Anthropic releases a new AI tool that threatens the sector. We'll have plenty more on that next, and this is Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulator.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Zurich, and these are your top stories. UBS announces a $3 billion buyback after better-than-expected fourth-quarter profit, but its key wealth management unit disappoints. Novo Nordisk slumps after warning that sales this year will fall sharply. The chief executive tells us he expects volumes to make up for falling prices. Plus, shares in software companies plummet on concerns that a new AI tool from Anthropic will make them obsolete. Now, the EU plans to offer the U.S. a partnership to develop a strategic roadmap on critical minerals aimed at reducing Chinese dependency. Proposals will explore joint projects, price support mechanisms, and build secure supply chains whilst respecting territorial integrity. Well, joining us now is Yu Zhi, a senior research fellow on the China and Asia Pacific program at Chatham House. Zhi, thank you so much for joining us. When you look at actually what was announced yesterday, I mean, how does this change the trade framework between Europe, China, and the U.S.? Can every party find what they need in it?
Thank you, Francine, for having me. Not necessarily. I think we're now in this very sticky stage that, on the one hand, Donald Trump would like to meet Xi Jinping and have an in-depth discussion on a range of topics in April, and of course, including the critical mineral and export control. And whereas, on the other hand, I think there has been increasing trade frictions between China and European Union. So I think three parties have their different wants. But overall, I think what China is intend to do is to use this export control towards rare earth as the way to spook both United States and Europe, and particularly for Europe, because European Union continue to have this so-called China containment strategy. So I think that's where we are.
Where do you think actually the relationship between the U.S. and China is? Because we did see an escalation. Actually, China, I think, one of the only countries to retaliate with some of these critical minerals last year. But it does feel like they're on a better footing. I mean, two presidents will talk. It seems like the relationship is much better than it was 8 months ago.
Well, I think let me use the term of the so-called low intensity engagement, but also low intensity competition for now, I think up until April, because President Trump wants to make sure that his trip towards China will be a success. So he will try to do whatever he can so far to quiet the so-called China hawk within the administration for now. But however, what might happen after late April, and we don't know at this stage. I think overall what Trump also realizes is because of the various export control that China imposing upon US companies, and also because of China's technology edge, And we're not in that mutually destructive phase of both powers. So no one is a winner in here.
I mean, it's true that, these rare earths are not that rare. It's just that China, as you say, is exceptionally good at processing them. What role does the EU have in this?
Well, I think for EU is that if they would like to increasing its industrial capacity, whether it's on processing or whether it's on looking for the alternative sources, and they will have to speed up the entire process. And however, as I said, because of processing of rare earth would have to lead into a worsening of environmental standard. Now, whether European Union will be able to, on the one hand, advocating for the extremely high environmental standard for the ordinary people's living, whereas on the other hand, and also pursue on this critical mineral processing. And I think that's the balance you have to join it out. But I think overall for now, European Union tried very hard and very tough towards China, but it seems to be nowhere in that very kind of stalemate between Beijing and Brussels and various capitals of European countries.
Yeah, and I remember, I guess it's just quite difficult because Europe is stuck in this place of trying to have a partnership with the US so it doesn't invade Greenland. I guess that's part of the equation, but they also need a lot of the critical minerals from themselves. So how do they think about that going forward?
Well, they could think about this forward in a much longer term. And however, I think they probably would need to get their act together to act quickly if they would like to sustain the level of supply in terms of critical minerals they would need it for its own industry. I think for now, one is the temporary issue they will have to deal with in terms of the shortage of supply. But whereas on the other hand, it's also about longer term capabilities and whether they'll be able to build up within themselves.
How do you see actually, China's tech companies? How advanced are? I know at the moment a lot of them are still reliant on some of the NVIDIA chips, but at some point, is China tech going to be much better than the US?
I think for now, what we have is certain pockets of industries that China is already jump ahead of the US companies. And whereas I think on the finest and the chips that China is still somehow lag behind 3 to 5 years. But given the amount of talents they have and given the cheaper energy price they have, and also given the amount of data that is available within the market, that Beijing is able to catch up pretty quickly. So yes, we do seem to have this very magnificent US tech companies. But I think on the other hand, those Chinese companies and names a little bit unknown should not really be ignored. And I think on top of that, the Chinese government also offer a very clear signal, which will be indicated in the upcoming 5 years plan published in March next month. And that's to say that featuring on the so-called future industries, including AI, including low-level sky economies and so on and so forth, all those so-called future industries, to be part of the way and drive the Chinese economy. So I think that's overall, the jury's out on US and China in terms of tech competition. And there's no clear winner so far, but on certain pockets, China has already won the tech race.
I was going to say, it was only maybe a year ago in like 3 weeks that DeepSeek really took the market by surprise. Are there any pockets of Chinese tech that we should be really paying attention to?
Well, I think as I said, AI, but also the quantum computing on certain companies, and also given the amount of young people that is available to producing those technologies, we should be really look into. So I think quantum computing would be another sector or should pay careful attention to.
Brilliant. Thank you so much, Yuji. They're a senior research fellow at Chatham House. Now, a new AI automation tool from Anthropic has sparked a $285 billion sell-off in stocks. Traders dumped software shares on fears about the destruction that AI could cause. Now, for more on all of this, we're joined by Matt Bloxham from Bloomberg Intelligence. Matt, look, behind the sell-off is basically this idea that Anthropic released a model that can do a lot of the stuff cheaper, but the sell-off was so massive. Even a lot of the private equity firms were not discriminated against. So, what do you think the underlying cause of the sell-off is?
Yeah, I think it reflects this kind of broader uncertainty, really, about how AI is going to affect different parts of the economy. And whereas, last year was perhaps, just kind of maybe investing a little bit blindly, perhaps, in the whole space, we're now seeing a greater discernment amongst investors about trying to pass the winners from the losers. And there seems to be a disproportionate focus at the moment on identifying who the winners are. And you could perhaps argue that it's becoming a little bit kind of broad brush. And, it's kind of sell first, ask questions later. So it does seem like a pretty aggressive sell-off. And I think if you look at some of the names that were really affected yesterday, companies like RELX, that's a kind of big established provider of legal services, and the specific incremental product from Anthropic relates specifically to kind of legal profession. But obviously saw a big sell-off in things like the advertising agencies too, because they're kind of more broadly exposed to the kind of AI threat, even though Publicis, which reported yesterday, delivered better than expected Q4 results and delivered a pretty optimistic and robust outlook for 2026. So, it's a risk-off trade, I think, with anything that's remotely related with AI software.
Fair enough. Meanwhile, NVIDIA is nearing a deal to pour more money into OpenAI. So what's the latest on that?
Yeah, so obviously NVIDIA originally put some money in to OpenAI, I think in 2024, and then not so long ago they announced with great fanfare this big $100 billion investment plan, which was one of the big triggers of this whole kind of circularity theme that we got caught up in. But since then, there hasn't really been a huge amount of progress made on signing that deal. And so I think there was some speculation, perhaps on both sides. People were kind of rethinking the wisdom of that plan. So I think to some degree, this $20 billion planned investment is an effort to, kind of reassure people that, the broad ambition of that partnership is still intact. Maybe the $100 billion might be evolving a bit, but that there is a commitment there between both sides. But even since they announced that deal, NVIDIA's been investing in multiple large language platforms, and OpenAI has been working with a range of GPU providers. So both of them are kind of diversifying their kind of supply chains.
Matt, AMD given an underwhelming sales forecast. So what was missing for investors?
Yeah, I think what was missing there was really the kind of the scale of the upgraded outlook. I think that the kind of quarterly results in terms of revenues were better than expected. The kind of outlook for the next quarter was a bit better than expected, but not quite enough. But people were looking for a beat and raise anyway, and I think they were looking for something a bit more. Obviously, the kind of angle here with AMD is that whilst they've been late on the AI processor, AI accelerator trade, they are catching up, and I think people are looking for that momentum to accelerate a bit quicker than it has done. But the company remains confident that by 2027 they can generate tens of billions of dollars from AI accelerators. For the year just finished, it was about $6 or $7 billion. So that they still see a significant increase in their opportunity in that market.
Matt, thanks so much. Matt Bloxham, technology analyst at Bloomberg Intelligence. Now, Bloomberg LP, the parent company of Bloomberg News, competes with London Stock Exchange Group and Thomson Reuters in providing financial data and news. Bloomberg Law also sells legal research tools and software. Now, the German chip maker Infineon says it will ramp up spending on its technology for data centers, aiming to grow revenue as demand for artificial intelligence solutions picks up speed. Sven Schneider, the chief financial officer of Infineon, has been speaking with Bloomberg's Guy Johnson.
We came in slightly out of expectations, top line, bottom line. Now, for the full year, yes, as of today, we reiterate our full year guidance we have given in November, being moderate growth and also on the profitability level, high teens and low 40s. Given that the demand situation in certain end markets is improving, but given that there are still huge uncertainties, we believe it's the right balance and the right guidance as of today. Of course, you're asking, is there some conservatism in it? I would point out at the underlying automotive numbers we are taking for our guidance. They are a little bit below street expectations.
Okay, let's talk about where that uncertainty comes in. You talk about uncertainty. You talk about AI demand being very dynamic. Is that where the uncertainty is? Dynamic would seem to imply it's not very predictable.
Yeah, so if we take the company and put it's very simplistic into two parts, non-AI and AI. I would say on the non-AI side, we see, as I said, some pickup in demand. For example, in the 3 Cs, communications, compute. We see here that there is clearly the beginning of an upturn, whereas on automotive and industrial, these segments seem to have really achieved the trough and are beyond the trough, but the demand still has not really inflected. That's where we see the uncertainties. On the AI side, it is the opposite. The AI, which for us, just to repeat it, it's not the AI chips, it's powering AI from grid to core. That's where we see tremendous growth potential. It's going up quarter after quarter. It's for us the biggest growth driver in the history of the company. And that's why for this fiscal year, we are reiterating the 1.5 billion revenue number, which is double of last year. And we're even saying that for 27, we are again growing now from 1.5 to 2.5 billion because of this huge demand. And in order to do that, we are pulling in investments in our fab in Dresden, which we are going to open in summer. So that's a very positive development across the world.
You sound fairly confident on what that story is going to deliver for the business and the investment you're making around it. Others in the industry are voicing some caution. The TSMC CEO the other day saying what he sees in terms of the data center build-out, the AI story, is making him, quote, nervous. How confident are you in what you see in terms of the AI demand picture?
Yeah, so this is a question, of course, we are getting very often. So fears about an AI bubble, as some people call it. Our view is we do not see that for the next years. Why? Because on the one hand, for us, and here we always need to look at the differences because we are talking about the power side and not the chips themselves. We are working together with a very broad international customer base of leading processor makers and hyperscalers. So very strong partners making lots of money with that business, with other business, so very profitable. It's not a niche business for them. It's the core technology platform they are developing. And very important other element is there is more and more also state support coming to the AI business, given that countries have declared that they want to become self-independent and self-sufficient on that area. So that's why we believe it's a very strong development, not only for 26, not 27, but for the next years.
Guy Johnson there speaking with Sven Schneider, the Chief Financial Officer at Infineon. Coming up, Bitcoin gives up all of the gains made since President Trump's election win. We'll explore why next. And this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in Zurich. Now, almost $500 billion has been wiped off cryptocurrencies in less than a week as a sell-off led by Bitcoin actually accelerated. The largest cryptocurrency fell to its lowest level since President Trump won re-election. Let's get more from Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, as always, good to speak to you. So Michael Burry has warned of a death spiral. Is he right?
Morning, Francine. Great to be talking to you. I think I'm certainly coming down on the side of Michael Burry. I do think that, the 40% decline that we have seen from October thereabouts suggests that, look, I mean, what exactly is Bitcoin? Is it a store of wealth? Is it digital gold? Is it an inflation hedge? It has failed all three of those tests in that 40% decline. So those are legitimate questions to ask. And the problem with Bitcoin falling to 75K now and still struggling to find support, Francine, is that no one can point to an intrinsic value for Bitcoin and say this is the level at which it gets below cost, below production costs or whatever, and nobody can point that out. And therefore, it begs the question that what is its value? Where is it deriving its value from? Of course, the blockchain technology is very useful and has value, but that doesn't mean that Bitcoin has got the fundamental value riding on it. So we'll see how the speculative froth winds down.
Meanwhile, gold's back above $5,000 is the only way up now.
Well, it does look like in the short term, Francine, I think that, it can claw its way back to $6,000 an ounce, because if you look at what happened in October, we saw a flash crash where it dropped about 10% in the space of a week. And then we saw it go all the way back to 5,600 an ounce. So it's pulled back now, but it's coming back up again after the 2-day fall. So let's see how far it goes. But I think that, given the momentum it has had and the short-term enthusiasm for retail investors to buy the dip, I think they may chase it all the way higher to $6,000 an ounce. But what happens thereafter is the question. The chart that you're showing there shows, what is the future price of gold based on inflation inputs in the US, and its current price of $5,000, around $5,000 an ounce, suggests that it's already priced in $2033, $34 even. So it is already trading as though we are in 2033 and 2034, and that exuberance is like getting ahead of the market getting ahead of itself. I don't think it's sustainable beyond the short term. So the short answer to your question is we may get to $6,000 an ounce, but after that it's going to tread water for a long time.
Ven, thank you so much, as always. Ven Ram there, Bloomberg MLive cross-asset strategist. Now, the chief executive of Galaxy Digital says he believes the crypto market may be nearing a bottom. Speaking exclusively with Bloomberg, Mike Novogratz also told us what he thinks could turn sentiment around.
It's immature. We had a huge run up from where people bought it at 50, 100, 1,000, 2,000, 10,000, all the way to 100, 130,000. And I think what ended up happening was people finally started taking profits. After we crossed 100, it felt like the community had won. And it was that sigh of relief, like we did it. We created this amazing ecosystem, this amazing asset. And there's been kind of like a seller's virus that got into the market. People blamed it on quantum. I don't think quantum in the long run is really the reason. I think there was selling, and that selling is getting, executed in the market. There was buying, sure, lots of new institutions are coming in, but prices are set on the margin and there have been more sellers than buyers. I think we're getting close to the bottom, but we'll see. You always know a bottom after you see it. Yeah. And listen, there's a couple things that could help, right? Market structure bill passing would be a big deal. people are really pessimistic on it right now. I actually am a little more optimistic that things get done because I think both sides want it done, but we'll see.
So what is the catalyst that turns the tide right now? You mentioned a market structure bill. Maybe that will bring some optimism, but I don't know. Is there anything else that could turn around this trade?
Yeah, listen, part of this acceleration recently downwards is the thought that Kevin Warsh is going to be very hawkish. Listen, what I think Kevin did is he took out the tail risks for inflation, right? He's a man of integrity. He has worked alongside Stan Druckenmiller for a long time, literally since he left the Fed. And so you don't think he's going to do whatever Trump wants him to do. That said, he's pretty dovish right now. And I think once he gets in and starts talking, looking at the environment that we see today, he wants rates lower. And I think once that market kind of rewrites him as a dove, at least a dove, given the current environment, that also could help.
That was Mike Novogratz, Chief Executive of Galaxy Digital, speaking exclusively with Bloomberg's Tim Stenovec. Now, Russia's latest assaults of missiles and drones has crippled Ukraine's energy system amid frozen winter temperatures. Ukrainian President Volodymyr Zelensky has said the work of his team negotiating with Russia will be adjusted accordingly ahead of trilateral talks in the UAE. Now, for more, we're joined by Greg Sullivan, Bloomberg's Russia economics and government editor. Thank you for joining us. Greg, are we expecting any progress from the talks today in light of these recent attacks?
Well, it's hard to say. We are expecting the talks to continue today and tomorrow here in Abu Dhabi. In one sense, it is notable that the two sides are sitting down face to face after talks last month. What progress, if any, that has been made is unclear. There's not a lot that is known. We do know that they plan to discuss technical parameters around military parameters around what would happen if there was a ceasefire, but to get to a ceasefire still remains quite distant, knowing that the biggest issue, Moscow's demands for territory in the east, remain unresolved. Of course, we've heard from the Ukrainian side, from Ukrainian officials, that they expect to alter their approach to the negotiations given the recent attacks, which casts doubt on what progress can actually be made. That being said, the talks are going forward, so we will have to wait and see what comes out of them.
Greg, do we expect any pressure from the U.S. on Russia after this?
Well, we've heard from the White House a couple times since the recent attacks. The White House did say that Trump was unsurprised, and he later expressed some dissatisfaction. We've heard from the U.S. lawmakers that they have prepared sanctions. However, European officials have recently said that there's little sign that they're ready to implement them. And in the past, Trump has been somewhat hesitant to impose new sanctions or punishments on Russia, given its intransigence in the talks. That said, they have imposed sanctions on some of Russia's biggest oil producers, which has had an effect. But it's unclear whether they're ready to take the next step at this juncture in imposing more pressure on Russia.
So what obstacles remain, and is there any sign of compromise on these?
Well, one of the biggest obstacles that remains is a Moscow demand for territory in Ukraine's east that Kiev still controls militarily and Russia has not been able to seize. Kiev has said that it's not ready to seize sovereignty over territory. It's heavily fortified land that would have potential security consequences were they to give it up, let alone political consequences. However, Moscow has shown no sign of backing away from those demands. There are other issues such as the size of Ukraine's military and security demands that don't appear to be wrapped up between the two sides. So it's unclear whether progress will be made there.
Greg, thanks so much. Greg Sullivan, Bloomberg's Russia economy and government editor. Now, we have a special coverage of the Bank of England's first interest rate decision of the year. That's tomorrow. Joining us by the news conference by Governor Bailey at 12:30 p.m. This is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly, a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to, just from a historical lens, is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Equities resuming their sell-off, driven by stocks exposed to Anthropic's AI disruption. Earnings continue to pour in. AMD fails to impress investors. Alphabet up next. And Iran asks the U.S. to move the upcoming talks from Turkey to Oman and to focus on just the nuclear program. So let's have a look at how markets are setting up for the day, because yesterday did turn into a day of selling for equities, even if it didn't look like that at the beginning of the session. Sure, S&P futures are fairly flat right now, but if you look at NASDAQ 100 futures, were pointed lower. Yesterday's almost 1.6% decline on the NASDAQ 100, more or less erasing its gains for the year. For the year to date now, it's only up just more than 1/3%. The Russell 2000 is still the exception. We are pointed higher today, and that index is up nearly 7% for the year. So the AI trade seemingly not impacting the Russell 2000 as much. All about the Fed, I guess, for the Russell 2000. Speaking of which, you have yields coming back down just a couple of basis points in the last 24 hours or so, with a 30-year yield still at 4.90 and the 10-year yield at 4.27. That 2-year yield just below 3.58 where we have been. So that curve really holding its shape over the last 24 hours. And then when it comes to metals, we are seeing gold continue its rise. So remember, it dropped 20%. Well, it's back up more than 10% from that low point and back above $5,000. Bitcoin struggling to find levels. Michael Burry saying, look, it's been disproven now. It is just a speculative asset. That's just one opinion. All right, let's get to some individual market movers now. And for that, we'll go to London and Chloe Melly.
Good morning, Bonnie. AMD is in the red this morning after providing a sales forecast that disappointed investors. So this will be seen as a sign that the company is perhaps not making inroads in AI as successfully or as quickly as investors had hoped. And this might also mean that AMD might be playing catch up with Nvidia for a little while longer. And we are down almost 8% in pre-market trading. On the other hand, AI was a big boost for Supermicro with really strong sales of its servers that are used to run data centers. So that is a nice boost for a company that had said at the previous quarter that there had been delayed contracts that had really hurt the results, and we are up more than 12%. And finally, let's move on completely from AI and go over to Chipotle, which is down after providing a forecast that was also quite disappointing to investors. This is a company that had a tough 2025 already and is struggling to appeal to budget-conscious consumers and also to operate in this now market where a lot of people are on weight loss drugs.
Never a dull earnings season, that's for sure. Chloe, thank you so much. Chloe Melly there. And coming up in this hour, a closer look at this equity market with Robinhood CIO Stephanie Guild. Starting off with tech then, a global market rout taking a pause after it wiped out $285 billion in stocks. That sell-off was sparked by Anthropic's new AI automation tool with potential disruption capabilities across industries, including software, financial services and asset management. For more, Bloomberg's Tom McKenzie joins. Tom, it was a really incredible reaction because not only did you have some of these companies selling off that provide software to, the legal industry and so on, but you also had their funders, right, the Blue Owls and the private capital providers. It really did seem to shake this industry. Was it an overreaction?
Well, there could be an argument from investors out there and from those watching the space that the baby was thrown out with the bathwater in the last 24 hours on the reaction to this kind of plug in and pull out trade that we've seen, kind of mini deep seek again in terms of the shakeout that we've seen, particularly across the software stocks. But to your point, the linkages all the way through to private credit and private equity as well. There seems to be a moment where investors are still trying to assess the value of some of these software companies, which ones will thrive, which ones will survive in this AI world. It's hard to think that they'll all be wiped out. There will be winners, there will be losers. The problem for now is that many investors do not have a clear answer on where that lands, so they're just selling on the back of this story. You should expect that more of these large language models, the OpenAIs of the world, the Anthropics of the world, and the Googles of the world with Gemini will continue to come out with these additional verticals that will challenge some of these spaces. So we can expect further volatility, I think. They are all under pressure to ship product to try and monetize the proposition. But certainly we're seeing the effects of that in the London session today. We're seeing software companies like Sage, you're seeing SAP over in Germany, you're seeing companies like Capgemini over in France, the London Stock Exchange Group still under pressure on the back of this story. So to your point, it's not just the software companies, it's financial services, asset managers, private credit and private equity. When we get a bit of a stabilization is going to be a question, I think, in terms of this trade. We're starting to to see some evidence that this is starting to stabilize. But it's also a reminder that we cannot just buy the basket on AI. You have to differentiate, is the argument for many, and you have to make sure you're picking your spots on this AI theme.
Yeah, investors really reassessing valuations. Can I ask you about NVIDIA and its $20 billion in OpenAI funding? Because we just heard from Jensen Huang earlier in the week, and that caused ructions in markets too, right? When he seemed to be pulling back on the $100 billion investment.
Yeah, it certainly did. And of course, it followed the Wall Street Journal reporting over the weekend that insiders at NVIDIA were becoming increasingly uncomfortable with an overall $100 billion commitment to OpenAI. And to your point, we had those comments from Jensen Huang saying this was never a firm commitment, but they still saw OpenAI as a very, very solid investment proposition. Now we have the reporting from our team, of course, stateside, that they will be committing potentially $20 billion into OpenAI. That would be the biggest single investment, by the way, from NVIDIA into the maker of ChatGPT, which is, of course, trying to raise, in its latest fundraise, $100 billion. We may get about $50 billion from Amazon. They may be getting about $30 billion from Salesforce, and then NVIDIA coming through to round things out with that $20 billion. It hasn't been signed and sealed yet, so that's a caveat, but it does seem to illustrate that there still is that commitment from NVIDIA to support and invest in OpenAI.
Tom, if there is a bellwether for AI, it's NVIDIA, right? But if there is another one, it's its smaller rival AMD, and that certainly underwhelmed investors with its sales forecast. What can we tell about the broader industry from AMD results?
Yeah, which, by the way, was a beat. They beat on the forecast. So they just didn't. It's this stretched expectation story again when it comes to investors. They didn't beat the top end analysts' view in terms of where they could get for the forecast of 10 billion. They came in at 9.8 billion. The data center unit, which is the AI play for AMD, they actually saw 40% growth there. So they're hitting their metrics, but it's the expectation story. And to your point, it's in the second half when they come out with these new chips, they really start to take market share from NVIDIA. The key concern for investors seems to be that AMD has yet to prove that it's really substantially, significantly taking market share from NVIDIA, and that seems to be what's weighing on the stock today.
All right, Tom, we'll see how it all shakes out. It could be a different story by the end of the week. Tom McKenzie, host of Bloomberg Tech Europe, thank you. Another stock taking a dive is Novo Nordisk. Shares plunging as much as 20% in early Copenhagen trading. After forecasting a steep decline in sales, the CEO joined Bloomberg.
When you, of course, get a pricing headwind on your GLP-1 products, Wegovy and Ozempic, you feel the pressure of that more. But also on the back of course, being a focused company and being the best in what we do, we feel very confident that the volume buildup will happen script by script, and we have seen the early signals of that with our Wegovy pill launch. So I'm very hopeful that while we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
Mike Duster there speaking with Bloomberg's Francine Lacroix, and joining us now is Bloomberg's Sam Fazeli. So Sam, he has a big job ahead of him, as so many challenges. You come to market with these revolutionary drugs, right? They're extraordinarily popular, and suddenly you're under fire from telehealth, from copycats, from the President Trump administration, right?
Yeah, I mean, at the end of the day, everybody, I think, was of the view that over the long term, prices are going to need to come down and volume needs to go up. What is, I think, upsetting investors perhaps and the market a little bit today and yesterday is the fact that it's happening so fast. If you look back, Q3, JP Morgan Healthcare Conference, the CEO was pretty clear about the expectation of price pressure impacting 2026. I think what happened is that folks perhaps didn't expect it to be as much as the numbers that we're seeing here. Is it possible, Vonnie, that he's putting the worst case scenario forward here and that he's setting himself up for doing better? It is. We just have to wait and see if that volume then comes back behind it. And of course, don't forget that although the CEO said that the oral pill, Wegovy, that they've got is doing great, and that is definitely the case. You can track it on the terminal in terms of numbers of prescriptions. Lilly is going to be coming to market with his own small molecule in the second quarter at some point. So that's going to be interesting to watch too.
Yeah, and he did mention that these are new customers. It's not cannibalizing from the injection, right? So that is good for the company. What, in terms of the pipeline, is most exciting for Novo? What should they be betting big on, do you think?
I think they've got their eyes on, obviously, the CagriSema, the combination of an amylin and a GLP-1. Novo Nordisk is doing the same thing. Everybody is at this game to try and get a better side effect profile, which is, I think, the key thing to try and do here. I think we're good with the weight loss, maintenance of weight loss, finding out the doses that they need. But really, in terms of new product developments, is in this world of GLP-1s, GIPs, anything to do with the G, or the amylin world, is about trying to manage those side effects. And there's a host of other companies that are developing drugs totally different in mechanism to try and deal with that muscle wasting potentially that some of these folks have talked about or suffer. That's another angle that I think is going to come to fruition in the next 3 or 4 years.
Amazing. Sam, thank you so much. That is Sam Fazeli of Bloomberg Intelligence. Now to banks in Europe. UBS share is declining despite a beat in fourth quarter earnings. The Swiss lender announcing a $3 billion buyback program for 2026 with the potential for more.
We are now confident that we're going to ramp up in 2026 to 125 billion of net new assets, and then in 2028 surpass the 200 billion. So we always knew that restoring the profitability in terms of revenue on risk-weighted assets would potentially cost asset growth. We are focusing on sustainable growth and value-added growth, not growth per se.
Sergio Amotti, the UBS CEO, speaking there with the Pulse anchor Francine Lacroix, who joins us now with the latest from Zurich. And Fran, obviously, he has a big job ahead of him too, the integration of Credit Suisse and so on. It seems to be going well so far. What's next on the agenda? What do shareholders want to see?
Hi, Vonnie. So he was pretty optimistic. You're right. Everything seems to be going to plan. There was a little bit of a disappointment maybe on the wealth, especially on the U.S. side. But actually, he kind of tried to turn it into a positive, saying, look, we're in good shape. Inflows are fine. You know, there's nothing to see here was the general message. Of course, there are two big things that we need to watch out for. One is the capital requirements. Now, Sergio Amotti didn't really want to get drawn into this because this is something that's ongoing negotiations between, of course, the bank, all big banks, i.e. UBS and policymakers. But the other thing is that we had a pretty good conversation, a pretty long conversation on the markets. I asked him about valuations, and he says, look, things will have to adjust, so we just have to get used to valuations. It doesn't have a huge impact in how clients are behaving differently. He took it as a positive that we now have the appointment of a Fed chair. But again, this volatility will stay, and it depends on what kind of bet you have. We also talked and touched on M&A a little bit.
And also succession, right? Because I guess we had the idea that he might be stepping down in 2027, but he's sort of throwing a little bit of cold water on that idea. He said to you, when we say that I will stay until at least the early part of 2027, it doesn't mean that I'm going to step down. Where are investors looking in this succession process?
Yeah, again, he's quite tight-lipped, but he kept on going back to the idea, because I also asked him that there was this rumor that was started by his own chairman saying that Sergio Marti would be a great chair. He says, look, he's really focused on the task at hand. They have internal candidates. He said that, the succession process is continuing kind of, as expected. But you're right, when I asked him about 2027 and whether he would really step down in April of that year, he initially said, let's see, and then he backtracked and saying, look, there's a lot of things going on because of the capital requirements, because of the M&A that some of his competitors like Santander are doing, and they're not. And so he was, I would say, quite mysterious in exactly what the plan forward is. I guess if you're in, at the start of 2026, with everything, Vonnie, that's going on in the markets, April 2027 feels like a long way off.
Yes, it sure does. And you mentioned Santander buying Webster there to bet big on the US. Another story today. Francine, thank you. Wonderful interview, Bloomberg. The Pulse host, Francine Lacroix. Now to other top stories trending on the terminal this morning. Federal Reserve Governor Stephen Miron has stepped down from his post leading the White House Council of Economic Advisers. He took a leave of absence from the White House in September when he filled the unexpired term of former Fed Governor Adriana Kugler. That term expired in January, but Miron can remain at the Fed until a successor is confirmed by the Senate. Strong inflows into Europe's credit markets have driven a gauge of risk to its lowest since the financial crisis. A Bloomberg measure of euro investment-grade bond spreads fell to 72 basis points. That takes it now to the tightest since 2007. And sources say Anthropic is working on a deal to let some employees sell shares in the company at a valuation of at least $350 billion. The details of the tender offer haven't been finalized. Anthropic declined to comment. Coming up, Iran calls for a change in venue for talks with the US later this week. More on that next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg.
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Caroline Hepker.
And I'm Stephen Carroll.
Shares in Novo Nordisk have tumbled by 20% in early European trading after the pharma giant warned of a steep decline in sales of its drugs in a move that shocked investors. The company said that it expects sales will fall by as much as 13% due to lower prices for its blockbuster weight loss medicines, driven by a US government push to bring down drug costs for consumers. CEO Mike Dooster spoke to Bloomberg after that announcement.
Of course, I can understand that negative numbers are not good news to the market. But once again, this is something that we had anticipated, and the obesity market is quite dynamic. And the reason the range has its numbers on each end is because so many things can happen.
Novo Nordisk CEO Mike Doustdar speaking there yesterday. In a call with media this morning, he said he is, quote, very confident that the firm will meet demand for the new Wegovy pill, while re-emphasising that the company will face unprecedented pricing pressure in 2026.
Traders have continued to dump stocks across the software, financial services and asset management sectors after a new AI automation tool from Anthropic sparked a massive sell-off. The latest release has supercharged disruption fears that have been simmering across the software industry for months. Jefferies equities trader Jeffrey Favuzza described the $285 billion rout as an apocalypse for software as a service stocks. He added that trading is very much get-me-out style selling. Here's the view of Mandeep Singh, Bloomberg Intelligence's Senior Global Head of Technology Research.
Right now, what we are seeing is, the power of these large language models in coming up with a new interface, a chatbot or some sort of a simple interface where you can throw in data, you can automate, steps of your workflow, but generalizing that everything, will be fully automated is a stretch.
Mandeep Singh speaking there as software stocks slid from India to Japan, and we are seeing further declines in the European session today, with the likes of Relax down 2.3% in London and SAP down by 3.8%.
The value of cryptocurrencies is showing signs of stabilising this morning after almost $500 billion was wiped off their market value in a matter of days. On Tuesday, Bitcoin dropped as much as 7%, falling to just under $73,000, its lowest level since early November. Famed Big Short investor Michael Burry is now warning that the plunge could deepen into a self-reinforcing death spiral, in his words, inflicting lasting damage on companies that have spent the past year stockpiling the token.
UBS reported stronger than expected fourth quarter results with net income of $1.2 billion that beat estimates. The Swiss lender also announced a $3 billion share buyback. While the bank said that figure could grow across the year, client inflows for its wealth management unit fell well short of expectations. Here's the CEO, Sergio Ermotti.
The investment bank is growing well in the areas where we want to compete. Asset management is doing a good job, and the Swiss business is also holding up well despite the low rates or negative rates almost environment. And we're making also good progress on the integration. 85% of the Swiss clients of Credit Suisse have been migrated. We are delivering on our capital returns, so I can only be happy, to be honest.
UBS CEO Sergio Ermotti there, as the bank broadly maintained its previously signalled financial targets for 2028. Shares in UBS down 1.9%.
Meanwhile, shares in Santander dropped 4% at the European market open as the bank announced a €5 billion share buyback after confirming that it has agreed to buy Webster Financial for €12 billion. Spain's biggest lender reported better than expected fourth quarter net income that came in at €3.76 billion. But speaking about the acquisition in the US, the bank's executive chairman, Ana Botín, told Bloomberg that the deal will bring future gains.
This is a bolt-on but strategically important acquisition because it drives us to our ultimate goal, which is to be one of the most profitable banks in each geography.
Santander's Ana Botín speaking to Bloomberg as the company's results were brought forward after Santander announced that it will pay a total of $75 a share in cash and stock for Webster Financial. That deal will give Santander a major presence in the northeast of America. It's one of the largest ever US transactions by a European lender.
London's Metropolitan Police have started a criminal probe into politician Peter Mandelson over his ties to Jeffrey Epstein. Authorities are investigating the former minister over alleged misconduct in public office. The news follows Mandelson's resignation from the House of Lords after Prime Minister Keir Starmer called his actions disgusting. But the leader of the opposition, Kemi Badenoch, questioned Mandelson's previous appointment as UK ambassador to the United States.
I think that the Prime Minister has to take full responsibility, but there are a lot of questions that his Chief of Staff needs to answer. Who knew what and when? Why did the vetting go wrong? Why did they skip over lots of better qualified people and allow our country to be embarrassed in this way?
Kemi Badenoch speaking, the Conservative Party leader, following the release of US Justice Department files which appear to show Mandelson forwarding internal Downing Street emails to Epstein. The European Commission is assessing whether the former Labour peer breached its code of conduct through contact with Epstein, given that Mandelson was the EU's Trade Commissioner from 2004 to 2008. And those are your top stories on the programme this morning on the markets. The Stock 600 down by 0.2%. The FTSE 100 up by 0.6%. But it is those individual movers based on some company results. Novo Nordisk notably down 18%. As we mentioned, Banco Santander 3.5% lower as well. And continued pressure on those software stocks in trading today as well. London Stock Exchange Group, one of those that saw the biggest sell-off yesterday, down another 4.4% today. On Wall Street, S&P E-mini futures are up by 0.1%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Stephen Carroll, and this is Bloomberg.
As a place to do business, the UK stands apart. Not because of a single advantage, but a uniquely powerful combination of many. As one of the world's leading financial centres, the UK puts over £10 trillion to work every day, fueling innovation across every sector. Home to 4 of the world's top universities, it provides exceptional talent and breakthrough research. This sits alongside a clear 10-year industrial strategy, unlocking smarter regulation and making it faster and easier to operate. Stability with dynamism. Global connectivity with local depth. It all adds up to greater growth. Visit business.gov.uk/growth.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak US Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
Listen to the Bloomberg Daybreak US Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.
नेचुरल गैस को देखोगे कंप्लीटली साइडवेज ही चल रहा है. क्रूड ऑयल एज एक्सपेक्टेड नीचे सपोर्ट जोन स्ट्रॉन्ग है. ये जो कल का रीटेस्ट जोन है, जैसा मैंने बताया, ये पूरा ही सपोर्ट जोन है, ध्यान रखना. बड़ा है इसलिए थोड़ा सा लेवल एसएल अकॉर्डिंग थोड़ा बड़ा हो जाएगा. सो इट इज़ अ रेंज. मुझे लगता नहीं है प्राइस इस रीटेस्ट जोन के नीचे जाएगा, क्योंकि ये कल स्ट्रॉन्ग रेजिस्टेंस था. मार्केट ने काफ़ी कंसोलिडेशन करने के बाद ब्रेक किया था. 4:15 से ऑलमोस्ट 10 बजा दिए थे ब्रेकआउट करते करते. उसके बाद फिर ब्रेकआउट वापस हुआ. सो स्टिल स्ट्रॉन्ग सपोर्ट, नॉट एक्सपेक्टिंग प्राइस 5,590 के नीचे सस्टेन करेगा. वापस आता है तो वापस बाइंग कर सकते हैं लोअर एंड पे. ठीक है, बेस्ट एंट्री जोन. हाई लेवल से लोगे तो एसएल बड़ा होगा.
project.
Program. So let's take a look at these markets because we have a bit of a bifurcation in the AI trade. We have SMCI up more than 12% on demand for AI gear. On the other hand, you have all these software stocks and their funders dropping substantially in yesterday's trade, which really provided a sell-off to the market, in fact, almost erasing the Nasdaq 100 gains for the year. That index is only up about 1/3% now on the year. Different story for the Russell 2000. It's pointed higher today, and it's up almost 7% year to date. So that story and the Federal Reserve story that will impact smaller and medium-sized stocks clearly helping there. Let's get to the bond universe. No real movement from yesterday. Down a basis point, maybe on the long end. The 30-year yield still at 4.90, 10-year yield at 4.27. And then in precious metals, we have gold rising once again. We're well above $5,000 an ounce. Silver also higher in today's trade. Let's get to some individual movers now for some stocks to watch. Here's Chloe Melly.
Good morning, Bonnie. AMD is down more than 7% this morning after a sales forecast that fell short of expectations. So that is adding to some worries that the company is not making inroads in AI as successfully as had been hoped, and also that it has still a little bit further to go before it can actually catch up with Nvidia. And so we are down more than 7% in pre-market trading. Moving on to Enphase, which is up very strongly after saying it expects orders to be boosted ahead of the expiration of a tax breaks related to clean energy investments. So that would be a big boost for orders of its solar panels, and therefore we are up more than 23% for Enphase this morning. And finally, Novo Nordisk in Copenhagen is down massively after saying that it expects sales to decline quite steeply in 2026 because of the pricing pressure that it is facing. It had a tough 2025. It looks like 2026 will also be very difficult for that company.
All right, Chloe, thank you so much. Chloe Melly there in London. Stephanie Guild of Robinhood weighing in on the software sell-off yesterday, writing, quote, despite the recent sell-off, a look at software companies in the largest 1,000 stocks reveals good fundamentals, roughly 2 times higher cash flow margins and significantly less debt compared to the broader stocks. Stephanie is CIO at Robinhood, and she joins us now. So, Stephanie, you do see an opportunity here to buy the dip, so-called, but is the dip in? Are we going to see more of a sell-off?
It's part of my note that I wrote. It was a quote from a larger note that I wrote where I wasn't willing to be a hero yet, in that Right now, the whole sector seems to be in free fall, and technicals don't seem to be mattering. If you're looking at it, it's well below its, the whole sector is well below its 50-day and 200-day moving average. And so right now, I think it's just a place that you need to watch and sort of decide, take the time to actually decide which ones may be really well undervalued. And I do think there's going to be some spots that come out of that. I think, for example, Microsoft is probably going to end up in a much better position than the market is really giving it credit for right now.
And why is that, Stephanie? Is it valuation, or is it their essential product and what they're offering investors?
That they're an essential product. I do believe that while the likes of Claudebot, for example, can start to impede on what people are using, I don't actually think a lot of the things that Microsoft has, for example, are really going to necessarily need Claudebot. I think you could end up seeing where Microsoft has its own AI and they are in the application layer, and that ends up being a place that can actually compete with the likes of Claudebot, because I do think it is very disruptive for most companies to completely change using an entire software in one go. And so I do think this is starting to become a bit more speculation than really what we know.
Yeah, and even, extending to the funders of these companies, the BDCs and so on, it was really quite the trade yesterday. But obviously investors are rethinking valuations in some areas of the market, and pharma is another one. Again, if you had bought by now, you'd be sorry because, many of the pharma stocks are dipping post-earnings at the moment. Is now a good time to buy?
We started adding to, in Robinhood Strategy, started adding to pharmaceuticals in October. So we're feeling like, this is part of the market rethinking what technology will mean in the future. And obviously there is pressure on some of the larger pharmas. You mentioned Novo Nordisk earlier because, I think about they're sort of known for GLP-1 drugs, and there's a lot of competition now, I think, I don't know about you, but I get ads all the time on social media for different compounded versions of it. So I do think you have to pick your spots. This is truly like a stock picker's market. So we're certainly not saying like buy pharma broadly, but we're saying that we do think, just like in software, there's going to be an opportunity or two to take advantage of any sort of sell-off.
I want to mention Mike Wilson's note today to his team at Morgan Stanley saying that it might be time to add exposure to consumer discretionary stocks trading at cheaper prices because, there could be upside, and particularly if gold, changes in valuation, that might provide some liquidity for people to buy these cheaper consumer stocks. And you've had that thought for some time. Tell us about some of the consumer stocks that you like.
Yeah, I'm starting to see this market as like a market of things over services. And when we started looking at some of the consumer names towards the end of last year, it just looked like a place that they had, maybe we'll get there in the software sector as well, where things had sold off quite a bit. And so, for example, one name that we like is VF Corp. It's a name that has a number of different brands, and similar to Gap, which has also done relatively well if you look over the course of 2025 and into this year, is that there's a focus on becoming more efficient. I think there's nothing better than kind of a scare like tariffs to get a company to start thinking like, how are we operating and how can we be more efficient? And VF Corp, they sold Dickies, they've been paying down debt, and they're looking to focus on revitalizing the brands that they have. And, I have a daughter who's sort of a preteen, and I think there actually can be a good barometer. And I know their collab between North Face and Skims was something that definitely got, a certain subset excited.
Yes. I want to mention Alex Allman's research at Barclays as well, because he put out a note suggesting that the changing of the guard at the Fed will inject turbulence no matter what. It always does. He talks about an average drawdown of 5%, 12% and 16% over 1, 3 and 6 months after a new chair takes the helm. Would you be concerned about that?
I think it depends on the situation that we're in. It's certainly the market has started to react to this already. When you think about the concern that the new Fed chair is going to be extremely hawkish about the balance sheet, and despite being dovish on rates. But I do think you have to look back and say, like, what situations were the Fed chairs in when they arrived, and what did they have to deal with? I think we were in a place, you saw in 2016, there was when, not 2016, 2018, when Powell took over, there was a big, drop in markets, but I think it sort of had a lot to do with other things. Like we were kind of fighting a trade war with China at the time, at least here in the U.S. And the market the Fed wanted to raise rates, and the market said no, and then they listened. So I do think it takes, it depends on what environment we're in, and rather than just drawing a conclusion blankly.
Stephanie, always a pleasure to speak with you. Thank you so much. Stephanie Gill there of Robinhood. Now to other top stories trending on the terminal this morning. Santander shares dropping as much as 5% after it announced the acquisition of Connecticut-based Webster Financial in a $12 billion deal. It is the biggest intraday drop for those shares since October. But the deal allows Spain's largest bank to expand its U.S. operations. The Big Short investor Michael Burry warning that Bitcoin's plunge could deepen into a self-reinforcing death spiral. Burry argued that Bitcoin has been exposed now as a purely speculative asset, failing to take off as a debasement hedge similar to precious metals, and that further losses could rapidly strain the balance sheets of major holders. And the US continues to ramp up pressure on Iraq over the post of Prime Minister. Sources say the US told Iraqi officials it would reduce the country's access to oil export revenues if it appointed Nouri al-Maliki, who is seen as too close to Iran for its premier. Coming up, Fed Governor Stephen Miron steps down from his post at the White House. That's next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Fed Governor Stephen Miron has stepped down from leading the White House Council of Economic Advisers. He wrote in a letter to President Trump, quote, "I promised the Senate that if I should stay on the board past January, I would formally depart the council. I believe it is important to stay true to my word while I continue to perform the job at the Federal Reserve to which you and the Senate appointed me." Joining us now is Kate Ackley of Bloomberg Government in Washington. I guess this prompts plenty of questions, Kate, including what happens to his role at the White House now? Does somebody else take that on? And I guess, how long does he stay at the Fed? How long is he welcome?
Well, it seems like his position at the Fed is the one that, Trump has nominated last week Kevin Warsh to be, he wants to be the chairman of the Fed. So that would likely swap out his seat. And that's going to be kind of a tough confirmation fight in the Senate, where you have even Republican Senator Tom Tillis. He has concerns that, really at stake here, at issue, a big kind of flashpoint is independence of the Federal Reserve. So that's going to be in the context of Kevin Warsh's confirmation hearings. We're going to see a lot about that. And so when he was stepping down from having that, he was on unpaid leave from his White House role. Senate Democrats, particularly on the banking committee, had been, criticizing that arrangement as recently as this week.
Yeah, absolutely. Well, now the partial shutdown has ended with President Trump signing a funding deal that he negotiated with Democrats. Let's just have a listen to what he had to say.
I'm thrilled to sign the Consolidated Appropriations Act to immediately reopen the federal government and fund the vast majority of operations through the rest of the fiscal year. We've succeeded in passing a fiscally responsible package that actually cuts wasteful federal spending while supporting critical programs for the safety, security, and prosperity of the American people.
So, as he says, the vast majority, quote unquote, of operations funded through September, right? But not everything, Kate. What happens to, the agency basically that's been left out of all of this?
Well, the Department of Homeland Security is the one that it was really the sticking point here after the deaths in Minnesota by federal agents, with all the unrest there going on. So I think 9 days we have with this patch, sort of a stopgap patch to keep DHS funded, through these 9 days. And then there's going to have to be either another long-term continuing resolution to keep DHS funded, or it will enter into that piece of the government being shut down for some period of time as lawmakers and the president, fight it out.
Yeah, that fight continuing, and not on partisan lines either. It's an interesting one to watch. If we look abroad, Iran has asked the US now to change the site for talks to Oman from Turkey, and also to limit the talks to, things just nuclear related, whereas President Trump had wanted to talk proxy militia funding, ballistics and so on. Where does that leave those talks, Kate?
Well, it certainly heightens tensions here in Washington with respect to this relationship with Iran. And it, just injects more uncertainty where there's been discussions of the potential for, military action, and people have used the sort of word war. So it's a volatile situation, and the change in location, the change in parameters just injects more uncertainty and the potential for more volatility in that relationship.
All right, those talks taking place later this week. Kate Ackley of Bloomberg Government, thank you so much. Futures potentially taking a breather after a global market rout that wiped out $285 billion in stocks. That sell-off sparked by Anthropic's new AI automation tool with potential disruption across industries, including software, financial services and asset management. Let's bring in Matt Bloxham of Bloomberg Intelligence for more. It's not like we didn't know something like this was coming, Matt. Why the sudden revaluation of so many whole industries, in fact?
Yeah, it's been interesting, isn't it? Because I think this has been a bit of a slow drip feed into the market. Obviously, Anthropic launched the Claude Cowork service, which kind of really started to kind of impress people. And then the trigger, if you like, yesterday was the announcement on their site of a new AI agent for legal profession, and that was really the kind of I guess the straw that broke the camel's back in terms of these worries that that AI disruption is going to be kind of much more kind of broad-based and not just disrupting established players in industries that historically haven't leveraged this kind of technology, but the Claude software in particular is making people worry that even kind of recent innovators, like for example ServiceNow, may be threatened because of the way that Anthropic can use Claude to develop code, incredibly powerful code, in such a short space of time. I think it feels to some degree that the sell-off's been a bit indiscriminate, a bit perhaps like the buying of anything AI related was a bit indiscriminate on the upside. And I think it shows you that this year there's going to be a lot of focus amongst investors about parsing more clearly who the real winners and losers are going to be from the AI revolution.
And whether it's really just as simple as plugging out, your ServiceNow software and just using something from Anthropic. Can I ask you about the NVIDIA deal? It's nearing a deal to invest $20 billion in OpenAI. I mean, Jensen Huang had said, okay, he hadn't committed to 100 billion, but they were certainly going to invest a lot in OpenAI. What would this buy them?
I think it kind of buys them, a hedge, if you like, that they've got a customer that can continue to commit to buying NVIDIA chips. But obviously, both sides of this deal have been diversifying their investments. In the case of NVIDIA, investing across multiple LLM providers, and in the case of OpenAI, expanding its technology choices beyond just the NVIDIA GPUs. So I think there'll be some reassurance that that original $100 billion deal that was mooted, that never really got signed, hasn't completely died, and this is the kind of perhaps first step in that. I think perhaps more helpful to OpenAI, because there's been a lot of question marks recently about where funding comes from to kind of fuel the voracious appetite of these LLMs to develop their products and compete with each other. Obviously, we've seen the news with SpaceX merging XAI, and at least to some degree, that was about providing funding for their own LLM platform. So I think it's a good outcome for OpenAI for sure.
Alphabet is the only one of the Mag 7 that's actually hit an all-time high this year. It reports later, so does Qualcomm. What should we be looking out for?
So on Alphabet, on the sales side, I think reassurance that the ad business, which is the vast bulk of their revenues, is being resilient. Market's looking for about 13% year-on-year growth, and that the cloud business is still growing at about 30 to 35%. Also, the big number people are looking at is their capital spending budget for 2026. The market's looking for about a 30% increase year over year to about $120 billion. So we'll be interested to see whether there's upside to that. I think on balance, people might be expecting them to commit to more, given what we saw recently from Meta. And I think Qualcomm is really a kind of a signal of the health of the smartphone market, given the pressures that we're seeing from higher memory chip pricing. So I think that's kind of really what people are going to be looking for, particularly in Qualcomm.
All right, we'll be breaking them all down tomorrow morning. Matt Bloxham, thank you so much. Bloomberg Intelligence's Matt Bloxham there. And Uber also scheduled to set the tone for the gig economy peers. The rideshare and delivery company reporting quarterly results before the market open. Bloomberg's managing editor for global business of the Americas, Craig CrudeOil, joins with more now. So Craig, the focus no doubt will be on, self-driving, I guess, after Waymo's valuation earlier this week, right?
Yeah, it's really a remarkable story for Uber, where they're increasingly sort of exposed to the ups and downs of everybody's expectations for Waymo and self-driving more broadly, despite the fact that the sort of core business for Uber has continued to perform extremely well. Even as autonomous vehicles start to deploy more across more parts of the U.S. and even internationally. This is a company that they're
वैसे नेचुरल गैस को देखोगे ना, बहुत ज़्यादा ही साइडवेज हो गया है। कल से कंसोलिडेशन करके फंसा हुआ, अभी तक मोमेंटम में इतना कुछ खास मूव किया ही नहीं है। पे रेजिस्टेंस जोन पर ही था, बट यहाँ से देखोगे छोटी सी रेंज के अंदर ही घूमे जा रहा है। थोड़ा सा हायर टाइम फ्रेम पे लेवल मार्क करते हैं, बिकॉज इसमें तो कुछ होगा नहीं। इसमें लेवल जब आएगा तब तक प्राइस मूव करके ऑलरेडी निकल चुका होगा। इंट्राडे में देखोगे मोमेंटम ही नहीं लग रहा है बिल्कुल होता हुआ। थोड़ा सा हायर टाइम फ्रेम पे लेवल मार्क करते हैं 15 मिनट में। मुझे थोड़ा सा डाउट हो रहा है ये कुछ करेगा इतना, अगर स्मॉल रेंज में घूमता रहता है तो। थोड़ा सा हायर टाइम फ्रेम, लगभग 45 मिनट टाइम फ्रेम के अकॉर्डिंग लेवल है नहीं। 15 मिनट में मोमेंटम होगा शायद, बहुत सडन मोमेंटम कर सकता है काफ़ी देर से साइडवेज है बिकॉज
belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Live from New York City, welcome to the program. Price action scores looked like this. We're positive by 0.1% on the S&P yesterday, the biggest one-day decline in some 2 weeks on the S&P 500. Beneath the surface, breaking it down, more names advancing yesterday than declining. That's why you see the outperformance in, say, the equal weight. Even looking at the small caps, outperformance yesterday, again this morning, the Russell up by 0.4. The pain just concentrated around a big group of software names, plus the private market firms getting absolutely hammered throughout yesterday's session.
There was a real fear that the potential new advancements, particularly from Anthropic, would disrupt companies that provide services tied to legal documents, in particular, based on a new announcement. And as Mandeep Singh was saying, the fact that they can cull information, analyze it, and put it into legal documentation is a new breakthrough by Anthropic. That said, are people throwing the baby out with the bathwater because they cannot envision how far some of these large language models can go with respect to disrupting existing streams of revenue that go to these software as a service companies?
People are nervous. I imagine you saw the hung deal over at Deutsche Bank yesterday. If you weren't following that story, a group of banks led by Deutsche Bank unable to sell about $1.2 billion of loans, backing the acquisition of, guess what, a software provider. It makes people nervous, and that's where people are at right now.
UBS analysts estimate that default rates could rise 13% pretty quickly this year, particularly among private credit companies, if the disruption in software is aggressive. This is because some of the private companies have increased their exposure to software companies at a significant pace. You were talking about this before. This is a steady stream of revenue. It seems so obvious. It's recurring revenues, but do those revenues fall off the cliff, even if their technology isn't obsolete, but just because they have a real competitive opponent?
You start asking questions about margins. One, and we mentioned it, the predictable recurring revenue is looking somewhat less predictable after the events of the last 12 months or so. Turning to the bond market, switch up the board. Yields are higher by a single basis point on 10s, 428 near the top end of the range for the year. And in precious metals, an update for you. Gold poised for the best two-day rally going back to 2020, following the biggest two-day sell-off going back to 2013. So it's been quite a ride over the last week or so. Gold this morning up by 1.6%. Silver up by close to 5%. As we count you down to the opening bell, 3 hours away, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with AMD. Shares are falling more than 8% now in the pre-market, despite the chip maker beating on essentially every metric. But it was the outlook that failed to live up to the loftiest expectations by investors amid this ongoing massive AI build-out. I also want to mention China, because AMD did report a surprise $390 million in sales to China in the last quarter. Of course, that having to do with the Trump administration easing export controls on some of the older chips. Moving on to another company, part of the AI build-out, having better fortunes this morning. That is Super Microcomputer, up nearly 12% in the pre-market after the company raised its outlook, signaling strong demand for its servers used in AI data centers. Though analysts did point to a potential weak spot, they say that future large orders could come with slim margins due to a highly competitive bidding process among the server companies. And after a brutal 2025, 2026 could be another challenging year for Chipotle. Shares are down 6% in the pre-market after the burrito chain projected flat same-store sales due to budget-conscious diners, especially young ones, continuing to pull back. Though we have seen the sell-off ease from when they first reported it yesterday. That could be because executives did say that the outlook was conservative and that they're starting to see early signs of success when it comes to their new products like their protein-focused bowls. John?
Yahara, thanks for the update. The stock is down by about 6% in the pre-market. On our radar this morning, a new AI tool from Anthropic sparking a near $300 billion global sell-off. Anthropic's new productivity model expected to automate tasks throughout legal and data analysis, sending software stocks plunging. Elsewhere, Novo Nordisk tumbling in European trading, the maker of Wegovy, warning of a steep decline in sales. This coming as the Trump administration is ramping up pressure on drug companies to lower prices for weight loss drugs. And the Federal Reserve Governor, Stephen Myron, resigning from his post as the head of the Council of Economic Advisers. Myron joining the Fed in September, filling Adriana Kugler's vacated seat and has been on unpaid leave from the White House. That's the latest on the situation with the Fed. Let's turn to geopolitics. The president negotiating with Iran.
They are negotiating. They'd like to do something, and we'll see if something is going to be done. They had a chance to do something a while ago, and it didn't work out, and we did Midnight Hammer. I don't think they want that happening again, but they would like to negotiate. We are negotiating with them right now.
So here's the latest this morning. The U.S. envoy Steve Witkoff meeting with Iranian Foreign Minister Friday after the U.S. shot down a drone. It said, quote, aggressively approached an aircraft carrier in the Arabian Sea. Joining us now for the latest from Washington is Bloomberg's Tyler Kendall. Tyler, the energy market spooked by this in the last 24 hours. Is this an escalation or not?
Well, John, if you ask President Trump, he's saying that he's not necessarily concerned by it and that diplomacy is on the table for now, despite what is considered to be very aggressive action taken by Iran just yesterday alone. You mentioned that the U.S. had confirmed that it shot down an Iranian drone headed for the USS Lincoln carrier strike group. That is part of those military assets that were deployed to the region by the U.S. in recent weeks. Now, the Pentagon confirms that no American service members nor equipment were harmed, but the incident comes the very same day that Iranian gunboats attempted to board and seize a U.S.-flagged oil tanker in the Strait of Hormuz. Despite all of this, the president says negotiations are indeed on track. Yet at the same time, when asked directly, he declined to confirm whether or not there has been a change when it comes to venue and the format of the talks, as Bloomberg News reports that Iran has requested Friday's planned meeting to be moved from Turkey to Oman and also for the agenda to be more limited in scope. According to people familiar with the matter, Iran only wants to have discussions about its nuclear program on the table, which would mean taking off the table some of the U.S.'s top agenda items, including Iran's support for proxy militia groups and also its ballistic missile capacity. So we're going to have to see how this ultimately evolves from here, since we know that at this point our analysts at Bloomberg Economics ultimately say that this could really just be a stalling tactic for both sides. John, we'll see if escalation ultimately moves forward.
Tyler, thank you. Tyler Kendall down in Washington, D.C. Crude higher for a second session, up by about 0.2%. WTI at 63. Brent crude around 67.
Well, that's because the Iranians said if there were to be a strike, they could see a regional conflict expand, not meaning just the United States and Iran. What I find so interesting, and I talk to people behind the scenes, they always say about the Iranians, give them an inch, take a mile. They had a meeting set in Turkey. Why these last-minute games now, changing who should be in the meeting, changing the venue, and changing what should be under discussion? It sounds like they are just dragging their feet.
If you're just joining us, welcome to the programme. Lots to talk about in financial markets. Futures positive by 0.2%. The big story on Wall Street to start the week, a new AI tool from Anthropic sparking a near $300 billion round in software stocks. Pierre Ferragu of New Street Research joins us now for more. Pierre, Microsoft has been in the penalty box for quite a while now. Software stocks have been struggling. What gets them out of this funk?
Yes, it's very surprising to see how fast the market reacted to this new release by Anthropic, knowing that we've been talking about that for many months now. AI is changing the way we relate to computers, to software, and this is clearly a disruptive force. So what we've known and what is still real is that AI is driving like a tech investment boom. It's stronger than ever, and the market is kind of forgetting that side of the story and is concerned about productivity gains. I find it interesting to remember what happened a year ago with around the DeepSeek news, where someone came up with excellent productivity gains and created a big sell-off. So we're kind of seeing like the DeepSeek was about hardware productivity, and now Anthropic is about software productivity. And so there is a big concern about, well, if lawyers become way more efficient, if data analysts become way more efficient using Anthropic, maybe they're going to use less traditional software. That's really the way I read the sell-off today.
Pierre, there's a real question of whether it's an overreaction, and that's what we've been talking about this morning, the idea that maybe we haven't really seen any proof and people are just selling first and asking questions later. This one JP Morgan analyst, Toby Ogg, said, "We are now in an environment where the sector isn't just guilty until proven innocent, but is now being sentenced before trial." Do you agree?
Yes, absolutely. I agree. That's exactly what happened with DeepSeek. And I would have like a fairly balanced perspective on the situation. I think AI is creating a major disruption. We are not going to use Microsoft products or like specialized legal software the same way we've been using them in the past. So I kind of sympathize with like the nervousness of investors on that front. Now, the big mistake is to throw everything away, because it's going to be a disruption. It's not going to be distraction. Remember that capacity, like efficiency gains are good for an industry. You remember when we all heard like these stories about radiologists that are going to disappear, they're not going to get a job because AI is replacing them. Like 2, 3, 4 years down the line, what's happening? We need even more radiologists than we used to, despite the fact that radiologists have been made even more efficient, and their productivity has increased very significantly thanks to AI. So the AI helping lawyers, I think, is good for the law business, but it's also a disruption. And so a tool that is not integrating well with AI is at risk of becoming like irrelevant. The concern of on Microsoft, for instance, is really that. Because as we see Anthropic accelerating, getting more and more successful with enterprise clients, what we see is that like the statistics about the adoption of Copilot, the AI that Microsoft is trying to integrate with its existing product suite, is actually not doing great. So Microsoft is in a challenging position at that moment. Now, if you take a step back, stopping using Excel, stopping using the Microsoft Office suite it still seems like very, very unlikely, and Microsoft still has time to put their act together and better integrate their products with AI. And that's a challenge they're going to have to face now. And yes, they're probably like guilty until proven innocent on that front for now.
Pierre, to sort of build on that, why wouldn't Microsoft say, okay, we might be falling behind with some of the capabilities. We could go out, we could buy for cheap some of these SaaS companies, integrate the capabilities into our software, and prevent some sort of competitive counterpart to what Anthropic is putting out there. Could you see that kind of wave of consolidation or acquisition?
So consolidation and acquisition over like legacy names, probably a bit challenging, because historically you've always had like, this questioning between like, do I build or do I acquire? Building is becoming easier, and building is becoming more and more flexible and like an everyday task. Like everybody is building software all day long. The main thing these Anthropic's tools are doing is building software for you on demand on every single task you're addressing. So probably like buying like legacy software franchises is probably going to be a challenge. And by the way, you see that in the reaction in the market, in the private debt market, in the private equity market, where people realize, this idea that once you have a good software, you're going to generate cash forever, might be challenging. So it's going to be difficult to see that kind of acquisition. The priority for Microsoft is to grow AI infrastructure, and they're actually doing that very well. They're growing their capex, they're spending more and more on their data centers, and like their core revenues, like Azure revenues, are growing very, very fast. And you see that their economics remain very, very strong. So that's really something the sell-off is overlooking, which is that the large hyperscalers and Microsoft, first of all, are actually investing in AI, defending very, very strong economics. And now the question for Microsoft is, how do I integrate AI with my existing software suite to make sure that my legacy business doesn't get destroyed by AI, but is actually a platform on which incremental AI revenues can grow. And on that front, I still think that like the grip Microsoft has on their client and Microsoft's track record at adapting to new technology makes me feel relatively optimistic about how the company can tackle the disruption.
A more constructive view. Pierre, appreciate your time. Pierre Fadigo there of New Street Research on Microsoft and the software names. I keep going back to these two pillars to try and make things really simple. People like software names because of the predictable recurring revenue and because of the fat margins. So on the predictable recurring revenue, Pierre did a great job of talking about things. The timeline for development now is much shorter. It's also much cheaper, which means challenges pop up all over the place and the predictable recurring revenue is no longer as predictable. On the margins, this is really not about who owns the technology, but how much you can charge for the product. And the margins are now under threat. So when you really think about the software sphere and the threat, and there are people much more educated than me on the issue, but ultimately you're seeing a disinflationary shock go through the system for these names right now. And that's what the market is attempting to adapt to.
And they're trying to attempt to understand all of the debt tied to those companies and what the disinflation of those debt valuations look like. Again, this is the reason why you've seen private credit come under such attack. But it really does highlight, again, the Yellow Pages moment. You can look online, you can look on your phone for a number. You don't have to go to the Yellow Pages. How much is that kind of what's happening as some of these systems create their own software to really replace what's out there?
Nasdaq futures right now struggling to bounce. S&P 500 futures up by about 0.2%. Let's give an update on stories worldwide with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. The U.S. is preparing to issue a license allowing companies to pump oil in Venezuela in an attempt to help revive the country's energy sector. Sources telling us here at Bloomberg the Treasury Department could issue the license as early as this week, building on earlier steps that allowed trade in Venezuelan oil. OpenAI CEO Sam Altman saying the company may consider investing in or subsidizing drug discovery firms that rely heavily on its technology. Altman telling a conference that OpenAI could cover its technology costs and take a royalty from any breakthroughs. He says the company has no such partnerships now and is only exploring the idea for the future. NASA is delaying the launch of its Artemis 2 moon mission until at least March after a hydrogen leak was detected during a key fueling test. Engineers are reviewing data and planning another full rehearsal before liftoff. The 4-member Artemis crew will exit quarantine as teams work to ensure the rocket and spacecraft are ready for the historic lunar flyby. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next, taking on the housing crisis.
A person sweats and works and buys one house they can. But homes are built for people, not for corporations, and America will not become a nation of renters. We're not going to do that.
Up next, we'll catch up with Chen Zhao of Redfin from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitvale had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Bouncing back here by almost 1/3 on the S&P, and the Nasdaq up by not even 1/10. Under surveillance this morning, taking on the housing crisis.
A person sweats and works and buys one house they can. But homes are built for people, not for corporations, and America will not become a nation of renters. We're not going to do that. The house values have gone up tremendously, and these people have become wealthy. If I want to really crush the housing market, I could do that so fast, and people could buy houses.
So here's the latest this morning. Home builders working on a proposal for so-called Trump homes to address housing affordability. Drew Renning of Bloomberg Intelligence joins us now for more. Drew, welcome to the program. What's your understanding of what this plan actually is?
So I think it's important to first acknowledge, and the report states that this isn't a plan that is actively being considered by the administration, but rather it's one of many ideas that's been floated by the home builders. We know that ever since the administration came into place last year, that the large public home builders have been working in tandem with the administration and policymakers to find a way to help solve the housing affordability issue, whether that's through the demand side or supply side considerations such as this. But at this point, it appears this is just one of many proposals being floated out there.
Drew, is this a proposal to appease the Trump administration or to actually help the housing market?
Well, I think it's a little bit of both. And, you know, it's right there in the name, Trump Homes. I think that would certainly appeal to the administration. You know, I think it's the builders extending an olive branch, realizing that, you know, policymakers have said that, you know, they've got the housing market and home builders firmly in their crosshairs. So I think the builders have been trying to get out ahead of whatever may come down on the policy side and trying to work in tandem with the administration.
Hey, Drew, it's good to catch up with you. Thank you, sir. Drew Renning there of Bloomberg Intelligence, outlining some of the plans we're hearing in the last 24 hours. For more, Chen Zhao, the head of economics research at Redfin, joins us now for more. Chen, let's take a step back. As you look at the housing market right now, there's clearly problems for a lot of people with regards to affordability. What do you think is the ultimate problem? Does it come from the demand side or the supply side?
I mean, really the root of the issue in the housing market really is on the supply side. We know that the country is short many millions of homes relative to the number of families and households that we have. But really, even beyond that, it's a little bit more nuanced than that, in that it's not just that we don't have enough homes, we actually don't have enough homes where people want to live. So there's also a sort of a misallocation of homes. And so the idea of building more supply is something that gets at the root cause of the affordability issue in housing.
Chen, has it been because of zoning issues? Has it been because of regulations? Or has it just been that a lot of the housing developers haven't seen the profitability proposition that has prevented them from building more?
You know, I think it's a little bit of both. You know, the root cause, if you think about it, has to do with zoning, right? It is very hard in many places to build the kind of dense housing that we need in order to address the housing shortage. But if we were to just magically flip a switch and say, okay, now all these zoning restrictions are gone, would we all of a sudden get the building that we need? I think that is a bit of an open question, because builders do need to be able to see that profitability incentive in order for them to build the supply that we need.
Chen, would it solve the affordability crisis if people who lived in homes and were sort of locked in because they had low mortgages started to sell again? If, say, older individuals decided to leave and downsize once they realized that their 4-bedroom house was too big? I mean, some of these types of mobilities that we are not seeing in the current era of high mortgage rates.
Yes. I mean, when people say housing supply, it's two different things. It's one, it's like just structurally how many homes there are in the country, right? We're short many millions of homes. But then there's also how many homes are actually for sale in the market, like the supply that's actually in the market. And like you said, a lot of people are locked in right now. And we know that supply peaked in early 2025, and sellers have actually started to back off in the back half of 2025. And the reason why they're backing off is because the demand just simply isn't there for them. So, I think if there were more sellers in the market, we could probably get better price discovery, because part of the issue right now is that buyers and sellers are just pretty far apart on what their price expectations are. Buyers are expecting lower prices, and sellers, the ones that are actually coming to market, are oftentimes disappointed when they come to market and see the offers that they are getting. They're not really willing to go that low on price. So in some sense, we're not getting what the market clearing price would be. And that is, keeping us from sort of getting to that level of affordability that buyers need to see.
Hey, Chen, thanks for your input. Chen's out there of Redfin on the housing crisis in this country right now that the president is very, very aware of going into the midterms at the end of the year.
And also at the end of this month, he's going to be giving a State of the Union address. And I imagine you are going to hear a lot more of these housing proposals. Under this Trump Homes, this one thing would be you can live in your home. Again, this is from outside individuals, but telling the administration maybe you can live in your home, be a tenant, but that goes to your down payment. Something else I've heard come up in a few conversations in D.C., to Lisa's point about individuals who have homes but lower mortgage rates, portable mortgages. How does it actually get implemented is the question.
Hard to do that with the way things are cut up and sliced and diced in this country. This is a consequence of post-pandemic monetary policy. That's the uncomfortable truth about all of this. The effective mortgage rate now on the outstanding mortgage debt in this country has managed to get up to about 4.2%. 3 years ago, that had a 3 handle. So it's taken 3 years to get up to 4.2%. And it's going to take more and more time to ease some of the difficulties through the mortgage market. Look, if in the space of 12 months you can have record low interest rates and the highest interest rate we've seen in 40 years, which was essentially Fed policy coming out of the pandemic, that's why you have these kind of distortions in the mortgage market. They're going to take a long, long time to address.
Yeah, and unclear exactly how much the Federal Reserve can really shape this narrative, given the fact that potentially the Bank of Japan has as much influence over the U.S. housing market as the Federal Reserve does.
True. Coming up next on the programme, we'll catch up with Eric Friedman of Northern Trust, Libby Cantrell of PIMCO, Wade Lee of BlackRock, and the Port of Los Angeles Executive Director, Gene Soroka. From New York, the second hour of Bloomberg Surveillance. Up next.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The fundamentals overall in the U.S. economy still are pretty rock solid.
There's so many holes in the data that haven't been addressed.
I do believe in the data. It's a trend. It's not just a 1-month thing.
This is still a consumer-led economy. The consumer's doing fine.
We need an acceleration in the economy.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures on the S&P following the biggest one-day decline on the S&P 500 in some 2 weeks. We bounced by 1/3 of 1%. On the Nasdaq, up by 1/10. Later on today, after the closing bell, look out for earnings from Alphabet. Tomorrow from Amazon. Tech facing a big test in the next 24 hours, given the big moves we've seen over the last 24.
And it's not in the hardware. It's in the software sector. Exactly what kind of disruption could we see in places that provide services that could be written in a day or in a minute by the likes of Anthropic? And this is what's causing a lot of some of the blowouts in an area that people thought was a safe stream of revenue. And we're seeing that kind of disruption massively in markets. Again, I go back to, is this a good thing that you're seeing some 25-30% declines in names so far this year and you're not seeing bigger ripples? Or is this a bad thing showing just how much there is disruption yet to come?
One update at Anthropic, just one update, and we're seeing massive companies absolutely hammered. And not just them, the private credit firms as well. And we're trying to work out who's got the exposure, who doesn't. And that whole bucket of stocks is just trading as one right now. And we talked about it in the last hour. It's sell and ask questions later.
Yeah, the idea that they're being sentenced before the trial even happens, as one JP Morgan analyst put out there. This idea that people are not trying to differentiate who's exposed to what. They're just saying, you have anything close to it, you're gone. We're going to sell. So it raises a question, is this an opportunity to buy, or is this indicative of just how much disruption there could be that causes some companies to go to zero? Again, this isn't the kind of disruption that's going to lead some companies to be less profitable. It could potentially eradicate their business models, akin to what we saw with the fax machine, or even potentially, just film.
Everyone remembers what happened in all the stories about Amazon, how that has changed the industry. There are still obviously bookstores, but there's not as many. Jonathan, earlier you mentioned Napster. People remember what happens when you have this kind of disruption. Right now, we're just talking about the legal framework. What happens to things like TurboTax and other industries that are relying on this software that you actually just might not need to use in the future?
Well, let's run with Napster. I think it's an important topic. Why are we talking about that? Because ultimately, that was the change where people decided they no longer want to pay for music. they decided that that should just be something they get for free. And that had to change the whole industry. So if you're a software provider, and for a long, long time you've had this dominance where you can have these fat margins and these predictable recurring revenues, and all of a sudden there's these other companies that come out and say, I can provide an update for you that quickly, really short time frame, and for this much. Kind of nothing. And the fact that you had that one update at Anthropic that managed to upend the story for so many different stocks, that's why people are nervous.
People have not fully internalized the consequences of commoditizing coding. If you can specialize coding to whatever your particular need is in real time, you could create and design the software in real time that you need. The issue now is accuracy and how effective it is and what the edge is. But the fact that you can do that is causing a lot of people to have some serious agita.
Futures this morning bouncing back by about 1/3 on the S&P 500. Coming up this hour, we'll catch up with Eric Friedman of Northern Trust following a rout in software stocks. Libby Cantrell of PIMCO as President Trump leans on his record ahead of the midterms. And the executive director of the Port of Los Angeles, Gene Soroka, as a new U.S. tariff hike looms. We begin this hour with stocks holding steady following the biggest one-day loss in some 2 weeks. Going into earnings today from Alphabet and Amazon tomorrow. Eric Friedman of Northern Trust says we're not in bubble territory, writing, we do not think the recent price action suggests that tech leadership is necessarily troubling. Eric joins us now for more. Eric, good morning. Good to see you.
Great to see you, Jonathan.
What are your reflections on what we've seen through the week so far?
Yeah, I think you've nailed it in terms of just the dynamic as it relates to the software stocks in particular. I'd say that the two things that we hear the most about in terms of opportunities, one would be data centers, and the second would be what's happening in private credit. And so that consideration around, literally an update, Lisa, to your point, on what may happen to be in the coffers for Anthropic or what have you, the fact that you're actually seeing more private market disruption to public companies, the fact that we're actually seeing winners in private markets kind of taking share from public companies, that's certainly an issue for public markets to digest. We don't think that earnings are necessarily overzealous in terms of estimates for next year. 13% for calendar year 2026 we think is okay. That being said, the more disruption that actually emerges, that could certainly cause some of those challenges to be rethought.
How ring-fenced do you think some of these issues actually are? How insulated is the rest of the market, which is kind of Lisa's question? What do you think about that?
Yeah, I think that there is anticipation of disruption. I don't think it's it's a net new story that, for example, financial services or law or software is necessarily, let's call it, disrupted. That being said, the extent and the speed are what we just don't know. So one of the things that we have concerns about would be, if you think about, for example, the financial services space, which we know very well. My job is certainly enhanced by AI and AI tools. That being said, there are a ton of false positives about just how effective or efficacious some of the tool sets might be. So I do think that, if you look at the net impact to consumers, and again, this notion of that K-shaped economy, really the lower end of that K are the group that's probably most impacted. Think about newly entrants into the labor market. So people who are just graduating college or entering trade schools. Those are the folks who are really impacted by higher rates, higher inflation, as well as tougher job prospects that are also a function of this, let's call it, more disruptive wave occurring. So not necessarily net new, but has a gradual effect. It's sort of like that quote, that the great Hemingway quote, how did you become bankrupt? And the sun also rises, gradually and then suddenly. It's like this very sort of gradual wave that occurs and then it manifests. That manifestation has not happened, but it certainly is looming, which leaves us, again, with some focal points on the consumer set that's probably most vulnerable.
Just to put a pin on it, if you see defaults surge in response to some of this disruption, do financial markets just keep chugging along? Does it look like just simply a small pitfall that can be contained? Or is all of the debt associated with it, as we see in the private markets space, potentially problematic?
Yeah, Lisa, you've been very thoughtful on the private market impact with respect to, just the underwriting standards. I mean, look, the thing we have to all keep in mind is that private credit has not really existed at the levels in terms of total notional size right now. It's never faced a credit-induced recession before. We're not saying there's a credit-induced recession on the backdrop, but again, my inbox runneth over with opportunities in private credit. And so the buildup of more lending, the buildup of, again, cross-industry lending in the space, this is an event where the credit risk models that are really a part of private credit really haven't withstood, if you will, a sort of ripple effect that becomes bigger. So it's kind of like you and I have kids. When we look at at a private credit manager, we're like, hey, we want to make sure we're underwriting their process, but it's kind of like having your kid drive a car. At some point, you have to hope that they're checking their mirrors, they're using their directionals, and those standards actually come into play when it matters the most. So we haven't yet seen an event that really drives a stern test of that underwriting standard. But again, the buildup could certainly make that become more of a relevant issue for us.
I'm holding out for self-driving vehicles, by the way. It's really a lot cheaper in terms of insurance. There are a number of people, I'm sure, who are looking at this kind of disruption and salivating, getting very excited, saying this is when you make your money. This is when you go out and you find opportunities. How much do you find yourself actively buying, feeling like people are throwing the baby out with the bathwater?
Yeah, I think the alternative space, in particular private credit, look at, BDCs, where you can actually get a look through, not necessarily into the underlying, but you can actually see where they're trading versus net asset value. There are some massive discounts out there. I'm not saying this is a time to run and buy en masse, if you will, but there are some selective opportunities. Again, some of the companies that you've listed earlier, very solid credit standards that are trading at massive discounts to fair value with some of their underlying properties and some of their underlying vehicles. We think it's kind of a very gradual approach, if you will, to getting involved. But again, I think that bigger wave of a more credit-induced recession, if that were to materialize, that would be a certain caution flag to be sure.
John Gray of Blackstone yesterday at this Wall Street Journal event was saying what you see in the headlines versus what we have in our portfolio are strikingly different. He thinks the market is very healthy. Then why do you think they're all trading this way? Yeah, I think it is, to the phrase that you've all used very effectively the last couple of days, is that, sell first, ask questions second. And that does often present an opportunity because, the transparency into the underlying is really not high. And I think for good reason. Again, our job, we think, is to make sure we're underwriting the process that these managers, again, very talented managers, follow and let them do their thing. That being said, when there is a larger buildup of credit risks that are looming, that's when we become less attracted to the space. We don't think that's the environment right now, so this is probably an opportunity, again, to rebalance in and make some money.
Are you still focused on the U.S. over international?
Yeah, we actually, Jonathan, have been more dipping into the international piece. I think, the dollar, which has been the bigger driver to dollar weakness, if you will. I think you did a good job of covering Japan earlier. The great unlock in Japan hasn't necessarily been just currency. It has been more corporate governance, which we think is an ongoing theme. Think about the number of companies that have been broken up. These really large conglomerates are actually becoming smaller, more shareholder friendliness, more corporate governance. That's a theme that we think probably continues. And in Europe, look, it's not a great growth environment. This is an environment where we're seeing, a pound-the-table growth. But that being said, it's incrementally improving. We're seeing some level of stimulus. We're seeing some level of corporate governance improvement and activity. That's probably enough to justify current valuation.
This is the problem, I think, not just for U.S. investors, but international investors even more. International investors used to be able to look to the U.S., take the dollar exposure, and the dollar exposure was the natural hedge in a drawdown. That's not guaranteed, let's put it that way, this time around. How are international investors thinking about our markets now in the US, given that as a risk factor, the currency, and the disruption we've been talking about all morning?
Yeah, absolutely. I think that, geopolitical risk plus dollar instability, we are sitting on multi-year support, if you will, for the dollar on a trade-weighted basis, on a DXY basis. And so I think that most international investors we talk to say, look, all you Americans are overweight your own country, and you have been in perpetuity. You've had good reason to make that happen. So either we have to look through geopolitical disruption and potential dollar weakness and go around with the momentum trade, if you will, or anticipate some mean reversion back to where we've been for decades and decades, which is more of a balance between the U.S. and the non-U.S. piece. So I do think there's more caution about investing in domestic equities in dollar terms. I do think there's a lot of interest in U.S. private markets. That's been a space that we've seen a lot of our counterparts in Europe and especially non-Japan Asia step into. So it's more private market interest. Public market interest is probably a little less on the radar screen than it was perhaps maybe 5-10 years ago.
Eric, good to see you, and congrats on the new seat.
Thanks very much.
It's great to catch up in person. Thank you. Eric Friedman there of Northern Trust. This came from PIMCO in the last week. Foreign investors enjoyed a free lunch. Treasuries offered attractive yields while the US dollar provided a natural equity hedge. That era is over. We'll catch up with PIMCO a little bit later.
And we've heard that consistently, this idea that people are going international as a way of diversification. Diversification doesn't mean bonds and stocks. It means going elsewhere because of the potential overweight in U.S. equities in the U.S. dollar that doesn't exactly provide that same hedge.
What a ride in 2026 so far. Only a month and change into it. Equity futures up by 0.2% on the S&P. With an update on stories worldwide, here's your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Shares of Uber plunging in pre-market trading after it reported disappointing fourth quarter results. The ride-sharing giant also giving a weak profit outlook and naming a new CFO who's an outspoken bull on driverless cars. Shares of Eli Lilly rising in the pre-market after it reported a fourth quarter earnings beat. The drug maker forecasting an upbeat year for sales as demand remains strong for its weight loss drug, Mounjaro. The bullish outlook coming as rival Novo Nordisk is warning investors it could see a double-digit sales drop this year. And Bloomberg's Katie Greifeld will catch up with Eli Lilly's CFO later today. Netflix and Warner Brothers Discovery defending their multi-million-dollar merger to a panel of senators. Netflix arguing the combination of the two media giants would give consumers more content for less and help improve distribution. The deal is still under review by the DOJ. And that is your Bloomberg Brief. John.
Vonnie, thank you. Whenever you're hoping a hearing might be what the hearing should be about, down on Capitol Hill, and then it descends into something else.
Always. And it descends into what it potentially is news of the day or what one senator might want to make an issue. Yeah,
You know
that happened yesterday with Netflix.
You know what that happens?
It
Any
wasn't about
day that
antitrust.
ends in D-A-Y. I mean, essentially, that's what you're going to expect, because that's essentially what we get every single time.
Kind of sad. On the verge of embarrassing down in Washington sometimes, isn't it? It really is.
Evergreen statement.
Why do we have these hearings if we're not going to talk about the central issue?
How are we going to get sound bites for Instagram, John?
Clip them and send them out to constituents.
Clearly.
Drives me insane. Up next on the programme, gearing up for the midterms.
We have 9 months now where nobody has come into our country illegally.
Lower prices, bigger paychecks. $1.99 a gallon. The only thing that's really going up big, it's called the stock market and your 401ks. We're getting rich because of tariffs.
Up next, we'll catch up with Libby Cantrell of PIMCO from New York City this morning. Good morning.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Stocks are positive by 0.3% on the S&P 500. On the Nasdaq, we're shaping up as follows, up by 0.05 following a rout in yesterday's session. On the Russell, outperformance again, up by 0.5%. Under surveillance this morning, gearing up for the midterms.
How the talks are going for potential changes to the Department of Homeland Security. Have you agreed to any specifics?
None. Well, we have a secure border. In fact, we have 9 months now where nobody has come into our country illegally.
Lower prices, bigger paychecks. $1.99 a gallon. The only thing that's really going up big, it's called the stock market and your 401ks. We're getting rich because of tariffs.
So here's the latest this morning. The president leaning into the campaign promises he's kept as new polling shows a dip in his approval rating. Bloomberg's Tyler Kendall has more. Good morning, Tyler.
Hey, John, good morning. Well, it appears that President Trump is facing what's become mounting political headwinds ahead of November, not the least of which is that the opposition party historically makes gains during midterm elections. And the stakes really couldn't be higher for this White House as they contend with what has been a downtrend in the polling, considering that Republicans have a trifecta right now in Washington, which means that if they lose either of the chambers of Congress, that's going to slow down the administration's agenda, not to mention risk the potential that Democrats are going to ramp up investigations on Capitol Hill. Now, we've talked a lot on this program about how the White House has been trying to refocus the narrative when it comes to affordability, the president floating some more populist messaging, perhaps, when it comes to plans for banning institutional investors from buying single-family homes, his idea that they could cap credit card interest rates. And even as we head in to this year, Republicans say they think they're going to get a bounce when it comes to the polling amid tax season, as they say that we will see record refunds under the One Big Beautiful Bill. But I have to say, here in Washington, the narrative has really shifted to focus on the president's hardline immigration policies. That's why I asked him yesterday in the Oval Office whether or not he's made progress when it comes to potential curbs on immigration and custom enforcement, as we are now facing a looming deadline to fund the Department of Homeland Security just 9 days away. The thing is, he says that they haven't, as Republicans are trying to thread the needle, as we have often seen, between potential reforms on the president's policies, but not disagreeing with the policy themselves. And John, even as we have seen all of these come to fruition ahead of the midterms, I have to say President Trump has a pretty hefty cash on hand. He has mounted a war chest that amounts to $483 million as we go into November. Person familiar with the White House's and Republican strategy says that President Trump himself will handpick the candidates that will get this money.
Tyler Kendall with the latest in Washington. Tyler, thank you. To build on that conversation, Libby Cantrell of PIMCO joins us now for more. Libby, good morning.
Good morning.
Is there a tell in Texas?
I mean, look, I think for good reason, the GOP is paying attention to it. Obviously, this is a red state, a ruby red Senate district, the state Senate district that flipped to Democrats, went from 31, kind of a swing of 31 points from the 2024 election. It is still early days, but there are other metrics in addition to these off-cycle elections that I think are warning signs for Republicans. The approval rating is one of them. The generic ballot, sort of generally, how does the population feel about Democrats over Republicans? They're favoring Democrats right now by 5 points on average. And then enthusiasm. Democrats seem to be more enthusiastic. Those are all, we have a little mini midterm election model that we built at PIMCO, and those all are statistically significant. So in addition to Texas, the data is also pointing to signs that, like history, the Republicans are probably poised to lose seats in November. However, it is really early days. It's still only, even though it was a very long January, it's still 9 months away. So a lot, as we know.
A Republican strategist said the same thing to me last night. Amory, it's early days. Don't look at Texas. We have till November. We have the One Big Beautiful Bill coming out. What else is the president going to be focused on before November?
Well, I think Republicans do want show, not tell, right? President Trump wants to tell folks, and obviously, and this is sort of what Joe Biden did as well. Understandably, he's proud of the things that he's accomplished in 2025. I think Republicans on the Hill, though, do want to pivot to showing, and they're hoping that these very large refunds that the households are going to be getting, the fact that withholding tables are decreased, and so people are getting bigger paychecks, all of this will, sort of buoy sentiment. Now, what President Trump has talked about, the sort of affordability agenda, and I think, again, Republicans want him to pivot from immigration back to the affordability agenda. Things like capping credit cards, preventing institutional investors from buying single-family homes. Those things all need Congress. And I don't think we're going to see Congress do anything, honestly, on the fiscal side.
It's weird because Wall Street acts like some of this is done.
Yeah, and I think, I'm not sure. I mean, so the president, and it might frustrate him, understandably, I think it frustrates other presidents as well. He just only has limited authority in terms of moving the needle, right? The executive branch executes existing law. It is the Congress that creates the laws. And there is no law that gives the president authority to do either of those things. What he can do, Anne-Marie, which we've talked about before, is he can direct Fannie and Freddie to buy more agency mortgage-backed securities. They have been doing that for several months in the end of 2025. We think they will continue to lean into that. I think the read-through for investors, not only is that good for sort of mortgage spreads, mortgage rates, and potentially helping the economy at least, marginally, it also does decrease the chances that the GSEs go public. I think the president understands he actually would much rather control the GSEs than to issue them to the public.
Well, how much more do you see them actually buying? I mean, how much could this be accelerated and become a main story, particularly at the long end of the yield curve?
Yeah, so it's a good question. Right now, FHFA and Treasury have capped how much the GSEs can hold on their balance sheets to $450 billion collectively between Fannie and Freddie. Right now, they have about $250 billion as of last filing. So they can still go up. I mean, the president has directed that $200 billion gap to be filled. Now, interestingly, that $450 billion, that is not a statutory limit, meaning the Congress doesn't have to get involved. FHFA and Treasury, FHFA, the regulator of Fannie and Freddie, can simply change that. So there's actually, I think, a lot of runway here. If you go back to the financial crisis, Fannie and Freddie owned up to $1.5 trillion of mortgages. So are they going to go back there? Probably not. But, there is still more runway. Now, I think the question, though, is on Warsh and the balance, the Fed chair nominee, Warsh on the balance sheet, because, of course, they're letting kind of mortgages run off, effectively selling mortgages. And, of course, the other side of the administration is buying mortgages to bring down rates. So we'll see. There's a little bit of tension there, as there always is, between the fiscal policymakers and the monetary policymakers. We'll sort of see if he's asked that in his confirmation hearing.
I'm really glad that we haven't talked about a government shutdown so far today. Evidently, it ended, and now we're fine, except that it's potentially not so much in about 9 days when TSA might get defunded and then we won't be able to fly. And I'm just wondering, how likely is that TSA and the Coast Guard are going to be what gets defunded in 9 days, and so that all of a sudden the airports are going to be absolutely terrific, or in a terrible way, in the next couple of weeks?
Is this bothering you? Oh, Lisa, no. I understand. Obviously, this is one of the ways that people consume government services, right, is through the airports. I think happily we are not going to be talking about a macro impactful shutdown until potentially September, when Congress then has to fund the FY27 bill. I think that's unlikely, though we see a shutdown. Usually folks don't like to shut down the government right before the midterms. But you're right that this one thing that has not been funded, funding for DHS, does include TSA. There's obviously this negotiation going on around ICE limitations and what have you. We'll sort of see how that plays out. But we could see that shut down. I think more likely, though, you might just see another CR to sort of build time. I think that, shutdowns do not play well politically on either side of the aisle. And I think both parties have a vested interest in not seeing the government shutdown.
The president wants nothing to do with this government shutdown whatsoever.
Absolutely not. He was so excited that he actually brought the press in yesterday. The first time he brought the press in the whole day. They were waiting maybe to go in for the Colombian president. Didn't happen. He brought the press in because he was signing the government shutdown. He had all the senators behind him. He was really excited. He hates having a government shutdown.
Yeah. Libby, good to see you. Thanks for being here. Thank you. Libby Cantrell there of PIMCO. Coming up on the programme, Whaley of BlackRock doubling down on infrastructure investing, plus Yahira has your modding movers. Shares of Uber falling on a weaker than expected outlook. That name is down by almost 8% in the pre-market. The broader market doing okay, positive by 0.2% on the S&P 500. Following yesterday's rout, we're struggling for stability for tech stocks. The Nasdaq 100 just about unchanged. From New York City, you're watching Bloomberg TV.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At the open about 2 hours away, equities improving. We're up by 0.2% on the S&P 500, improving relative to what we saw take place in yesterday's session. The Nasdaq down this morning by 0.1%, and there it is once again. Saw it yesterday, seeing it again this morning. Outperformance for small caps. The Russell up by 0.4%.
This was supposed to be the year when suddenly the rest of the 493, or just the rest of the economy, starts to feel the effects, the good effects from artificial intelligence. Right now, the market's been trading that way. And as we heard earlier this morning, it's been rather an elegant handoff from some of the tech names to the real economy, as expressed by the Russell 2000.
Up by 0.5% so far this morning. As we count you down to the opening bell, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Despite AMD beating on essentially every metric, we are seeing shares falling now down 9% in the pre-market, and it was the forecast that failed to live up to lofty investor expectations at a time when we're seeing this massive ongoing AI spending boom. I also want to mention China, because AMD did report a surprise $390 million in sales to the country after the Trump administration, of course, eased export controls on some of its older chips. Meanwhile, let's move on to the earnings that we've got this morning. We got Eli Lilly. Shares are surging up 7% in the pre-market after it forecast sales growing by as much as 27% this year. That's a sharp contrast to Novo Nordisk, saying that it expects sales to fall near about as much as 13% this year. So you're seeing that divergence play out in the share price, with Novo Nordisk down 3.6% in the pre-market. Meanwhile, shares of Uber also weaker, down nearly 6% in the pre-market after it issued a weaker profit outlook. But on a morning when we're talking about AI disrupting software, this is another company feeling the heat. Analysts had flagged ahead of the earnings the growing threat it faces from self-driving rivals like Waymo and Tesla, and how that could chip away at its core ride-hailing business. It did respond by appointing a driverless vehicle bull as its next CFO, but not enough to lift shares this morning. John?
Weak guidance from Uber. That stock is down by 6% at the pre-market. Yahara, thank you. On our radar this morning, the sell-off in software stocks weighing on private market firms. Blue Owl and Ares among the names falling in Tuesday's session on fears AI disruptions will lead to steep losses on their books. Elsewhere, Nvidia awaiting final approval from Washington to sell its H200 chips to China. The Financial Times reporting the US government is still conducting a national security review nearly 2 months after President Trump approved exports to Chinese customers. And finally, Citadel CEO Ken Griffin criticizing what he sees as favoritism in the Trump administration.
When the U.S. government starts to engage in corporate America in a way that tastes of favoritism, I know for most CEOs that I'm friends with, they find it incredibly distasteful. Most CEOs just don't want to find themselves in the business of having to, in some sense, suck up to one administration after another to succeed in running their business.
Griffin also slamming President Trump's willingness to enrich his family while in office.
He's running. That's sort of what I'm thinking. Ultimately, he has talked about his desire to come into public service, and a real question of whether Ken Griffin 2028, 2032 could be potentially an option. Look, he's not wrong. I mean, clearly there were a lot of CEOs, certainly in Davos, who were saying, I don't win anything by getting involved in any conversations. The goal is just to stay out of all controversy and say nothing, because ultimately this is a White House that picks favorites, and ultimately those favorites have ramifications for business models, and that's something that's very uncomfortable for CEOs.
And we saw that early on after Liberation Day. If you're a company that actually came out and talked about it, remember Amazon when it was talking about tariffs, that was a quick rebuke from this White House. And then you realize, oh, actually, maybe things are better done behind the scenes. I shouldn't be so vocal. He's also talking about something about the relationship between CEOs and this administration. But there's also just the idea that this administration is going out and picking winners and losers writ large when it comes to the equity market. So there's a lot going on here in terms of how much they have their hand in corporate America.
So 2 different points there. And the last point, totally agree with you. If you're a free market capitalist, or at least you'd like the government to pursue those ideals, you're not seeing much of that at the moment. On the first point, speaking publicly is one thing. You're right to point out the ability to still speak to this White House and lobby it privately. And I always go back to the story of the last 12 months, the most important story, I think, of the trade negotiations, where the retailers going to the White House behind closed doors and telling the administration what was about to happen. And a lot of people would point to the bond market or stocks to say this is why the president backed off, this is why the administration backed away. That story was a massive pillar of the turnaround that we saw in April.
This is a White House that might condemn certain companies for certain proclamations, but also has a pretty open door and a pretty open phone line to a lot of CEOs. So they're open to getting that feedback. And this is a White House that doesn't want to see the stock market absolutely tank or prices go up dramatically. So there are different levers here and a question, but on a public proclamation point of view, no one's going to come out and say, I did that, I caused this to happen, because nobody can get the spotlight other than one person.
Which is very different to the previous administration, where the door was just sort of locked and bolted and they didn't speak to anyone or engage with anyone for that matter.
It seems like there is a lot more back and forth.
We're right,
this
and
one.
you should know that we're right.
Well,
trust us.
There definitely is a lot more engagement with the business community, or Trump administration, or the Biden administration. I think really just Gina Raimondo was that main conduit for corporate America, and then obviously Janet Yellen, Jamie Dimon, they had their whole relationship. But for this administration, they are talking to CEOs on the daily, probably hourly, just calling the president directly and voicing their concerns. And they get more done voicing it behind the scenes than they do in public.
Let's turn to financial markets. BlackRock Investment Institute writing the following: AI and geopolitical fragmentation are driving multi-decade investment needs. Infrastructure provides a durable way to participate in this secular transformation. Wei Li of BlackRock joins us now for more. Wei, good morning.
Good morning.
People seem to have more comfort now investing in the physical world versus the virtual world. What's changed?
I think we're coming to a point in the AI transformation where dispersion is much greater compared to before, when just a mere mention of AI at earnings call get your stock prices pretty exciting to investors. So this is an environment of winners and losers, and we're seeing markets scrutinizing the business model durability and terminal values of businesses a lot more. And this goes beyond just quarter-to-quarter earnings. The last 6 months, we see the performance difference between semis and software. 60%. This is extreme dispersion, whilst the overall kind of markets were going sideways and tech sector is going sideways. So a lot more dispersion, a lot more selectivity. This is an environment of active investing.
So we've already seen extreme dispersion. Are you suggesting there are decent reasons to expect that to continue?
I think so, because this is an environment of winners and losers, right? So speaking with investors across the platform, the opportunities that we like reside very much in the physical space, in the infrastructure space. So we're talking about hardware, we're talking about chips, we're talking about compute, we're talking about energy data center build out, whereas software, especially those that can be best characterized as intelligent kind of user interface, they are very ripe for disruption. Although, even within software, things like data security, things like data repository are still interesting. So you see a lot more granular kind of classification of what we call the AI trade at this point.
How much do you see this, though, as being sort of out of the frying pan into the fire? Because if you look at data centers, for example, a lot of the data center build-out has been supported by private credit, by private asset managers who are under fire because of their exposure to software. I mean, how much do some of the pitfalls in this market limit the credit available to the physical build-out of this world in a way that people were hoping for?
So as we think about the factors that could curtail AI ambition, they are really threefold. Number one, financing constraint. Number two, physical constraint, including access to kind of energy, for example, energy constraint. And then the third constraint is really kind of social and political constraint. So I would say actually the one that is binding right now, the constraint that is binding right now is really around kind of the energy and the physical side of things, because when it comes to financing, actually the starting point of these companies in terms of financing and supporting their capex commitment, it's quite healthy, right? The hyperscalers, they are issuing debt from a position of net cash rather than net debt, which is very, very different from the 2000. And of course, investors and companies are kind of looking at a range of possibilities, both in the public market and also in the private market, to finance that debt. But the big picture is that because earnings are still very strong, it's very different from the 2000 period. This is, there is some way to go before financing constraint actually becomes a constraint that is binding the AI ambition.
We'll get to the political constraints, especially in a midterm cycle, in a minute. But when it comes to the credit financing aspect of this, would you want to be a buyer of credit? Would you want to be a lender to some of these physical infrastructure plans? Or do you think that right now it's much better to be on the equity side and some of the credit side is a bit more speculative?
I would say we got to be a lot more selective in the same way that a huge dispersion is playing out underneath the surface of technology. Within private markets, we have to be selective, which is why, really thinking about good track record, good due diligence, ability to discern what kind of exposures you have in the deal is important. And that applies to private, but also applies to public as well.
When you look at, Lisa mentioned the political ramifications and also maybe the policy support from Washington, this administration that has really wanted to push AI, you've seen them in terms of going forward with a deregulatory push, but potentially then you have Anthropic coming out and talking about the fact that if this all continues, you can maybe see double-digit unemployment. How do you view how Washington is going to look at this infrastructure build-out?
Well, infrastructure build-out is needed to actually support the full potential of AI. So I think the regulatory direction of travel is one that moves towards deregulation. But of course, the financing, the political constraint is one that we have to think about. People talk about electricity prices and then how that has been going higher at more than twice the level as average kind of CPI levels last year, and what that means for project permitting. So those are the considerations that we have to consider as we think about kind of AI build out. But the bigger picture is that, to your point, this is the administration that wants to support AI build-out because it's also an arms race, right? Like, it's not just the U.S. by itself. It's U.S. facing off to China, facing off to other parts of the world. So we do think that the factors will be in place to support the build-out. And specifically, you talked about infrastructure. Infrastructure debt is still very, very small. Globally, we're talking about a pooled capital of $160 billion, which is very little compared with the multi-trillion opportunities, both related to AI and also related to the low carbon transition. So actually, when you look at kind of the funding gap, there is a huge amount of opportunities in portfolios.
Well, it's good to see you. Thanks for dropping by. Thanks for being here. Wei Li there of BlackRock. Lots to think about, lots and lots to think about. Let's just go with the politics. That's where the ultimate constraint could be. The president often tells this story from Mark Zuckerberg and relates it to the public and says, Mark Zuckerberg said to me that they're going to build a data center the size of Manhattan. And we talk about the investment taking place in this country and how great it is. At some point, that story becomes deeply unpopular because people start to realize or start to connect what they're paying the utility companies with projects like that one.
That story could transform into It's so great that Meta just committed to buy an entire new electricity center right next to your town that's going to finance your home. And by the way, they're going to have to build another one to finance their ambitions, which will crimp in their profits and then also potentially crimp their ambitions going forward. I mean, this is the type of discussion that could take place in D.C.
I was in the room with the president when he showed the cabinet and all the reporters actually that photo of the data centers on the size of Manhattan. And the first thing I thought of was, does anyone want to live near that? You're paying a higher electricity bill, potentially because you're living near that. And also, what are these data centers doing? They're potentially taking your job because AI is coming in and making the workforce a little bit more challenging. That is the anxiety right now that these politicians are going to have to deal with.
Let's hope that's not the case. Steve Englander yesterday, Standard Chartered, was firing us. Yeah, that wasn't nice, was it?
No, I mean, we came back today, but beaten up and bruised.
There you go, Steve. Futures on the Nasdaq 100 this morning down by about 0.2%. On the S&P moving the other way, higher by 0.16. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Texas Instruments shares falling in the pre-market as the company agrees to buy semiconductor firm Silicon Labs in a $7.5 billion deal. This marks a continued push from Texas Instruments into established markets for chips, including home appliances, power and industrial sectors. The deal is expected to close in the first half of next year. President Trump says diplomatic talks with Iran are continuing following a spike in tensions. The U.S. Navy shooting down an Iranian drone headed towards an American aircraft carrier in the Arabian Sea. The White House confirming U.S.-Iran meetings involving Middle East envoy Steve Witkoff are still scheduled for Friday. Former President Bill Clinton and his wife, former Secretary of State Hillary Clinton, are set to testify about their ties to Jeffrey Epstein. The House Oversight Committee says they will testify February 27th and 28th. The full House had planned to hold a criminal contempt vote against the Clintons if they continued to defy subpoenas. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie in about 30 minutes in the next hour. Up next on the programme, finalising trade deals in Washington.
We're really focused on finalizing our trade agreements with others, keeping stability with China. We're in a good spot. We can't solve every problem right now, but transshipment is one that we're very focused on.
Up next, we'll catch up with Gene Soroka, the Executive Director of the Port of Los Angeles from New York City. You're watching Bloomberg Surveillance.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Steep losses yesterday. Stocks bouncing back today by about 0.2%. A lot of those losses concentrated in software names and private market firms. This morning we're up 0.2% on the S&P, but still lower on the Nasdaq. We're negative 0.12. Elsewhere, under surveillance this morning, finalizing trade deals in Washington.
Our trade deficit with China has really improved over the past 10 months, which is a great development. We do have some insight into parts and components going to third countries. We understand that development. That's the kind of issue in the future that can be dealt with rules of origin, et cetera. We're really focused on finalizing our trade agreements with others, keeping stability with China. We're in a good spot. We can't solve every problem right now, but transshipment is one that we're very focused on.
So here's the latest this morning. South Korea's top diplomat meeting with Secretary of State Marco Rubio as the country races to avoid a tariff hike. Gene Soroka, the executive director of the Port of Los Angeles, writing, "Tariffs continue to keep everyone on edge. I expect more uncertainty ahead on the trade front." Gene joins us now for more. Gene, welcome to New York. Good morning.
Good to see you, John.
It's good to see you, sir. Let's get into the numbers. Talk about tough comps. I think that's an understatement to say that you've got tough comps relative to last year. How much have things slowed down?
January, over 800,000 container units, off by a little bit more than 10%. February looks to be about the same. We've got a mid-quarter Lunar New Year, so March will see a traditional drop-off. If you look at Q1 versus last year, we'll probably be down in double-digit fashion.
How much is this a reflection of consumers not buying, and how much is this a reflection of a lot of different industries not wanting to import because of the tariffs?
Lisa, probably a combination of both, and here's why. Last year, and even going back to the campaign trail, as we've discussed, you saw a lot of run-up to try to build inventories ahead of tariffs and work unit prices down. Secondly, while retailers are doing okay, holiday sales not bad, Matt Shea says we crossed $1 trillion, according to the National Retail Federation. That's also inflation-induced. So the number of units moving at the retail level, a little bit lower, prices have gone up.
How much has there been a complete shift in terms of where things are being sourced that do come to the port? I'm just curious if there is sort of a sense of favoring, say, places in South America over, say, Southeast Asia. Have you seen that shift in a material way?
Yeah, it's noticeable, and companies are still looking. CEOs and executives are telling me that their staff is spending a lot more time both on simulation of what would happen next based on policy, where do I source from, how do I get contracts in place, and just trying to keep up with all this information. So for us, China was 60% of our portfolio back in 2018. This year it'll drop below 40%. Yet we're still growing because we've been chasing the freight. But trying to keep your eye on what's next is going to be very interesting. Trade deal with India yesterday, maybe some possibilities there.
Well, this is interesting because I didn't get a direct answer from Ambassador Greer in Davos about this. The transshipment, how do you track it? Because China is still sending to the United States, just not directly from Beijing. There is a middle point.
Yeah, a couple things. Traditionally, supply chains in Asia work country to country. So the buttons and plackets on a shirt made in China go down to Vietnam, you make the whole shirt, sell it to Macy's here on 34th Street. Some bad actors out there are trying to circumvent tariffs, go to lower cost countries by transshipping. But China, as announced in the 15th five-year plan, is not only exporting goods, they're now manufacturing expertise exporters as well. So they're investing in plants along the Pacific Rim and other locations around the world.
Do you think this administration will go after that?
Yeah, probably so.
How challenging is that?
It's really challenging because it's tough to get hard data on where this supply chain starts and ends.
Who's funding it? Yeah.
And who's funding it.
We've talked lots with you about how much you improved systems and processing through the pandemic. How much have things slowed down because of the tariffs? Can you give us an idea of what that looks like now relative to where it was the year before?
Well, historically, compared to the numbers of containers we're moving right now, we look pretty decent. But it's been super choppy, from COVID to a little bit of downturn based on high inventories and then all this tariff buildup. It just looks different. But last year was our third busiest on record in 118 years, and we didn't have one ship backed up. We're doing things a little bit smarter, working together, and information technology plays a huge role here, John.
That's super impressive. We can still see in the data, though, that there are still problems. ISM manufacturing came out in the last couple of days. And if you go through the commentary, Gene, allow me just to go through the commentary here. Trade tariff uncertainty is creating volatility in the supply chain. It's making long-term planning pointless. This comes from a range of industries within manufacturing. There continues to be uncertainty and added costs through our global operations. Lisa, just going through the details. It was a great number, by the way, decent print. But you go through the details on the commentary coming from various industries. It's not good. It's not good reading at all.
Well, it creates this level of uncertainty. And when you talk to different CEOs, they say, we didn't price in a lot of the tariffs last year because we had inventories that we were pushing through. We don't have those inventories anymore. So now we have to pass along the price increases. And how can they do that at a time where the consumer is looking for value?
So last year we talked about this concept, this phrase that Jim Zalter of Apollo mentioned, and it was macro paralysis, that for a lot of companies, they were just sat still. They couldn't make decisions, didn't know what to do. Do you see any of that?
I do. Yeah, we talked some time ago about people hitting the pause button, and their finger is still on it. Hiring is flat, new jobs non-existent, and realistically speaking, companies are not looking at longer-term horizons for planning purposes, and capital investment also very soft.
Then how do you plan for that?
We have to invest through budget cycles, economic cycles, and even election cycles. We've got about $10 billion worth of projects on the capital side right now. New terminals for the first time in a generation. We need a new bridge crossing onto Terminal Island and outlining more rail capacity as well as road connectors to keep this cargo flowing. We'll see this. It'll be ups and downs, but long-term growth will take place.
If companies don't have inventory anymore, and they don't want to build too much inventory because they don't know how things are going to change, how much are people looking for much faster shipments and smaller shipments each time?
That's exactly what's focusing right now. And what we saw last year, when the trade policy was softened and tariffs came down during negotiations, importers had windows of opportunity to get their cargo here. And the fastest way was through the Southern California Gateway. So while overall imports were down in the country, we were up simply because of that certainty and the fast pace that we could get cargo from Asia into the country.
Gene, love this. Always learn something sitting down with you. Thanks for making time for us.
Thanks, John.
Thank you, sir. Gene Soroka there, the Port of Los Angeles Executive Director, on some of the issues they're facing at the moment. Record traffic, all that front-loading last year. The comps are super tough for the year ahead.
Yeah, and it's not just that. It's also that people don't have a sense of exactly what the tariff regime is going to be, of course, with IEEPA. And there's also this issue of how do you plan ahead? And if you can't plan ahead, are you going to build inventory now going forward? It's a very difficult backdrop.
Also, Gene's point is really interesting about what China's doing. They're not just sending the inputs anymore to some of these countries. They're sending the expertise. They're building the entire factories, but under a different flag, and then it's coming into the United States.
Up next on the programme, Jack Caffrey of JP Morgan Asset Management joins us to go through the big equity moves we've seen in the last 24 hours in software stocks. Plus, James Egelhoff of BNP Paribas, Brad Erickson of RBC, Michelle Weaver of Morgan Stanley. The third hour of Bloomberg Surveillance just around the corner.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse. A discourse in which you respect the dignity of those with whom you disagree.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Earnings are really going strong.
There's some great earnings power across the tech sector.
We think equities do go higher later in the year.
Start trimming some of those high momentum names.
I'm positive a lot of this is lighting money on fire. The question is, when does that fire go up?
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your scores, the price action shaping up as follows. Equity futures on the S&P just about positive, following with the biggest one-day rout in about 2 weeks on the S&P 500. On the Nasdaq, struggling to bounce. We're down by 0.2%, and the next test is this afternoon. Numbers, earnings from Alphabet before we get results from Amazon.
Real key here is going to be the spending that they do on their cloud computing services. We saw from Microsoft, it was not rewarded because they weren't able to show that they were growing their cloud computing platform as quickly as people previously expected. Do you get a similar type of messaging coming from Google, or do we find out that Google is actually taking share from Microsoft, right? These are going to be share wars, and this is going to be show me the money kind of moments for some of these big tech names.
We need to talk about the data as well over the next 24 hours. ADP results, that data, that job number in about 14 minutes time. Then ISM services. 2 data points to take on a little bit more importance given that we're not getting payrolls in a few days' time.
Isn't it annoying that actually the government is back up and open? It's Wednesday and they still can't figure out to get the payrolls report to us by Friday. Just put it out. Yeah, I mean, just crunch the numbers a little bit quicker. Apparently you can do that with these AI tools, as we've seen in the software sector overnight. But yeah, that's why this data is going to be more important when it comes to the private sector data. ISM services is going to be important based off what we also saw from the manufacturing. But I guess for the actual payrolls, we're still waiting on a date, I'm guessing next week.
Bond yields up by a single basis point, 10 to 427. It's impressive just how contained some of these violent moves in financial markets across different asset classes over the last several weeks has actually been.
Yeah, right now when you look at the bond market, you look at implied volatility, it has fallen off a cliff. You think about the fact that we even now have a new nominee to be the next Fed chair. Whatever, taken totally in stride. Nobody seems particularly fussed. Is this because people look forward and they say it doesn't change the overall economic dynamic, or have people been beaten into just some sort of numb complacency? I will say, to your point, I think it's great. Anthropic should come out with a tool of how to code Congress, and they could get all of these resolutions through, and potentially we actually have a government that stays open.
Have a moment for those staffers that are actually the ones that have to read through all the legislation before their principal goes and votes on it. I'm sure there's a tool in the next 6 months that you can just pop that into and gives you a readout of exactly what they're voting yes or no on.
Are you saying we should do without Congress?
I'm not saying, maybe we could just help them.
Oh, help them.
To help them actually get it through so we don't have to shut down and
Help them
TSA
help
actually
themselves.
works. Exactly, please.
Just looking for clarification.
Help them help us.
Yes, far more diplomatic. 4:27 on 10s this morning. Coming up this hour, Jack Caffrey of JP Morgan Asset Management on the rout in software stocks, James Egelhoff of BNP Paribas breaking down the latest jobs data, and Brad Erickson of RBC Capital Markets with earnings from Alphabet and Amazon on deck. We begin this hour with stocks rebounding as investors remain focused on concerns surrounding AI and software names. Jack Caffrey of JP Morgan Asset Management writing, "We have too many people trying to achieve a version of the same goal. Winner takes all mentality. Trying to compete for what is now a scarce resource." Jack joins us now for more. Jack, good morning. Good to see you.
Good morning.
Would love your reflections, your reaction to what we've seen in the last 24 hours. What was that move about, and how long has it been building?
You know, I think if we look back over the last several months almost, you actually saw a topping out on a relative basis of some of the enthusiasm that went into the AI trade. And I think that this is being reflected into a return of the real. People coming back to whether it's actual physical data center or a number of assets that are more physically constrained, whether you think about DRAM in the shorter term, which was power, which was utilities, which was grid connections. And if you looked into yesterday's carnage, at one point, markets were down about 1.2% midday, and there were 280 stocks actually up in the index, which does reflect the concentration issues that so many people have been highlighting as a risk in the market. 10% of stocks, 10 stocks make up 40% of the market. You don't have to sell a lot of those to actually create mini positive moves within the market itself. So I think that there is some rotation away from, my pie in the sky long duration equities are coming under a little bit more pressure. Interest rates really aren't cooperating at the long end of the curve. ISM was pretty positive yesterday, so I think it forces a little bit of a pivot that what used to be very special is a lot less special today.
So let's talk about market regimes. Is this just the market regime for the next 5 minutes or so? Or do you believe this is where the money will be made and where the money won't be made?
Ultimately, I think we're going to spend a lot of time trying to look for what seems inconsistent. And if you can tell me that we've gone from 2 years of an industrial recession to now data saying, wow, we actually need to spend real money to engage in all the policy moves that we're hearing about coming out of this administration, I think it does push more money into more different parts of the market. You know, when we look within earnings, we actually see more earnings acceleration coming out of the 490 non-tech leaders than you actually see on an absolute basis. So second derivative investing is going to tell you look for different places and where you've made your money over the last several years.
So the rotation that we've seen so far this year is real. How much are you leaning into it?
As a value investor, I've been waiting for this to happen for a while. Counting the days.
Well, how do you know when it's
Please wait
overplayed?
for chaos.
But how do you know it's not overplayed, right? Because this is ultimately what a lot of people are saying, that we saw the Russell 2000 do very well. It's continuing to outperform. And then when people realize what the companies actually are, they're going to say, okay, hold on a second. Maybe we could go back to some of the other bigger cap names that have more significant balance sheets.
Well, I think, if you look at an environment where banks are told to lend, lending standards are loosening, credit spreads remain really tight, you actually come with an environment that's very constructive for smaller companies here in the United States. To the extent the U.S. also wants to turn its back on the world, again, much more constructive for companies that are much more leveraged to a U.S. expansion. And with GDP now printing at still over 4%, this is still a hottish economy. Inflation is still running hotter than the Fed's current desires. When I listen to some of the commentary out of the nominee to be the head of the central bank, he wants to ignore data, and he wants to lean into more of a philosophical argument for what should be a driver of inflation around government spending and money supply growth. So,
What do you mean ignore data?
He thinks the Fed should be less data dependent.
Well, he's talking about looking at almost like Alan Greenspan, forward-looking. We heard Stephen Myron talk about this as well.
You could say I'm looking at the last print or I'm looking at the last 5 prints to form a trend to give me a sense of what happens. I think, the Greenspan Fed was famously opaque. I think his quote was, if you understood what I said, you weren't paying attention. Or I twisted that, but I think, spirit is certainly there. And moving away from forward guidance, moving away from, quote, data dependency, I think puts the Federal Reserve potentially in an environment of letting markets guess more about what the intent is, and that makes for a more volatile environment rather than a less volatile environment.
You mentioned more money going to policy moves this administration is talking about. We just had Libby Cantrell on, though, from PIMCO, and she was talking about how Trump says a lot, like the 10% interest rate cap. We already passed that deadline. He actually even talked about January 20th. But all of this needs to go through legislation. It needs congressional support. So what do you take? I don't
think this administration feels that congressional support is necessary based on the number of executive orders that they have promulgated.
A policy proposal like that actually isn't law. So when you look at what they're saying, how do you know what you think might actually become law and you want to put money towards?
I mean, unfortunately, I am caught between an environment of listening to what someone says, watching markets potentially violently react to some of those truths or proposed executive orders, and then looking to see what actually winds up happening. Certainly, this is an environment where we hear a lot more about picking winners and losers in terms of flexing government spending, flexing government support, trying to change behaviors, whether it's banning certain investors from being able to invest in certain assets, like single-family homes, on the part of private equity investors or large institutional investors, limiting reimbursements, put the money in the people's pockets, not into insurance companies, carving out divisions of defense contractors for direct investment buy. This is a different version, I think, of a belief that was hoping for a lot of deregulation, but there's seemingly a pretty large asterisk that's gone with that.
Does that present opportunities or problems for you?
It creates opportunities when we think markets wind up overreacting.
Where do you see that right now?
I think in the shorter term, the ideas are a weaker U.S. dollar, which on one hand, it seems like in order to be confirmed as the Secretary of Treasury, you have to deny that's the policy. But the president is out saying, I'm okay with that. And I think that it speaks to why, consumer staple stocks are probably the strongest group in the market, because they are selling goods in local currencies that get translated back in terms of weaker U.S. dollars, and where that they do still seemingly have some pricing. If I told you on Monday that the market's went 0.5% of its all-time high, and that the only sector that's overbought is consumer staples, you'd look at me saying, Jack, I think you're crazy. That makes no sense. But yet that is the market in which we are operating. A lot of strength in industrials, materials. It tells you that things are doing well. Lots of strength in some transports, following off on the comments of the guest right before me, talking about the ports. I think things get really interesting for the rails later this year, because we have no snow in the Rockies, which means probably no water running its way down to the mighty Mississippi, which will probably lead to some other disruptions that we're talking about. Now I've become a weatherman, so.
We'll leave it there.
Yeah,
I'll save you from the weather. Jack, thank you, sir. Appreciate it. Thank you very much. Jack Caffrey there of JP Morgan Asset Management. If you're just joining us looking for a bounce, you're not getting much of one. We're up by 1/10% on the S&P, and the Nasdaq is still traded softer. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thanks. Eli Lilly shares rising in the pre-market. The company reporting fourth quarter earnings that beat Wall Street estimates and forecasting an upbeat year for sales.
We just put the guide out there. We have a very thorough process, and we feel good about the guide that we have in place for 2026. It's still very compelling, by the way, 25%. There is no single pharma company growing at this pace. So we feel about good. We can see throughout the year if we see that continue to trend in the positive direction. But at this time, given all the variables that we have, we feel good about the guide that we have in place.
Lilly's bullish outlook coming as rival Novo Nordisk is warning it could see a double-digit sales drop this year. The partial U.S. government shutdown is over. President Donald Trump signing a funding deal negotiated with Senate Democrats. The agreement extends Homeland Security funding through February 13th. It funds the rest of the government through the fiscal year. Federal Reserve Governor Stephen Miron is stepping down from his post leading the White House Council of Economic Advisers. Miron had been on unpaid leave from his White House role since September when President Donald Trump nominated him to the Fed board. He is serving on the Fed on a temporary basis, filling a seat vacated early by Biden administration appointee Adriana Kugler. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes. Up next on the programme, the morning calls, plus the latest ADP employment data set to cross in just a moment. James Egelhoff of BNP Paribas joins us to break it down from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Software stocks have been in downtrends for 6 months, so I don't think we should be terribly surprised how this is resolving itself. You could say there's a bit of a deep-seek feel to this from 12 months ago. I would kind of keep that in mind tactically, but there's still long-term downtrends.
That was Christopher Verone of Strategas weighing in on the price action of the last day and, for that matter, of the last 6 months. Equity futures on the S&P positive by 0.1%. As for on the Nasdaq, we're down by about 1/3. That's the price action. We've got time for some morning calls with one stock in focus, AMD. First up, Bernstein raising its price target to 235, saying overall profitability was impacted by higher than expected operating expenses. Elsewhere, Bank of America raising its price target to 280. The analyst expecting the company's server business to continue growing double digits this year. And finally, Morgan Stanley lowering its price targets to 255, saying the chipmaker remains a show-me story for the stock to move higher. The stock is moving lower. We're negative by almost 10% in early trading. Let's turn to the labour market. The latest ADP data just crossing moments ago. Mike McKee has more. Morning, Mike.
Good morning, John. It is disappointing numbers from ADP to the extent it gives us any idea of what's going to happen when we finally do get the non-farm payrolls number. 22,000 is the number of jobs that ADP counted up for the month of January, and December's numbers were revised down to 37,000 from 41,000. So two back-to-back disappointments there. In terms of industries, the manufacturing industry lost 8,000 jobs. Construction gained 9,000. It's a tale, I guess, of who's available to work and what companies need the business. In terms of the job creation, it's almost all education and health services, as it has been for the last year and a half or so. 74,000 jobs created there. We did see a loss of 57,000 jobs in professional and business services. Leisure and hospitality gaining only 4,000. In terms of the pay numbers. People who switched jobs got 6.4% pay increase during the month. People who got raises because it's the beginning of the year but stayed in their jobs, 4.5%.
Mike McKee with the latest. Mike, thank you. Downside surprise, 22K. The expected number in our survey, 45,000. With us around the table, James Egelhoff of BNP Paribas. James, good to see you.
Great to be back. Thank you.
We've seen some signs, not here, but elsewhere, that the labour market was firming up a bit coming into the new year. Would you put more weight on that than this?
Look, we think the economy is at a great place this year. We're very optimistic about the outlook. We're looking for very strong growth that's driven by stimulative fiscal policy, stimulative monetary policy, stimulative markets, and the early signs of AI beginning to impact the economy. We think there's a likelihood that some of that is going to slosh into the labour market and support what we think has already been a pretty resilient.
You've got no cuts for 26.
Absolutely not.
Just explain that for us.
We think the Fed is going to react to the data, that it's going to follow the economic outlook and its standard policy framework, regardless of who leads it over the course of the year. So we think that Powell, I think, has delivered the easing he wants to deliver. We had earlier thought there might be room for one last one, but the data has just held up just so well that we've recently taken that out. Beyond that, we think the data will tell the story, and that the story of a strong economy and with a stable labor market and with inflation that's a bit higher than what we think the Fed is looking for.
Well, we're not going to get the data on Friday, so we're not going to have the data that actually proves that out yet. The data that we are getting, this ADP number of 22,000, I mean, it's pretty low. How do you look at this and explain to people this is actually very good?
Well, this is the debate at the Fed, and we saw Governor Waller dissent saying, look, zero jobs growth over last year after we see expected revisions in his estimation, that's not a healthy labor market. And you have others, including Chair Powell, saying, look, immigration policy has changed a lot. There are a lot fewer people coming to the country. A lot of people have left. This may well be a full employment pace of job gains. So our view is that the pace we'll see over the coming year is something on the lines of 50K. So this is a little bit low, the one that we just saw from ADP. But that ultimately is the pace that, in our view, close to that pace, that maintains the labor market at this current level of unemployment.
One of the reasons why a number of people have priced in at least 2 rate cuts for this year is not because they think the economy is going to fall off a cliff, but because they believe that any kind of growth is going to come with disinflation. We saw Pepsi, for example, cutting prices by 10 to 15% in response to some of their efficiencies to try to increase their customer volume. How much do you see this as likely creating a good backdrop for the Fed to be cutting? I mean, because if you don't see any cuts, you don't buy that disinflation story. Is that right?
Yeah, our view is that the AI boom is coming and we're going to see a boost in productivity. But that will also come with it a cyclical boom as well. And part of that is because of the neutral rate rising over time. And part of that is because of the existing level of stimulus that we're seeing from fiscal and monetary policy and from financial markets. So in addition to seeing the boost, the disinflationary boost to growth that you're referring to, we'll see a cyclical boost as well. This is a similar story to the 90s, where the Greenspan is widely heralded for not hiking during that period. It wasn't that he cut into that. It was that he delayed hikes to allow the productivity boom to play out. And we think that that's a likely prospect ahead, is that the Fed will stand pat while it sees strong growth and while it sees some residual inflation pressure.
Well, you seeing the AI boom and productivity being inflationary or disinflationary?
See, productivity on its own being disinflationary, but it will come with more. So we'll see some growth from AI, and then we'll see even more growth. We think we're set up for a very strong year of growth, and that will come with it labor market strength and with a bit more inflation.
But when it comes to the AI build-out, data centers, et cetera, that is, you think, inflationary? The electricity needed, the cost of building?
We think it's a moderate impact on the inflationary outlook. Tech CapEx as a contribution to GDP isn't historically that high. It's just become a bit more concentrated. So we think that that's ultimately a fairly modest impact on our growth and our inflation forecast. What we think has mattered more has been the overall booming business sentiment that has come from AI. We saw ISM earlier this week as a blowout. We think that part of that is optimism from AI that's filtering through to the rest of the economy and supporting activity. That has a cyclical component to it, and we think that will help drive growth, help drive the labor market this year.
I'm intrigued by your read on Kevin Walsh, so let's develop that a little bit more. Governor Myron said this week: I'm probably looking for a little bit more than a point of interest rate cuts over the course of the year. Why would Chair Walsh be that much different to Governor Myron?
So when I think about this, I often go back to James Carville's comment from the 90s, that when he's reincarnated, he wants to come back as the bond market because he can intimidate everybody. Ultimately, we think Fed chairs face fairly strong incentives to deliver pro-growth, pro-market outcomes. Kevin Walsh is well known for being a very well-networked person among financial circles. And we think he will follow the same asset price signals as other Fed chairs do. And that will leave him, in our view, following a fairly standard reaction function. We think he will want to do that because that is what achieves the best economic result. And we think he will face pressure from the rest of the FOMC to do that as well.
Elisa's not convinced. I can just see out the corner of my eye that Brahma wasn't convinced.
Well, no, I just think that if he talks to people in the market, there are a lot of people who actually agree with the Fed potentially cutting rates at least 2 times. I mean, the Wall Street isn't exactly unified in what they think. And more people who come on the show think that the Fed should cut rates a couple more times this year than not. So I guess that's the skepticism that I have.
Look, we're not hawkish, we're bullish. So we think the economy is going to
Now
perform
that
very,
sounds
very
like a
well
speech
this
in
year.
the making, James.
Well, I just got to tell you our forecast. So look, we think the economy is just going to do a bit better. We think the people have been really reluctant to give this economy credit for how strong it is, for how strong the cyclical impulse is. I think the Fed is pulling teeth sometimes, but they've upgraded their forecast of growth to solid. We think that growth is going to be strong this year, and that's going to have implications for the rate outlook.
So you don't buy, though, that growth can be disinflationary, that you can run stronger but not hotter, right? So you basically are rejecting that idea. Where is that inflation going to come from if it's not coming from housing and it's not coming from Lay's potato chips?
Look, you can have disinflationary growth. We just don't think we're going to. We think the economy is going to do so well that it's going to sustain inflation. We think there's a bit more to run on tariff pass-through. We think that's not quite done. We think they've got another year of that at least. And we think that the services market is going to hold up well. And that the data we'll see today from ISM services will tell us some of that story in the absence of any other data this week. We're above consensus for that print. We were above consensus for ISM manufacturing, which I noted was a blowout. So we're looking for another strong print there. And I think as we see the data over the coming months, you will get the sense for how well the economy is performing and the implications that has for a modest uptick in inflation.
James, I'm also skeptical of Warsh not delivering any cuts, and not just because, to Lisa's point, everyone comes on here and says at least maybe 2 we're going to get this year. How did he get the job? How did he convince Trump to put him in that seat if he's not going to deliver at least minimum 1 cut this year?
Well, we think that the important thing here is the relationship with the White House, that Kevin Warsh has a long-standing personal, family, professional relationship with President Trump. And we think that will be helpful to him in the seat in establishing a more normal relationship between the Fed and the White House. What we've seen over the past year is not sustainable. It's not consistent with Fed independence. Kevin Warsh turns a new page and should, in our view, be able to run monetary policy with greater independence because he will have that trust with the White House. We think he will start the conversation with the balance sheet and talking about how over time to reduce the balance sheet. That's where he's made his name over the past few years. We think there's a deal to be made at the Fed on reducing the balance sheet over time. And the watchword for us will be whether Kevin Warsh refers to the words gradual and predictable. Ultimately, we think the market would tolerate a smaller Fed balance sheet so long as it's not a surprise and it comes in a well-communicated way. The market is much less excited about big shocks. And so a big taper tantrum we think would be risk off. But a gradual and predictable transition of the Fed's regime to a smaller balance sheet we think would be well taken.
That's certainly the interpretation of a lot of people in precious metals going into the weekend after that announcement. Just quickly, what's your GDP number for this year?
We're in the mid-2s.
Mid-2s?
Yeah.
Mid-2s, OK. James, thank you. Appreciate it. James Egelhoff there of BNP Paribas. He's not hawkish, he's bullish. I can see that being the first line of a Kevin Warsh speech, can't you?
That's fantastic.
You know,
I mean, it's all
perfect.
the PR, exactly. Talking about how this is the reason why I'm not going to cut rates is because the Trump economy is so strong that I can't do it, and it just sort of works together.
Up next on the programme, we'll catch up with Brad Erickson of RBC Capital Markets, looking ahead to earnings from Alphabet and from Amazon. From New York City, you're watching Bloomberg TV.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no.
Okay, I think now chart is working. Chart अभी work कर रहा होगा. अभी stuck नहीं है. Special guess कहाँ तक भाग सकता है ऊपर देखो वैसे स्पेस तो पूरा है प्राइस के पास. $24, $25 के आसपास तक. बट मुझे लग रहा है शायद एक बार प्राइस को ना पहले नीचे आना हो चाहिए था. लेट्स सी पहले नीचे आता है ऊपर ही जाता है. वैसे ऊपर रेजिस्टेंस ही है 325 30 के अराउंड. दैट इज अ रेजिस्टेंस एरिया. अगर ये नीचे आता तो बेटर था. एग्जैक्टली लेवल पे आया नहीं है तो थोड़ा सा इशू है उस वजह से. Iran ISNA news agency reports nuclear talk with the US will be held on Friday in Oman, following a format similar to previous round. क्रूड ऑयल भी देखोगे साइडवेज ही हो गया ऑलमोस्ट. क्रूड ऑयल मुझे लग रहा है मोस्टली ईरान और यूएस के बीच में जो टॉक होने वाली है उसके लिए रुका हुआ है. किस डायरेक्शन पे जाना है. वैसे इंडिकेशन तो ये मिल रहे हैं न्यूज़ पॉजिटिव ही है दोनों के लिए. सो क्रूड ऑयल के लिए नेगेटिव कह सकते हैं. बट नीड टू सी क्या आउटकम निकल के आता है ओवरऑल फ्रॉम दैट मीटिंग. कल होगी शायद फ्राइडे को है ओमान में यूएस और ईरान के बीच नेक्स्ट टॉक रिगार्डिंग देयर न्यूक्लियर आर्सेनल एंड अदर थिंग्स. क्रूड में भी देखोगे तो ऊपर वही 6000 का लेवल ही है एक रेजिस्टेंस नाउ मेजर। बिल्कुल ये एक रेंज के अंदर फंसा हुआ है नेचुरल गैस सॉरी क्रूड ऑयल 4 आवर टाइम फ्रेम पे भी देखोगे तो एक रेंज बाउंड प्राइस एक्शन ही लग रहा है। 1 hour time frame is also consolidated. क्रूड ऑयल में ध्यान रखना, नीचे सपोर्ट जोन काफ़ी है, स्ट्रॉन्ग लग रहा है अभी फिलहाल के लिए। मुझे लगता नहीं इस लेवल के नीचे सस्टेन कर पाएगा, लोअर एंड पे आता है तो ये सपोर्ट जोन अच्छा है वापस बाइंग करने के लिए कल, क्योंकि ये स्ट्रॉन्ग रेजिस्टेंस था, काफ़ी देर के बाद ब्रेकआउट किया था, तो नाउ मोस्ट प्रोबब्ली इट एक्ट लाइक एज अ सपोर्ट। आज तो क्रूड ऑयल की इन्वेंट्री भी है, अभी 8 बजे यूएस मार्केट ओपन होगा, उसके बाद 9 बजे क्रूड ऑयल की इन्वेंट्री, विल सी दैट।
Tuesday into Wednesday. From New York City, you're watching Bloomberg TV.
belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
We talked some time ago about people hitting the pause button, and their finger is still on it. Hiring is flat, new jobs non-existent, and realistically speaking, companies are not looking at longer-term horizons for planning purposes, and capital investment also very soft.
That was the brilliant Gene Soroka, the executive director of the Port of Los Angeles, on the program in the last hour or so. If you're just joining us, welcome to the program. Equity futures on the S&P 500 positive by 0.1%. Tech is struggling to bounce. That's kind of the headline so far of this session. The Nasdaq 100 is down by another 1/3%, and there's your outperformance once again. The Russell small caps up by 0.5. A headline across the Bloomberg terminal a little bit earlier this morning, about 10 minutes ago, that the president of China was sitting down and having a phone call with the president of the United States, Donald Trump, and that is all the detail we have on that matter.
That's it. We're waiting for a readout. I'm sure the president of the United States, Donald Trump, of course, usually goes to truth. How this usually works, I've noticed between these two individuals, China will always leak that the phone call happened, and then we just have to sit and wait to get the details from President Trump. To Lisa's point, it could be about what's going on with the NVIDIA chips, the fact that those still have not gone through the security clearances to potentially go to these firms in Beijing. It could be about trade. It could be about what's going on with Ukraine, potentially getting a peace deal. We don't know yet, but we await those details.
The story might be that the phone call is ongoing as well. We don't know if it's concluded just yet either. So hopefully in the next 10 minutes we have an update for you. Looking ahead, this is what the trading diary looks like. Later this morning, the Treasury Secretary, Scott Bessent, beginning 2 days of testimony on Capitol Hill. That should be fun. Treasury Secretary's got a decent sense of humour, I think. He's going to push him around just a little bit,
yeah, maybe
antagonise them.
Nicki Minaj, yeah.
I was going to say Nicki Minaj is going to make an appearance behind him.
So look out for that. After the close, Alphabet earnings tomorrow, rate decision from the European Central Bank and the Bank of England, plus another round of jobless claims and results from Amazon. Those two earnings reports critical, given the pushback we've seen to big tech.
Yeah, what will it take for the leadership of big tech to reassert itself at a time where they have not reprised some of the highs that they saw last October? And frankly, you've seen this whole sector really trade sideways since then. So what are people looking for? What do they want? What do they need? And that's what we're going to basically get a test of with Amazon and Alphabet.
Impassioned. Looking ahead to the close a little bit later, right? Yeah. And the earnings that come afterwards. All
I
right.
actually love these earnings.
So do I. You know I do. They're my favourite.
I think
I can't stand the bank earnings. Bank results in the morning, deluge of numbers, don't really read them, move on really quickly.
It's try to come up with a theme.
Yeah, it's difficult.
Yeah, it's tough.
Anyway, let's stay on tech and stay on equities. Looking to bounce back after a rout in software stocks, leading to the S&P 500's worst day in 2 weeks. Michelle Weaver of Morgan Stanley writing, investor sentiment in software has been poor for quite some time as investors expect disruption in the industry. AI adoption or AI disruption has been a theme this earnings season. Michelle joins us now for more. Michelle, good morning.
Good morning. Thanks for having me.
What is the difference between adoption and disruption right now?
So adoption is really where are we seeing the benefits from AI? Most of the returns so far have accrued to the enablers, the people building the picks and shovels, allowing the data centers to be built. Now I think companies or investors are really starting to think, what are the implications? What companies are going to be disrupted? So with the news you heard yesterday, software stocks sold off. As these AI models become more capable, where could that disrupt business models? And software has been the area where investors have been the most skeptical. It's bleeding out into some of the data services companies, but investors are really just thinking, what's the future in this AI world?
It looks like a massive loss of pricing power for those names.
Yes.
Who are the winners?
So if you're able to adopt AI into your business model and make yourself more efficient. So we've already seen that for some companies. So if you're able to, make your computer programmers way more efficient, if you're able to make your salespeople way more efficient, if you're able to make your warehouses way more efficient, those are the winners.
Right now, I'm just struck by the fact that we're seeing pretty big disruption and some pretty big swoons in stock prices, and we're not seeing broader dislocation. Do you think that that's sustainable?
I think it's more limited for now. I think the really important AI catalyst for everyone to keep in mind is what's going to happen when the next batch of models come out. So the labs were able to assemble 10x the compute to train the next batch of models, and those should be coming out this spring and summer. So once we see the capabilities there, I think that's when people are going to really start thinking about what that means for different business models.
Based on what you're hearing, what areas, what sectors do you think could be most disrupted by those future models that are going to come out later this summer?
So I think a lot is being focused on the services where could AI just come in and do the job instead of the company. So legal is a big one. That was part of the news from yesterday. But if you spent a ton of money on lawyers to draft a prospectus for you, and now an AI software is able to come in and do that, that's hugely disruptive.
What about taxes? editing a book. I mean, isn't it almost every single industry? It's pervasive.
It's pervasive, but there will also be winners. This is not, going to come in and disrupt every company in the market. Companies are trying to position themselves for this post-AI future, and we're seeing the number of quantifiable benefits from AI adoption rise for companies. So they are seeing returns here.
How long do you think it is, though, to see proper winners from this? John mentioned Napster before. Obviously, I mean, I pay for Spotify. I didn't pay for Napster, obviously, and I felt like, why should I be paying for all these CDs? But at some point, we got to a place where I'm paying for a service for that music. How long is that timeline going to be?
I think they're already emerging. I think 2026 is where we're really going to focus in on AI adoption. Our tech team runs a great survey of CIOs, and they say that by the end of this year, 81% of companies expect to have some AI product live by the end of the year. So past that testing phase, we are going to start seeing these come online.
Let's take it to the index. So many people watching the program have their exposure to equities through the index passively, market weight. We can see the membership, we can see the weightings. Given the risks and the opportunities right now, is this a world where that index can generate decent returns?
Absolutely. So from an equity strategy perspective, our price target is 7,800 on the S&P for the end of this year. Even early last week, we went up and touched 7,000. I think we're overall still in a very strong position for the market and in a position for these returns to broaden out. It's not just going to be limited to mega cap tech or some really big winners. We're seeing the earnings picture, the fundamental picture, improve for the median company. For the median company in the Russell 3000, earnings is up 13% year over year tracking this quarter. So we are seeing a fundamental improvement.
Lisa mentioned existential risk at the very beginning of the program. So let's talk about that, as you'd expect. And the prospect of systemic risk. When you see what's building in, say, private market firms, and I don't want to overdo it because we don't have a decent read on what they're sitting on and the prospect of loan losses and all of that stuff, but is there a prospect that something happens here that drags down investor sentiment wholesale, that is a threat to your outlook?
I think, one of the bigger threats for the broader market we're thinking about right now is in a theme we're writing about called societal shifts, and what does AI mean for the labor market? So far, we've seen very few, direct announcements of AI-driven layoffs. So companies saying we're going to replace these workers with these AI tools. But it was something you heard a lot about at Davos. Was tech leaders talking about what does this mean for the future of workers? What does this mean for the future of labor? I think you're going to see some big shifts under the surface starting to happen. Not necessarily a drawdown in the total number of jobs, but the types of jobs people are doing, I think, are really going to start changing under the surface.
And does that fall onto Washington's radar and they push back against development? How do the dominoes fall from there?
I think we're going to start seeing more policy-led announcements. I think the policy focus right now on AI and its impact on consumers has been through the power lens. Power is still one of the main bottlenecks to building out AI. But consumers are really pushing back and saying, what does this mean for my power bills? And you're starting to see the political chatter really pick up around that, and how can we stop that?
Michelle, it's good to see you. Thanks for breaking it down. Great. Michelle Weaver there of Morgan Stanley, exactly what you were talking about earlier on.
And it's not just the fact that the administration is picking up on that. They're basically telling energy companies you need to subsidize the electricity bills for consumers. And that's going to be a huge deal going into the midterm.
We've all seen the pushback over the past year, never mind the past few months. It's building.
Look, if you're looking for a clean narrative, you're going to have to wait until 2027 or 2028. And that, I think, is what keeps coming clear. And we're all sort of searching for a neat way to sum up what feels very dramatic. And it's sort of one conversation after another of people pushing back. That narrative is too cute. You better watch out for that one. And this is why it's so difficult. And the reason why people say, look at names, go through, the balance sheet starts to become more important.
Chris Ferrone of Strategas, I think, with the quote of the morning so far. Don't hold on to those narratives too tightly. Things can change very, very quickly. Coming up tomorrow, Seema Shah of Principal Asset Management, Mark Mahaney of Evercore, Lizanne Saunders of Charles Schwab, Abby Yoder of JP Morgan Private Bank. From New York City this morning, good morning. This was Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first lessons opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He say, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Here to show you the market moves before the market moves you. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Fears of AI disruption ripple through markets, hitting software makers and ad agencies, as well as finance and investment firms.
A divergence in pharma. Eli Lilly sees surging sales. Novo Nordisk forecasts a steep decline.
And from Santander's Webster takeover to NVIDIA's OpenAI investment, deal making is back ahead of the debut of Danny's new show, Bloomberg Deals.
Oh, I didn't know we were going to do that at the top of the show. Thank you,
yes.
Matt. I happen to be looking forward to it, too. One of the things, by the way, we're going to cover on
Wait,
Deals.
Don't you just want to tell everyone first?
What, that it?
Kicking off at noon.
Sorry, yes, kicking off.
Every Wednesday. It's an hour-long program starting today.
Thank you, yes. With Matt as our official hype man of Bloomberg Deals, our mascot, if you will. I'm also looking at some of the software stocks. Are these the deals gone bad? They are in pain, or they were in pain yesterday. LegalZoom Trade Desk got hit really hard. They're down again this morning. Some of the private capital firms also down. It's this fear that they're facing a reckoning that AI tools can automate the businesses. So, yes, Matt, a little bit better, but I mean, wow, yesterday was so tough for all the software and any investing stocks, regardless of how much exposure they have to
Yeah,
software.
it was rough. We're going to talk to Mark Douglas, the CEO of Mountain, about that this hour, next hour. Eli Lilly gave an upbeat forecast as obesity drug sales remain strong for them. Meanwhile, rival Novo Nordisk says sales could drop as much as 13% this year because of intensifying price competition in the weight loss market. So Lilly shares in the pre-market up 8.5%. Novo down more than 4.5%, Danny.
Another set of earnings we also got this morning, AMD. The sales forecast underwhelmed investors as it struggles to make inroads with AI developments. Let's discuss with Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. Mandeep, it just feels like another case of where expectations are high. What it was like $9.8 billion is what they forecast, and that beat estimates, but the highest was 10, so we decided it was bad and sent shares down 9%.
And also the guidance that they gave for the March quarter. Anytime, a semiconductor company right now guides to a sequential decline, even though they're being conservative, you will see this kind of stock reaction. And in the case of AMD specifically, we saw how, the storage companies benefited from this build out. The memory companies obviously had a great run. The thinking was the CPU side of AMD would do really well because, you just not only rely on the GPUs, but also the other components within the data center to build this infrastructure. So we didn't see that kind of a bump on the CPU side of AMD as one would have expected. And I think that's where Intel probably has done better on that front.
So that's, though, the hardware side. And, on the Odd Lots newsletter, Tracy Alloway put up a striking chart of tech hardware stocks, especially the chip makers, rising, and tech software stocks just plummeting. And, of course, yesterday we got, I guess it was just like a press release from Anthropic saying, hey, we can do legal stuff too. But obviously, Joe Weisenthal's been using Claude Code or whatever it's called to write his own software. And he's not even like a programming dude, right? So I guess anyone can do it.
Anyone can do it, but look, I think extrapolating that all the existing software companies have no terminal value is probably not the right framework to think about, the level of disruption. And that's where I feel yesterday was one of those days where you could see, everything in the software space was getting hammered. Now, the question that investors have to ask is, what are the type of things that AI or Claude Code could do better in terms of productivity versus just replacing an existing system that's working well? And that's where I don't buy the thesis that, these coding agents would rewrite a lot of the existing software critical systems that are currently being deployed. And I do think there will be that recognition at some. Yeah, there will be that recognition because you can't say, oh, everything in software is dead in terms of their growth rates. And ServiceNow, for example, guided to 20% plus growth rate. Now imagine within the next 3-4 years, they're saying they will double their revenue. And the market is obviously not believing
within
them.
the next 3 or 4 years, they'll probably do like 16 acquisitions, right? You're talking about ServiceNow.
Yeah, but...
So I'm sure the revenue will double. Yeah.
I think that's where you have to use that lens. What is the organic growth, to your point? And a lot of these software businesses still are growing organically 10, 12%. There is certainly a headwind to seed growth, and that's the business model change. It has to be more consumption-oriented. The gross margins will take a hit. I don't think we have seen that in the numbers yet, but if you are buying AI compute, that's a much higher cost for you than the traditional CPU compute. So your gross margins have to come down. But all these are manageable because they will be offsets in terms of what they could do on the cost side. And that's where we will be in that phase of transition. But I do think a lot of these businesses have very high gross retention. Until the gross retention starts to come down, which is right now 97, 98% for most, system of record companies, I just don't think, you can make that assumption that terminal value is going away.
All right. Mandeep Singh there of Bloomberg Intelligence. He runs our tech coverage for us globally. I'm taking a look at Uber shares. They are higher despite a weak profit outlook as the company invests hundreds of millions of dollars into autonomous tech and plans to launch robo-taxis. Bloomberg Tech's Ed Ludlow joins us now. So, Ed, how big is this push for AVs at Uber, which we normally know as a company that sends us a driver in a car, right?
It's big, and I don't know what you did, but the stock ticked into lower territory after we just came to air. The gyrations of the stock in the pre-market from a decline of 9% to a gain of 3%, now down 0.6%, basically summarize the anxiety and internal struggle of the market and the company to predict what the world would look like if cars are driven by humans or driven by themselves, robo-taxis, right? The financials, they gave a pretty weak forecast on adjusted EPS, which is a kind of new metric for them separate to their prior EPS guides, and EBITDA was light, but they didn't account for it. No one on the call, thank you, sell side, asked about it either. What they said is, we're launching in more markets around the world for robo-taxi through partners. capital light model where they rely on the technology provider. They just do the platform, fleet management and matching with a ride. And they've also promoted somebody from one of the internal finance teams to be CFO, who basically, if you follow this person, Balaji Krishnamurthy on X, is a bit of a robo-taxi evangelist, really believes in Uber's model there. But, the market is trying to make sense of like, well, hold on, your core metrics of human-driven rides were quite strong in the quarter gone. Your outlook's quite light. You don't give us a reason why on the profit side. And longer term, clearly they're committed. I know that doesn't answer your question, but this was a hell of a mixed bag of an earnings print.
Just on that CFO, Ed, if he is someone who's been very bullish on driverless cars, does that change at all the trajectory of Tesla, or not really? It just sort of Uber rather. It just sort of emphasizes where Uber is going anyway.
Uber has had a mixed history of robotaxis, right? For a period of time, they were working on this themselves, both on the hardware and software side. They shut that program down and transitioned to a strategy of making equity investments in a wide range of different companies, from automakers to the sensor providers to the software stack, and basically saying, we have the Uber app, we are going to partner with these different companies in different jurisdictions, and they will provide the tech. We just hook you up with a rider. And the warning that they're giving right now is that there is not going to be a net zero sum world where suddenly robotaxis displace their human-driven business. They don't see, because of regulations, a profitable opportunity there for some time. So they're trying to explain that away for the interim.
Ed, thank you very much for that. That's Bloomberg Tech's Ed Ludlow. Now, elsewhere in earnings, Eli Lilly forecasts an upbeat year for strong sales on demand for its weight loss drug. But its rival, Novo Nordisk, is warning investors could see a steep drop in sales this year.
While we're disappointing the investors today on a short-term price decrease, they will be quite happy to see that we will be able to obtain a lot of gain from the volumes that entails within diabetes and obesity.
We just put the guide out there. We have a very thorough process, and we feel good about the guide that we have in place for 2026. It's still very compelling, by the way, 25%. There is no single pharma company growing at this pace.
Katie Greifeld, co-host of The Close, who did both of those excellent interviews, joins us now. Katie, it just feels like such a change in fortune. It used to be Novo was this giant with obesity medication, and Eli Lilly feels like it's really just come and take over.
Yeah, and these two earnings reports really encapsulate exactly that. I mean, you had Lilly Zepbound take the lead from Novo's Wegovy back in 2025, but think about what we learned just in the past 24 hours. First of all, you had Novo pre-report their earnings. They actually came out with that bad news early. They said that basically sales could drop as much as 13% this year. That was a surprise. That was below even the most bearish analyst forecast. And then you had Eli Lilly this morning, totally different landscape. They basically expect their sales to grow as much as 27% this year. And what's notable is that Novo actually rolled out their obesity pill in the past 4 weeks. Eli Lilly hasn't even gotten there yet. They expect to do that in the second quarter. These numbers, as I understand it, their forecast, and I spoke about this with the CFO, they don't include the obesity pill. So it's going to be interesting, of course, to see that uptake.
I have kind of a contrarian take on the pill. As someone who barely notices the shot that I take every week, why would I want to take a pill every single day? Especially when you have companies like Amgen who say they're going to come out with a shot that lasts for 3 months.
Wait, that's not crazy. People take like vitamins every day. Do you not do stuff like that?
Yeah, but you can't eat or drink within a half hour of when you take the pill. It's like a big deal to remember how to do it, when to do it, what you need to do around it, whereas you could just take a shot that isn't really a shot. I mean, it's not like it hurts, and then not do anything for a week or for 3 months.
Well, Matt, actually, both companies would be really happy to hear you say that, because the hope there is that it's going to expand the market, that they're not going to cannibalize the shots. And again, you had Novo roll out their pill in the last 4 weeks. The CEO told us yesterday that they've seen over 170,000 patients start to take the shot in the past 4 weeks. So again, they're hoping to play up volume here, because we know that pricing is going to be a problem for both of these companies this year. So again, the hope with the shot is that it's going to create more patients, not necessarily have people switching.
All right, I have a lot more to ask Katie, but I'll do it in the commercial break. Because I feel like also there's a story around CVS and where people can get access to these if they want to get the terzepatide or the semaglutide instead. Katie Greifeld, co-host of The Close, covers the healthcare industry for us, as well as ETFs, every Monday at noon for an hour. Catch her Eli Lilly CFO interview throughout the day. Let's get a look at some of the other movers on our radar. Super Micro Computer Incorporated, SMCI, is among the S&P 500's top movers this morning after reporting strong revenue last quarter.
And some deal news. Texas Instruments on a Wednesday is buying chip designer Silicon Labs, a $7.5 billion deal that will help lower manufacturing costs.
Brookfield Asset Management tapped Connor Teskey as its next CEO, succeeding Bruce Flatt's 23-year tenure. Bruce Flatt, a legend in the industry, is going to step down as the CEO. I would like to ask him a load of questions.
Well, funny you should say that, because Bruce Flatt will be joining the premiere of The Deal Show around 12 p.m. noontime. I should point out he is still the CEO of Brookfield, just not of Brookfield Asset Management. So many questions. It's the end of an era. Really excited to have this conversation, Matt.
Yeah, I'm excited to talk to Mike Mayo, because the famed bank analyst from Wells Fargo says there will be more consolidation ahead. He tells us the main suspects that he's watching next. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something. Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Getting out of high interest, look at what's making headlines around the world. President Trump and Chinese President Xi Jinping spoke by phone earlier today. According to a Chinese news agency, the call comes ahead of a proposed meeting in April. No details were released, and it followed Xi's recent call with Russia's President Vladimir Putin as well. Federal Reserve Governor Stephen Myron is stepping down from his role leading the White House Council of Economic Advisors. Myron had been on unpaid leave from the CEA while serving at the Fed, an arrangement that drew criticism from Senate Democrats over Fed independence. In a letter to President Trump, Myron said he was honoring a promise to fully sever White House ties while remaining at the Fed. And Spain's biggest lender, Banco Santander, is buying Webster Financial for $12 billion. That's its biggest push yet into the U.S. The CEO, Ana Botín, spoke with Bloomberg TV about the announcement.
They have 80% commercial business. We have mostly consumer. Together, we're going to take the Santander US, now with the corporate bank, also to 18% return on tangible equity. That is best-in-class profitability by 2028 among the top banks in the United States. Again, US has always been a co-market. This is a bolt-on but strategically important acquisition because it drives us to our ultimate goal, which is to be one of the most profitable banks in each geography.
And the deal is expected to close later this year. Danny, we have the perfect guest to talk about this.
Yeah, we do, because Wells Fargo sees a new era of bank consolidation happening. Mike Mayo says that we anticipate more bank deals given pent-up demand, greater need for scale, and a generational change in regulation for faster and more certain merger approvals. Let's get right to the man himself, Wells Fargo head of large cap and mid cap bank research, Mike Mayo. Mike, thank you so much for joining. What an exciting time for the industry and for you. You must be a very busy man. What is the biggest driver? Because that need to consolidate has been around. Is it just that the regulation is letting the banks do this now?
Well, scale has never been more important. And to put things in context, the bank that just sold, it would have taken them a decade and a half of spending to equal what JP Morgan's going to be spending just on technology this year. So it's never been more competitive. But also the regulatory environment, it suppressed the level of bank mergers. I think that was a huge mistake. It was just a gift to Jamie Dimon, like just increased the moats around the business. And then the regulators are approving deals, faster with more certainty, and I think that's a good step. So, look, there's a need for economies of scale. There's an ability with regulations, and then we just had this big merger yesterday. I think this is the start of a new era for bank consolidation. I think the window is literally now.
So the question then is, who's next, Mike? And how far do we go? I mean, there's like 4,000 or 5,000 banks in America, right?
Yeah, 4,600 banks in the U.S., down from 15,000, a few decades ago. And I think that number could be cut in half over the next decade. And to say, who's next, I, resurrected my bank takeover model from the 1990s when we had a lot of consolidation. And we have a new report out today. And what we do is we look at book value and adjust that for hidden book value. Accounting has its shortfalls, so we mark to market the balance sheet. And I found that hidden book value typically equals 50% more than book value. So if you look at stock prices relative to franchise value, several banks trade below their franchise values even before an acquisition. So if there's an acquisition or not, then I think these stocks should go higher, like Bank United or Bank of California or Associated. Those are three banks all trading below their franchise value.
Bank United, Bank of California, and
Associated.
Well, a lot of these deals, the majority that we've seen take place are smaller regionals or super regionals buying another regional bank. Santander was different yesterday, coming in to buy an American bank. Do you think that's a rarity, or could we see more deals that look like that, more cross-border deals, or more bigger banks buying smaller banks?
Well, that was a surprise to many people. Banco Santander, everyone asked, who's the buyer? Not many people mentioned Banco Santander. So it's a reminder that it's not just U.S. banks that are buyers. There's foreign banks. This is a super attractive economy with great capital markets. The U.S. is still the place to be. And so I think there's pent-up demand. And the sellers, by the way, banks really size 20 through 100, stared into the abyss 3 years ago. Remember with the regional bank failures? So if I were them, I would think very seriously about, given the good economy and interest rates are fine, and especially the political and regulatory environment, this is a moment when they probably should think about selling. And long term, can they compete against the Goliaths of the world? So Goliath is winning is still our theme, but we have a barbell strategy that's consistent with my weightlifting and everything else. But on the one hand, we have the Goliath like Citigroup, which which is my number one pick. And on the other end, we have kind of this takeover basket with those three names and others.
By the way, I just want to point out that there was a report a few months ago that Chris Waller could lift, and I'm talking about deadlift, right? Or maybe a squat, 300 pounds. It wasn't a bench, I'm sure. But you're up to what, like 450, 457?
Yes, so Governor Waller has some videos online of deadlifting over 300 pounds, which is amazing. But I'll say I've passed 450 pounds. So if he were considered for the Fed chair, maybe I could be considered by lift. I'm not sure what the criteria are.
I want to just ask about the new Fed chair, because we did find out Kevin Warsh is, if and when he is approved by the Senate, going to come into that position. How will that affect the regulatory outlook for M&A? Do we know what Warsh's take on that is?
Well, Vice Chairman Michelle Bowman has been very clear that regulation has had too much mission creep. So when I worked at the Fed 35 years ago, the rules were simple, but not that effective. Then they became complex and strong, and I think the goal now is to make them simpler and strong. So eliminate the bureaucracy, eliminate the red tape, make the clears for capital, make the rules for capital clear, and focus on safety and soundness. That's the core mandate. And everything else, let banks be banks again. So it creates the potential that banks can do more lending and also the ability to pursue more deals with more certainty on a shorter time frame.
Is there not this fear, though, that you get change at the midterms, a changing administration, and things go backwards?
I don't think they go backwards, but that's the other reason. The moment is now. If you're looking to do bank deals, do it before the midterms. I think you really have a couple years. And with the change in presidency, change in overseers, the sentiment can change. But the moment's now, the next 6 months. If you're a bank out there, I don't care who you are, you're thinking about either buying or selling, or how do you fit in this consolidation puzzle.
Hey, Mike, this was excellent. We need to figure out how much Warsh can bench. I don't know if we know that. That's next. Mike Mayo, thank you so much for joining us, Wells Fargo head of large and mid-cap bank research. By the way, today at 12 p.m. noon, if you haven't heard, it's the debut of Bloomberg Deals. We'll be tracking all the deals, including regional banks. You're watching Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
A check on futures ahead of the opening bell. S&P going a lot of nowhere. NASDAQ 100 futures weighed down by some poor expectations from AMD shares, down 1/3 of 1%. Russell 2000 able to put up some outperformance yet again. It was able to outperform yesterday too. It was up 1/3 of 1%. Less than 4 minutes until the opening bell. We're going to talk about the rotation out of big tech and software with Threadneedles and Barry.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Investors will be watching today to see if we bounce back from the almost $300 billion AI spooked sell-off that we had in yesterday's market. Right now, futures are a little changed on the S&P. NASDAQ futures are still down. The small caps are up, but everything from standalone software companies to consultancies to financial services companies sold off yesterday on the concern that AI, like Anthropic, will eat their lunch. You can see Citi ringing the opening bell at the New York Stock Exchange, and we have, and Citi's done very well, obviously, among the big money setter banks. And we have VenHub ringing the bell at the NASDAQ. They've just gone public, I think, yesterday or the day before, and they operate like, in their description is every buzzword you need. AI, robotic, staffless stores.
Is that one of the, like a model store?
Maybe that's a model of their store. It looks like Yeah, in any case, apparently you go in there, you buy something, it restocks, it takes inventory, it does everything without a staff.
I was like, do you remember there's once a VC that had an idea called bodega? And it was that. And it was like, we're replacing the bodega. And people revolted. They were so mad. They were like, we love our bodega. We like our bodega cat. Stop taking jobs with these people. Yeah. So it's kind of similar.
Yeah, it's interesting.
Yeah, very interesting. Anyway, speaking of interesting, I'm looking at Eli Lilly and Novo Nordisk this morning. Eli Lilly, they gave an upbeat forecast. Obesity drug sales were strong. Meanwhile, Novo Nordisk says that sales could drop as much as 13% this year on intensifying competition in the weight loss market. So a change in fortune between the two of them, Matt.
All right, software stocks and private lenders are steady today after the huge sell-off I was talking about yesterday. This is right now the live trade for LegalZoom, Trade Desk, and KKR. But all of these stocks got hit hard yesterday because traders worry they face a reckoning from AI tools like those offered by Anthropic. Last week, Blackstone's John Gray told us software is among the sectors he is closely watching for disruption.
There's definitely more risk in certain industries. There's no question that you have to think about some of the lower value IT services businesses. And when you think about things like software, for instance, is it a vertical software that is sort of the system of record for a business that is very hard to rip out? Or is it some low-level horizontal software where it's easy to change and therefore the AI could lead to a big erosion in your business?
Let's bring in Threadneedle Ventures founder Ann Berry. She's with us here on set. So, Ann, you know, this is something that we've talked about previously. It's not a new idea, obviously, but it's gaining steam in terms of fear in the market. What do you think?
Oh, it's absolutely gaining fear. And I think we're actually seeing companies now willing to make bold moves to deal with it. And I'll give you one example. It's not AI in the purest sense, but it's disruption and a board saying we've got to move. And that's the PayPal exiting of its CEO. For me, that sets a precedent now for what a lot of these software businesses will have to do. Look hard at their management team, see if they're AI savvy, and frankly, make some swift moves if it looks like they're not.
Well, for a lot of these legacy companies, one argument I've heard is that they'll be fine. They have a customer base. Customers are sticky. Yeah. So, yeah, maybe there's like something cheaper that comes to market, but people aren't really going to switch and they can adopt and they'll be okay.
Yeah, I don't buy that. And I'll give you a specific example, Adobe. Right, what an absolute disaster that has been in recent years. And, you know, we heard those comments from John Gray just now. That, to me, feels like something that could get ripped out, that does feel a little bit lower level. And it's frustrating because it's had the benefit of time, incumbency, and scale to get ahead of the curve, and it just hasn't done it successfully.
So what do you think is a moat necessary? And I ask you because you interview so many CEOs on your YouTube channel. Who talk about this. Yeah. What kind of moat is necessary for a company that offers solutions, right, which every company says they do, that they don't get eaten by AI?
I think it's two things, but they both have to exist. I don't think it's enough anymore to have just one of them. I think it's a huge repository of proprietary data, which in Adobe, for example, ought to have, right? But it's also having the innovation when it comes to the actual tools with which to go and mine and apply that data. And I think both of those need to come together at the same time. So one example that's done this, you and I have talked about Palantir, we talked about the lottery ticket. That is demonstrating if you've got both at the same time, at least from a share price perspective, you can win. If you've got one or the other, I don't think it's looking so optimistic.
Can I ask you about what it looks like from the C-suite, just, you know, piggyback off what Matt said? Because I was speaking to a very senior deal maker yesterday who basically said one of the reasons deals are happening is because there's a lot of anxiety among CEOs right now, that they want to do big transformations, maybe they're nervous about technology. Are you kind of sensing some of the same feelings out there?
I think what I'm hearing you say, Danny, is that transformational acquisitions can cover sins or can band-aid for growth. And I do think that there is some truth to that for some period of time. But ultimately, the truth does out in the numbers. And when you do these transformational deals, if the synergies aren't realized, if the culture of the company is disrupted, if you lose your best talent, if the growth doesn't materialize, then that ends up backfiring. I do think there's anxiety. I think the most thoughtful CEOs and boards are being very sort of meticulous in their research to figure out how to go after it. I think deals are being driven by a couple of things. People have got big cash balances. They're looking at ways to deploy it. In places like pharmaceuticals, they've got issues with pipeline falling off or not materializing. So I think it's different by sector.
Activists, obviously, are a big push as well. Yes. And you have been watching Pepsi very closely. Yesterday, they they did kind of a 180 on their strategy, right? They wanted price over volume, and then they were like, actually, no, we're going to cut prices.
No. Yeah, look, I do credit them for at least saying it's not working, so we're going to have to change strategy. It's actually very difficult for public companies to do that versus getting entrenched. But the thing I took away from Pepsi, and you're right, I've been following the money. Elliot's been in there, a very thoughtful strategic plan. There was a lot of chatter in the Pepsi results about performance beverages, the rise of non-alcoholic and emerging markets. I looked at all three of those and said, actually, Monster is the place to go look at. That's actually much better positioned, in my opinion, to win on all of those three fronts.
How much of it is very Pepsi specific versus a consumer problem, that they feel the need to cut prices and Pepsi is responding to that versus just general issues at the company?
Also, maybe consumers aren't eating as much potato chips, or Doritos.
Yeah, but Pepsi has healthier sodas.
There's nothing healthy
kind of
that
pivot,
they offer
right?
than water.
Well, the probiotic sodas, right? They've done pretty well. We'll find out. We'll see what they do.
Sure, that's really healthy.
Such a cynic over here. I think it's a consumer issue, Danny. I think we've seen it across the board, and I think Pepsi's been slower to respond to those shifts in consumer preferences than others. I think it's going to figure it out. Again, I think it's got an incumbency benefit. If it can double down and use it, I think it could do well over time. But these things aren't linear. Turnarounds are hard, and I think Pepsi may figure it out. It's just going to take a while.
Lululemon is another company attempting once again a turnaround.
Yes.
Right. The biggest one that I remember was caused by Chip Wilson saying some people on this set saying that some women should not wear his pants.
And
right.
then they do another see-through leggings snafu
and
yet
then
again.
They have another problem, and now Chip Wilson is the one doing the critique here.
Yeah, it's lost its cool, right? I think he's been saying from the sidelines. Lululemon, to me, is sort of the PayPal of the wellness athleisure apparel sector.
What's PayPal, Danny? The Afghanistan payment method?
Yes, because instead of empires, it's been hedge funds that have been in there, yes.
Wow, okay,
Yep.
the metaphors and the analogies get ever more terrifying. Lulu, to me, again, like a PayPal, it was a first mover in tapping into this idea that wellness and apparel was going to be the next frontier, and that athleisure would become something that we'd all wear more of the time than we thought we ever would. It got there, it had in-store experiences, as it was ahead of the curve from that perspective as well, with yoga in store. It did have a cool effect, and it just lost its edge. And I think it got complacent. It didn't have the right leadership in place. I do think there's enough residual goodwill in that brand. It could turn around, but they need to get someone in there pronto.
Like PayPal, and watch their stock drop 20% in a day?
Well, PayPal, look, the question to me that's interesting, that share price reaction, to me, was the market's way of saying the new CEO is not the guy. He's been on the board for, I think, 6 or so years. He's a very impressive executive, but he comes out of a world that isn't consumer-facing payments, that isn't dealing with the likes of the rise of BNPL from fierce competitors. It's a very different product category.
And this was fantastic. Always so nice to have you on.
Thanks for having me, guys.
Dead Needles and Barry. Come back soon, please. Let's get a check on where your equity market stands at the moment, because coming off the back of a very ugly day yesterday, where the breadth was good yesterday. You had more movers to the upside than downside, but because you had so many tech-heavy names, that's really what brought us down. You still have good breadth again today. Almost 340 stocks are on the upside. And we're doing okay because the big tech stocks are doing okay. Apple, Microsoft, Alphabet, they're on the top there. Eli Lilly, after very strong earnings, up 8.3%. To the downside, look at how much AMD is getting hammered today. It was their outlook, some disappointment, even though they did say that some sales to China have started to take place in some of their older models. NVIDIA does poorly too. Apparently they're going to spend $20 billion investing in OpenAI. Meta, Boston Scientific also down there in the loser column. Looking at the sectors this morning, Infotech is down because NVIDIA is down. Apple not helping it very much. Energy, that's at the top of the pile, as oil continues to gain steam. Materials, consumer staples, industrials, and utilities round out the rest of the top sectors. Matt?
All right, so pretty much everybody gaining today except for IT. Coming up, software struggles. We're going to continue this focus throughout the program as AI disrupts the business model with highly leveraged loans as well. We'll discuss that part of the market next. This is Bloomberg Open Interest.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let's get you some top calls, the analyst action that we're watching this morning. First up, BTIG upgrading Cloudflare, saying investors are underestimating its growth opportunity. They say that Cloudflare can keep growing at a strong pace as demand rises for protecting and speeding up websites. They also see the recent weakness as a buying opportunity, and buying we are up more than 1% this morning. Next up, Citizens, they cut their view on Booking, saying that growth may slow because new AI tools can make travel websites less essential by letting travelers plan and book trips in one simple conversation. Mizuho, on the other hand, is upgrading, saying AI fears are overblown. Matt, I would totally book something through ChatGPT, wouldn't you?
Yes.
Yeah.
Already do.
Oh, okay. Well, there you go. Maybe the fears are not overblown. Shares are off 4.3% this morning. Finally, Baird, they upgrade Capri Holdings, saying that recent results were better than they looked and the reaction was overdone. The firm points to early signs of improvements at Michael Kors and better profit margins. Those shares only up 0.4%, Matt.
All right, so we're watching those stocks on upgrades and downgrades. Software companies aren't the only ones facing a reckoning from AI disruption. The firms giving loans to those companies are also in the crosshairs. Shares of KKR and Blue Owl were down as much as 10% yesterday over their ties to the software firms that are struggling in the AI era, or those that we maybe speculate are struggling in the AI area. Let's discuss this with Bloomberg Tech's Caroline Hyde and Bloomberg senior private credit reporter Silas Brown. Silas, let me start with you because how exposed are these companies? You know, I hear Danny talking to these private asset, for the most part, guys a lot, and there's always a big share of their money that's lent out to software companies.
Yeah, it was really the darling industry. I mean, it was the industry that could attract the tightest pricing, the loosest lender terms, and the highest valuations on the private equity side. And I think that kind of probable over-exuberance is now being tested as this kind of like great leviathan of AI starts to come into view. And I think one of the defining characteristics of private markets, both on the equity side and the credit side, is that it's pretty hard to get out of the trade once you're in it. And so when the industry has to kind of come to terms with paradigmatic shifts, like what we're seeing now, it can struggle. And I think that's reflected in the share price and in some valuations of the debt too.
So, Silas, that's on the private side. Caroline, when it comes to these publicly listed companies, it's a weird one because we knew this threat existed. And it felt like just like the tiniest thing that pushed them over the edge in this Anthropic press release about legal software.
Yeah, a little update. Here we go. Now you can use our generative AI large language model to be able to do contracts, to be able to do an awful lot of the grunt work in law. We knew this was coming. We know that Harvey AI, that other startups in the space had already been deeply selling into the legal sphere, already been trying to disrupt, showing that you didn't need the most junior lawyers anymore. But suddenly Anthropic's prowess, and look, Anthropic has been riding a high, whether you think about what they've been offering in terms of co-work, whether you're thinking about all the vibe coding. Don't get me wrong, OpenAI has exactly the same thing on offer as well with Codex. We are, though, suddenly feeling that the straw is breaking the camel's back, that we've got some post-earnings, ServiceNow didn't live up to expectations enough. None of these companies are quite managing to throw back this instinct from many that they're about to be completely upended in their business models. So no wonder you're seeing $2 trillion evaporate from the market capitalization on Goldman Sachs' basket of software companies, because people just need some tangible evidence that they're not going to be upended in their business model. And thus far, earnings ain't doing it.
You know, Silas, Odd Lots has a great newsletter on the Bloomberg terminal, and they talk about leveraged loans being the canary in the coal mine, or rather they cite someone who made that reference. And I didn't realize there are more leveraged loans now than IG. It's massive, and they've been doing very poorly broadly, you know, even outside of software. Is that part of the problem for companies like KKR, Blue Owl, and other private credit issuers?
Yeah, and actually, I mean, as to what Caroline said, I mean, it has been pretty obvious for quite a long time, and I'm sort of slightly kicking myself that we couldn't get a story about AI and software over the line ahead of time. But it's hard when you can't see kind of tangible evidence of it. And I think the first sign on the credit side has been what's happened with leveraged loans and some of the kind of real, I don't know, sort of star borrowers seeing a kind of hit to their the debt valuation. But yeah, look, I mean, I think all credit markets are coming to terms with it at the same time. The problem with private credit is because of the way that they report and they don't mark to market. We have to wait until the next earnings season, which is approaching us now, to really tell the impact, whether or not they're going to be as kind of instinctive with their marks as the syndicated markets.
Yeah, what Blue Owl, KKR, Ares, all tomorrow will be interesting what they say. We also have Ares CEO Mike Arangetti on the show tomorrow, so we'll definitely ask him about it. But Caroline, if this starts to hit private market players, does that in turn hurt tech? If some of the liquidity spigots potentially get withdrawn, if debt isn't as free-flowing, if private equity isn't willing to come in and do take privates, if there is this concern about the value of these companies?
We wonder how the likes of Meta and Oracle and the others that have been tapping the bond market, syndicated debt, with their investment-grade debt. But also, remember, Blue Owl did this massive deal with Meta at the end of last year. And many were thinking this is the way in which we're going to finance this whole AI hype cycle. The fact that infrastructure needs to be built before you really see the productivity evidence that we're starting to glean from an Anthropic or an OpenAI. Well, if Meta isn't going to be able to do so much off-balance sheet, they're going to have to do it all on-balance sheet. What does that mean in terms of driving up the borrowing costs on just the bond market more generally? So that'll be an interesting tell, I think. But we're also just seeing more broadly how much more a CEO is going to be able to articulate that their business isn't getting disrupted. Like we sat on your show last week with the ServiceNow CEO. He's still selling a lot of subscriptions. What more is a guy to do?
Caroline, that was an excellent interview, by the way. Thank you for bringing us that. And thank you for joining us this morning. That's Bloomberg's Caroline Hyde and Silas Brown. And as I mentioned, tomorrow we will be sitting down with the CEO of Ares, Mike Arangetti, to discuss this and a lot more off the back of Ares' earnings report.
Coming up, Eli Lilly gives an upbeat outlook as rival Novo Nordisk sees decline in sales. We'll hear from Lilly's CFO next. This is Bloomberg Open Interest.
your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Eli Lilly sees sales surging this year in a very sharp contrast to rival Novo Nordisk, which, for its part, sees a steep decline. Bloomberg's Katie Greifeld spoke with Lilly's CFO on what's fueling enthusiasm.
We released our guide for 2026. 25% is the midpoint of the growth that we expect to see in 2026 is industry-leading growth, and that's a continuation of the momentum that we see as well in 2025. By the way, thinking about the Q4 that we also release the revenue that we deliver in the fourth quarter, we deliver 43% growth. So it's a continuation of that strong momentum getting into 2026. What is driving that is the similar drivers, the key growth products that we have. Of course, the incretin is getting all the attention, but we have a breadth of a portfolio across all our therapeutic areas that will continue to drive that growth into 2026. You see that the market in the fourth quarter on the anti-obesity space grew 85%, and we actually outpaced that growth in the fourth quarter. And very strong growth as well in type 2 diabetes, 17%. So we continue to drive that growth into 2026. You mentioned as well the introduction of orforglipron. Very excited. We submitted for regulatory approval in the fourth quarter, and we expect to have regulatory action as early as Q2. So expect to see as well our oral pill coming into the market, a very exciting opportunity to expand the market. In addition to that, we are expanding through access as well with the agreement that we have signed with the administration in Medicare that we expect not later than July will provide access to Medicare patients, more than 40 million patients that could benefit to have access to anti-obesity medications as well.
So you mentioned, of course, the breadth of your portfolio, but investors really, really care about the pill at this moment. So I have to ask a little bit more about that. You mentioned that potential 2Q launch. Is there a possibility that this outlook that you gave this morning gets upgraded as we start to see some of the uptake there?
Yeah, it's early days at this time. We just put the guide out there. We have a very thorough process, and we feel good about the guide that we have in place for 2026.
All right, that was Eli Lilly, CFO, speaking with Bloomberg's Katie Greifeld. Let's take a look at what the market is doing right now. Just about 25 minutes into the session, the S&P 500 is pretty flat right now, 69.24, so still 75, 76 points away from the all-time intraday high. Danny reminded me yesterday it was 7,000, I think 7,002. NASDAQ 100 actually down 0.5% as we continue to see concern around not just software companies, but hardware companies as well in AI. NVIDIA down 1%, AMD down 14% after earnings. Chipotle had earnings and an outlook that's flat, but they're still up today, only 0.33%. Uber earnings, their forecast missed, down 6 2/3%. Novo Nordisk, we know, said sales will fall 13%. Those shares are down 5.5%, but Eli Lilly said sales are going to be great. So with the same product, by the way, so their shares are up almost 8%. Coming up in the next hour, Meredith Whitney joins us right here on set, plus the executive behind a $10 billion loan to create the Project Vault company, and Mark Douglas of Mountain discusses advertising growth and software stocks. This is Bloomberg Open Interest.
cidade estava sitiada.
Nisso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. ICE presence in Minnesota is about to shrink.
I have announced effective immediately, we will draw down 700 people effective today.
President Trump's border czar Tom Homan has just spoken in Minneapolis, crediting local law enforcement's cooperation for the shift. He says federal agents will be returning to more targeted operations. CBS News contributor Samantha Vinograd.
That is a shift from what they have been doing over the last several months. Typically, ICE engages in putting together actual targeting packages for specific individuals prior to making an arrest. In Minneapolis and other places around the country, instead, they've been doing more at-large sweeps in civilian neighborhoods.
Homan says 2,000 immigration agents will remain in Minnesota, and the president's goal of mass deportations will continue. ICE is set to release another elementary school student detained in Minnesota.
2 weeks before federal agents detained 5-year-old Liam Ramos and his father in Columbia Heights, they picked up fourth grader Elizabeth Zuna and her mother on their way to school. Tracy Zhang, a social worker for Columbia Heights schools, watched Elizabeth's father cry after his wife and daughter were taken away.
And those are images you do not forget.
Minnesota Governor Tim Walz urged ICE to stop targeting schools and their students.
None of this is normal. None of this is okay. None of this makes Minnesota any safer.
Michael Wallace, CBS News.
Still no break in the case of Nancy Guthrie, the 84-year-old mother of the Today Show's Savannah Guthrie. The elder Guthrie was abducted from her home in Arizona last weekend. CBS's Andres Gutierrez is in Tucson.
Investigators confirmed that DNA evidence was found inside that house. They are right now testing that at a state lab. They don't know who the suspect is. They don't have a person of interest. There have been no one who has been arrested. And right now, that is why they're leaning heavily into the video and digital evidence in this case.
Tough times continue in the news business. The Washington Post, owned by Amazon's Jeff Bezos, began massive layoffs this morning. According to the AP, they involve a third of the staff, including the paper's entire sports department, some overseas journalists, and others who don't work in the newsroom. AP says the changes were announced in a Zoom meeting with staff hosted by the executive editor. No comment from the Post. Tens of thousands of homes and businesses in the Southeast still have no heat after two powerful winter storms. Sarah Brooke Bishop is with the Northeast Mississippi Electric Power Association.
Our crews are having to cut their way into some neighborhoods and some county roads to even be able to work on the power.
The Dow is up 163 points in early trading. This is CBS News. A key treaty is set to expire, and it's raising concern around the world.
Pope Leo has warned of a new arms race. Speaking at the Vatican, the Pope issued the warning as the last nuclear treaty between the U.S. and Russia is set to expire tomorrow. The Kremlin's offered a one-year extension of it. Last year, President Trump indicated that sounded like a good idea, but there's been no apparent movement. Moscow said today Vladimir Putin promised Russia intends to act responsibly as the treaty expires. He had a phone call with China's President Xi. Steve Kathan, CBS News.
Great news from Full House alum Dave Coulier. He tells ABC's Good Morning America he's cancer-free again, but
even though I'm in remission, I feel like cancer's always in the rearview mirror behind me.
From here, the 66-year-old says his goal is to help others with early detection.
Now I feel like I can encourage people to get those prostate exams and mammograms.
Deborah Rodriguez, CBS.
Wesley Financial Group is not a law firm.
Ask yourself.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube as well. Scarlett Fu, Paul Sweeney with you here, the Bloomberg Intelligence Program coming at you for the next 2 hours. We got some economic data out here this morning. ISM services data a little bit better than expected. We'll break that down for you and what that means for this economy. Sam Fazeli, Bloomberg Intelligence, he covers all the healthcare stuff. We're going to break down what's happening over there at Eli Lilly, stock moving higher here. They're getting some surging sales from their obesity drug there. Sarah Ponczek, financial advisor at UBS Private Wealth Management. She's going to join us from South Florida and get her thoughts on these markets. What are the conversations she's having? Then Kevin White, former vice president and director of athletics at the Duke University, is going to join us, and Janet Lauren. She is the Bloomberg higher education reporter for Bloomberg News. Colleges hunt new sponsor deals after NCAA allows ads on jerseys. It is the Wild West out there for college athletics with the transfer portal, name, image, and likeness payments. Now you got jerseys. You can sell some space for advertising. So a lot of change out there. It's becoming a big business, and we'll break that down. So a lot coming up in the next 2 hours. Right now, let's go to, actually, you know what we're going to do? Let's go right to that ISM data. Want to do that, Scarlett?
Yeah, because it was revised a little bit. So the takeaway here is that the services index, which of course measures the biggest part of the U.S. economy, came in at 53.8. That was slightly higher than anticipated. But when you factor in how the previous month's reading was downgraded a bit, this is an unchanged read from December. Employment fell to 50.3. That is a bigger drop than anticipated. And prices paid, which is another way of looking at inflation, rose to 66.6. So that is higher than what was anticipated, also higher than last month. New orders falling to 53.1. All
right, let's bring in Steve Miller. He's the chairman of the Institute for Supply Management. Steve, what do you make of these numbers here? Seem to be kind of in line with kind of the forecast?
Charlotte gave a great summary. Our trend is up 2% on the PMI for the last 12 months. So although it's not a huge number, a nice trend. The prices paid. So if you look at the last 12 months, significant trend up. If you look at the date that when the tariffs were announced, the Liberation Day pronouncement by President Trump, prices paid are flat for the services industry. So that's a good sign relative to all of the talk we've heard around tariffs.
So I want to ask you about employment because, of course, that's the part of the economy that the Federal Reserve is looking very carefully at. And what we saw there was a drop to 50.3. It's still above that 50 line, which shows expansion overall, but it is a bigger drop than anticipated. How do you read that, Steve?
You know, it's very much in line with the ADP numbers that we saw with, a little bit of idiosyncrasies between public and private data reporting. I think it's showing continued growth. Our trend over the last 7 months, the index has been going up on average. So I don't think it's a bad sign. I think some of the commentary that we saw was directly aligned to seasonality going into the January timeframe after the end of year boost in December.
Steve, thanks so much for joining us. We appreciate you taking a couple minutes to break down this data. Steve Miller, chairman of ISM, joining us from Aledo, Texas, via that Zoom thing. Let's get a reset of this market here. We can do that with John Tucker and a Bloomberg Business Flash.
All right, guys, and this report brought to you by IBKR in 2025. IBKR retail clients averaged a 19.2% return, beating the S&P 500's 17.9% return. The broker you choose matters. Visit ibkr.com/2025. Remember yesterday? Well, think of it, because that's kind of like what's going on today. Software firms caught another wave of selling. This rotation out of tech companies continuing. Investors worried about the business risks that they face from artificial intelligence. Chip makers also, I should note that just as a caveat, the Microsoft shares today, they're actually up right now 0.9%. So the chip makers under renewed pressure. AMD, the outlook underwhelming investors. AMD shares right now are down close to 14%.
Wow.
Of course, after the close of regular trading today, we're going to hear from Google parent Alphabet. Meantime, Anika Gupta at Wisdom Tree says, tech investors growing impatient about returns for all that CapEx spending.
Given the fact that now we're seeing CapEx intentions rise 60 to 80%, and they're rising off very high levels, we're now starting to see investors become a lot more discerning.
Right now, the S&P 500 4 points lower, the Dow up 241, and the NASDAQ Composite Index 140 points lower. Amazon.com taking the wrapper off its upgraded Alexa in the U.S., so they'll have the AI-enhanced digital assistant to paying Prime customers, and then they have a free version for everybody else. Ever tell you the story my mother threw out Alexa in the garbage can?
No.
She thought my father was spending too much time with her. I swear to God, that's a true story. She was getting jealous of the AI assistant because he was talking to her too much. And he got her name wrong, too. But anyway, we check the markets for you all day long, right here on Bloomberg
That
Radio.
explains a lot.
Yeah, right. Back to you guys.
I don't even know what to say
I
to
don't
that.
know where to go there. But all right, JT, thank you so much. We appreciate that. Scarlet Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's cross-asset report at Denitsa Sokova. Denitsa, what are you looking at?
Let's start with AMD. Obviously, some of the biggest losses today. It's down about 14% now. The chip maker sales forecast was seen as weak. Ticker, of course, is AMD. Looking at those sales number, what we got, so the expectations was about 9.8 billion. Analysts had estimated 9.4 billion. Some projections were as high as 10 billion. So the gap between what we got and the expectation from analysts is a big reason why we're seeing some of that disappointment, but expectations were pretty high. Citi notes that the upside to the results were boosted by unexpected China sales. Of course, everyone is looking at the bigger payoff from artificial intelligence spending and whether that is indeed happening. There is a lot of pressure for the software names, so that's definitely adding tension here. AMD is still playing catch up with NVIDIA, so everyone is watching that space. AMD was up 77% last year, but still pretty bad start, and they're down year to date.
All right, let's look at another stock that is down for the 7th day in 8, Chipotle.
Yeah, Chipotle projects flat growth, and it comes at after a pretty bad year. The ticker is CMG. Chipotle shares fell as much as 4% at the open. Now they're close to flat on the day, but the stock declined 39% year to date. So any form of relief will be much needed for the company. Sales at established locations are expected to be about flat this year. That's below the average estimate compiled by Bloomberg. It's an interesting trend. They're talking about weight loss drugs, and that definitely weighing on sentiment. Chipotle is facing challenges, of course, from higher prices as well. But the weight loss drug kind of dominated the story. They've been offering those new protein offerings with higher and higher grams of protein. They say that campaign is helping so far, but clearly consumers may be opting for healthier or less food is definitely affecting the bottom line of the company.
I went to Chipotle yesterday, 3rd Avenue, had a great lunch.
Did you get protein, extra protein?
I don't even know what protein is, dude. I get the same thing I've been ordering for 50 years.
Yeah, but how much does it cost?
Yeah.
It's like 10, 11, 12 bucks, something like that. I mean,
Wait, what did you get?
2 hard tacos, chicken,
Okay,
peppers and onions, pico de gallo, cheese.
good.
So it was all good.
That's a lot of protein.
Dude, it's what I don't say protein. It's just I got chicken or
He got
beef or something like that.
Yeah.
Enough with the protein stuff.
So it's not working for some people, the protein headline.
I guess not. Match Group, what do you got for us?
Dating. Match Group shares jumped as much as 15%. The rally is not as strong now. Now the company is up about 2%. Ticker is MTCH. So they hold 2 of the big dating apps, and we're kind of seeing a different story there. The company reported earnings per shares above estimates, but what we're seeing is for one of the dating apps, Tinder, the company expects revenue declines, while for the other app, Hinge, the company expects to post double-digit growth and projects a low to mid-20s increase in revenue. It's an interesting outlook there. Analysts have 7 buys and 15 hold ratings. That said, there are no sell ratings, but interesting company to watch, and it's having a pretty good day. After I think the company has a down year ever since it's went public in 2021. So It's been a rough one.
All right, Denitsa, thanks so much. Appreciate that. Denitsa Sakova, Bloomberg News. For more conversations like this, subscribe to our Stock Movers Report. Listen for 5 minutes audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. That's why I thought it was interesting yesterday. Which consumer package companies actually talked about lowering prices? Frito-Lay.
Yes, PepsiCo snack business.
PepsiCo, yeah.
But as Kenji was making clear, this was a company that is already in the lead. So it's not like it's giving up a whole lot. It's not fighting for its life, for shelf space, the way that maybe some of their smaller brands are.
Right. But I mean, how often do you see a company cutting prices, like a packaged goods company? Like I felt like during the pandemic, prices went up for a variety of reasons, including supply chain craziness.
And it never came down.
And they're not coming down.
Yeah.
You know,
and
it's
the
not
sizes only got smaller.
I guess. Yep, they're doing that. I mean, it's not like a commodity like a gallon of milk. It's going to go up and down with where the price is, and But so to see a packaged goods company do that is kind of interesting.
The thing I'm wondering is, if I'm in the grocery store, am I going to buy an extra bag of Lay's because that I see it's slightly cheaper than it was last month? I'm not sure that I will.
No, but presumably you buy the Lay's brand versus the store brand,
right?
Or Lay's versus another brand that's on the shelf. But what I notice is because the off-brand or the store brand gets some pretty prominent shelf space. I know that's a huge issue for these packaged goods companies.
Make your own. Get russet
Make your own potato chips?
Yes, in the air fryer. It's great.
We don't do
it's like
that sounds like an effort.
It's well, if you want to do something good, it requires a little effort on your part, Scarlett.
I like the crinkling of the bag.
There you go.
That signals it's time to snack.
Yep, absolutely. We're going to get Google after the close here today. I kind of think like there's some pressure on Google because the tech space has been under pressure. There's had this, kind of unwinding a lot of these software names out of concern that John's been reporting out concerns about AI. Is AI going to kill, software as a service like a Salesforce, for example, just as an example?
Yeah, but Gemini has been doing really well, and Alphabet, the stock, has been on fire, up 63% in the past 12 months, beating NVIDIA, which is up 50% over the past 12 months. And certainly when you compare it to Microsoft, which is basically unchanged over the past year, and Meta, which is down 4.5%. So Alphabet has been seen as the big winner right now.
Yeah, I'm just looking at Salesforce, which is such a great company. It had been such a great stock. 52-week low today, down 26%.
CRM.
Yep, CRM down 26% this year, down 43% on a trailing 12-month basis. And that was a stock that a lot of folks like for the recurring revenue stream, good margins. Now, some threats from AI.
AI.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Kind of a repeat of yesterday. Materials right now, the best performing individual industry group in the S&P 500. Then you have communication services and information technology, the biggest drags right now. S&P 500 unchanged right now. It's actually just turning green, so maybe up a point. 69.18 on the index. The tech-heavy NASDAQ Composite Index, 133 points lower. That's down 0.6%. And the Dow, where you have those material stocks, up 329 points. That is up just about 0.7%. Lilly sees surging sales. In contrast, its obesity rival, Novo Nordisk. So Lilly right now, 7% higher. And let me give you shares of Novo. These, of course, are the ADRs. Novo Nordisk It is down 5%. And then AMD, those shares 14% lower, 14.2%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John. Just looking at Novo Nordisk, you mentioned it's down 5%, the ADRs in U.S. trading. That's after a 14% plunge yesterday. And it's a real stark contrast to what we heard from Eli Lilly this morning, who also makes those weight loss drugs. Let's bring in Sam Fazeli, bring back Sam Fazeli, really. He is our Bloomberg Intelligence drug boss. That's the jacket he wore yesterday. Actually, he's the director of research for global industries and our senior pharmaceuticals analyst. But Sam, you're a drug boss, let's face it. Let's talk a little bit about Eli Lilly and its upbeat guidance in contrast to Novo Nordisk. Why is there such a stark difference between what Lilly is seeing and what Novo Nordisk is seeing?
Right. So, Scarlett, I've always maintained, based on data and based on actual comparisons of the drugs that they have, that Eli Lilly's drug does better in terms of weight loss over a period of time than Wegovy. They did a head-to-head trial. So that, I think, is helping them. They are both in the same camp in terms of price pressure. As Lilly has said, they have several areas where there's price pressure on them, right? Nevertheless, they seem to be, at this forecasting, a meaningful volume gain in 2026, which you would want to see if you've got a price drop. That's the whole idea. And we've talked about this right from the beginning of this obesity run. That is, if prices come down, volume should go up. Novo seems to be not doing that. Now, there's two ways to explain that. One is Novo's thinking and is worried about losing market share, so not gaining as much volume. Two is that Novo's being over pessimistic to deliver. I have a tough time choosing between those two. Those two decisions tells you whether you buy the stock or not, right?
Sam, Lilly, Novo, they're kind of in strong positions in this weight loss area here. Talk to us about the competitive threat from some of these telehealth companies selling cheaper copycat versions. Where is that right now?
Yeah, but that shouldn't be. It should be nowhere right now because that's illegal, right? At the end of the day, this is a patented product and there should be no compounding going on, i.e. them buying the active ingredient, mashing it up and putting it in a capsule or whatever in an injector and doing it themselves. That should be not allowed, although there's clearly some of that still going on. And I don't know where the FDA's teeth is on this because they were allowed to do it when there was a shortage of supply. But there's no more shortage of supply. So what is still happening? That is not, I think, what people are particularly worried about or exercising people's mind is what will happen in the longer run between the oral drugs that then soon in Q2 Lilly is going to bring versus the well-launched nice start to the launch of the Wegovy oral pill. And then the next question is, what about other people who are coming with other GLP-1s and slightly different here, once monthly from Pfizer, et cetera, et cetera. And I think that we will see how those guys are going to be able to compete. It's going to be tough. This is a machine that's run by both Lilly particularly and Novo too.
Yeah, you're talking about this weight loss pill that Lilly wants to launch. It could happen, or the approval, I should say, could happen as early as April. Lilly did just get approval from the FDA, Sam, to sell Zepbound in a multi-dose pen. Why is this format important? Is it because it's more lucrative? Does it make it more accessible? Like, what does that multi-dose pen allow Lilly to do?
Yeah, well, although I know we don't talk about sustainable stuff anymore, this is more sustainable rather than throwing out the pen every time, right? So that's nice. And number two is therefore that should mean, depending on how complicated it is to have a multi-dose pen, the margin's a bit better because you're not throwing out the pen every time and they don't have to keep making a pen. So all of these are elements. And, it's not rocket science that they've done it. It's just that you have to also be careful. This is an active drug. You need to make sure that it's well stored so that it's not sitting in the sunshine or frozen outside. That's the sort of thing you have to think about when you have a multi-dose device. But I think this will be helpful to both people, users, and the pharma companies.
Sam, we all know that President Trump has made cutting drug costs a key priority, and a lot of drug makers have cut deals with this administration. Has it resulted in profits reductions out there for a lot of these companies? Are analysts taking their numbers down?
Well, if you go with Novo Nordisk's announcement today that specifically calls this out, price pressure, then yes. The only thing is that then if that price pressure also exists for Lilly, so how come they're not suffering? So I think the Novo story is more than just the price pressure. It's also that they're potentially, as we talked about earlier, losing volume going forward, or that they're being over pessimistic. There's a couple of other companies like today, Novartis mentioned MFN pricing for some of their drugs that will be I don't think it's as big a hit as Novo's talking about. If you look at the share price too, for 2026, sounds like they're going to pretty much manage it, but they have pulled it out. Until now, these companies had not pulled it out at all.
All right, good stuff. Sam Fazeli, always great to get your insight. He is our Director of Research for Global Industries and Senior Pharmaceuticals Analyst, but you can just call him the drug boss at Bloomberg Intelligence. Lilly shares up more than 8% right now in early trading. All right, let's check in with Sarah Ponzak, Financial Advisor at UBS Private Wealth Management, to get an overall view of the markets. And Sarah, good to speak with you again. Always a pleasure. Sarah and I worked together at Bloomberg for several years before she moved down to Florida and moved to the other side. Sarah, tell us a little bit about the conversations you are having with clients right now in February of 2026. What are they worried about? What are they excited about?
It's so great to speak with you, Scarlett. I've missed you so much. But yes, largely, I would say the main question that we're getting from clients at this point in time is simply, can the equity rally continue? Just look off of what we are coming from, not just last year, but really the last 3 years. If you look at the past 3 years, the S&P 500's returns has averaged 23% annually. Now, that is magnitudes higher than we would typically expect, year after year after year. Typically, if you look at the, historical runnings of the S&P 500, you would more so expect average annual returns in the realm of 10 to 12%. So naturally, the question becomes, can this continue? And at this point in time, we are still relatively optimistic. And there's three main reasons for that. One is, economic growth has continued to be resilient. The Federal Reserve, as we all know, cut rates 3 times last year, and we still expect a relatively we expect an accommodative Federal Reserve going forwards. And then also continued adoption of artificial intelligence. Those 3 factors are still all in play.
How have earnings been from your perspective here so far? And are they good enough to support this market here? Because if the Fed's only going to cut 1 or 2 times, arguably earnings really need to come through.
Absolutely. We need to see growth, and we need to see not just revenues, but profits. If you look at the last 3 years, what we've seen is, a large AI rally based off of CapEx expansion, based off of multiple expansion. Now investors, as we've seen in the last couple of days, we've seen with, the downside in software recently, investors are really saying, show me the money. I want to see that all this money that you are spending on AI can actually turn into revenue and eventually turn into profits. To your question about earnings, though, yeah, we do feel as though the fourth quarter earnings season to date has been strong. Sure, there have been a couple of high-profile snafus, but if you look at EPS beats, overall, they've been strong. We've also seen strong revisions. We continue to see companies talking up and talking about the productivity gains that they've seen from implementing AI into their businesses. So yes, earnings has been strong so far. But again, I think the big focus for 2026 when it comes to the tech sphere and the AI question, the AI conversation, is that the prior 3 years, it was all about AI enablers. Who are the companies that are going to allow this to happen? And now it's about who are the companies that are actually utilizing AI as technology to their benefit to increase productivity, increase revenue.
Right, the actual application of this AI. Sarah, I'm curious whether your clients are those who might be interested in all this credit issued by tech companies. Oracle, of course, with a big bond sale this week. But we also have seen Meta, Microsoft, all these companies issuing debt in order to pay for their AI build out. Are your clients interested in buying investment grade credit from these big tech companies that up until now were able to fund all their CapEx through their own internal cash flow?
It's a great question, and the answer to that would be yes. I would say, especially coming off of, again, 3 amazing for the equity market, even though we're optimistic, a lot of clients are saying, okay, maybe we should go ahead and rebalance. Maybe we should be increasing our fixed income exposure at this point in time, which, we had done prior to last year before rates came down. But yes, investment grade debt, especially I would say medium term duration debt right now, is a place that we and our clients are interested in being for a couple of reasons. One, mainly the income side of the equation. Last year was a great year for investment grade debt, largely because you saw the higher income returns from those higher interest rates, but we also saw capital appreciation in bonds as interest rates came down. Not only the Federal Reserve cutting rates, but looking at, the 10-year Treasury coming down as well. So we don't expect as much capital appreciation from the bond side of the market anymore, but we do still expect that if you're an income-oriented investor and you also at this point don't want to be over your skis and risk in the equity markets, investment grade debt's a great place to be, especially tech companies as well.
Sarah, thank you so much. Appreciate that. Sarah Ponzek, first vice president of wealth management at UBS Private Wealth Management down there in Boca Raton, Florida, which, if that's your cup of tea, 72 and partly sunny today. I guess it
was a good trade for her.
It was a good trade for her. But I mean if you guess you like nice
to Florida, and she now has time to walk her dog and do all kinds of other things in the sunshine that if she were here she'd be bundled up inside this office.
But she really misses Scarlett. She didn't say anything about you or me.
No, nothing. Exactly. We know. Right. We know how that plays. All right, coming up, we're going to check in with Kevin White, former vice president and director of athletics at Duke University. And you have
nothing at stake in this, right?
Nothing at stake here. Janet Lauren. Well, who booked it was Janet Lauren, a Bloomberg higher education finance reporter. So they're both going to be in our studio here. A lot going on in the world of college athletics with the transfer portal, NIL payments. Now colleges can
millionaires as college athletes.
Exactly. And why go pro when I can stay in college and make a couple $1 million?
How long can you do that for? Can you be like a seventh year?
I don't know. I mean, historically it was like 5 years, but the pandemic kind of gave people extra years. I don't know how that all works out, but we'll find out from Kevin White. That's coming up in just a moment. S&P down 12 points, the Dow up 270, the Nasdaq's down 195. That's 0.8%. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. It's this continued rotation out of tech companies into some of the more economically sensitive companies. You see that highlighted, for instance, in the Dow. The leaders include Amgen, Nike, Walt Disney. And then the laggards over there include IBM and NVIDIA. Investors worried about the risk from better artificial intelligence tools, advanced micro devices. That's sinking. The outlook there, underwhelming investors. The shares right now down close to 15%. And Seema Shah, Principal Global Investor, says the AI disruption trade should be forcing investors to diversify.
So I think that this is a theme which is likely to continue. And of course, I think a lot of investors, this just adds to that momentum, that drive towards thinking about diversification beyond just AI, beyond tech, even beyond the U.S.
Right now, the S&P 500 pretty much, well, it's up 3 points, 69.21. The Dow up 383 points, and the NASDAQ Composite Index 120 points lower. Let me do Bitcoin. Haven't given that any love. Neither are investors. That's down 2%, $74,545. $500 billion wiping off cryptocurrencies in less than a week as this sell-off accelerates.
Crypto winter, anyone?
We've used that before.
Yeah.
That's old.
Well, but there have been a couple of crypto winters, and they usually recover.
Did you see this one? It was in USA Today, and I'm like, huh? Amtrak branching out into fashion. They've launched a limited edition track suit.
Wait, what?
Yeah, Amtrak's selling a track TRAK suit. It features a hooded sweatshirt, matching pants made with microfiber fleece, sporting customized embroidered logos. The tracksuit from Amtrak costs $279.
This is limited edition.
I guess
clearly.
it's like, yeah, it's,
There's a lot of train fans out there, and they are
that's what they're trying to capitalize on, suppose.
No, but I drove to Altoona, Pennsylvania to see Horseshoe Curve, to see trains. But that's just me. JT, thanks so much. We appreciate that. Scarlett Fu, Paul Sweeney. We are live here on the Bloomberg Interactive Broker Studio, streaming live on YouTube. College sports, it's become so much more professionalized, so much more revenue with the name, image, and likeness. The transfer portal, guys getting paid, or athletes getting paid a lot of money. It's been a big, big issue. A lot of folks feel like it's kind of the Wild West out there. That brings us to our next conversation here. We're joined by Janet Lauren, higher education finance reporter for Bloomberg News, and Kevin White, former vice president and director of athletics at Duke University. Janet, let's bring you in because I want you to bring in Kevin and broaden this issue out because there's something new here. The NCAA voted to allow advertisements on college uniforms. We're getting like the Premier League here. What's going on?
Yes. So as we've talked about many times, there's a whole new world in college sports. Athletes are being paid. College athletic departments are scrambling for money. They're trying to raise money to pay players. This year it's $20.4 million, and it will go up 4% each year. So they're looking for new ways to generate money. They're selling alcohol. They have concerts at stadiums. And now NCAA is allowing advertisements on uniforms as a way to create new revenue sources. Lots of eyeballs on these players and their uniforms, as well as equipment. And schools have been lining up these deals. And that is the new world order. Be ready to watch these starting August 1st.
Right. Kevin, I'm going to bring you in here. Kevin White, former vice president and director of athletics at Duke University. Kevin, what do you make of this? I guess it's just another round in kind of what's been going on there in college athletics and making some, I guess, greater revenue.
Well, good morning, you guys. Janet, Paul, and Starlet. Appreciate having the opportunity to speak with you. I think I used the expression when Janet recently wrote an article that we've crossed the Rubicon. I mean, we were a very conservative, if not parochial, collegiate athletics scene up till about 10 years ago. And we became very permissive almost overnight for as Janet just described, for the need to monetize more of our assets. And what's a bigger and better asset than the student athlete, him or herself, to monetize because of the escalating costs of doing business. I mean, the college athletics has become a really big business.
Absolutely. So as a former AD at Duke, you know now this new world order that we're in where the schools need to cut checks for their players, but we know schools need to also watch their expense line very carefully. Federal funding is definitely a problem for the big elite schools that certainly include Duke. How would you go about raising revenue if not selling space on the patch, on the jersey to patches?
You know, Janet, I would say that just about everything is on the table at this point. You know, schools are really moving into the concert business as on a kind of an extreme example. You know, institutions or athletic departments have kind of always been in that business, but very conservatively. I think that you're going to see, you know, the concert business will be like an additional sport revenue line. It'll be football, men's basketball, perhaps women's basketball, concerts, then baseball and everything else. I mean, it's pretty amazing where this is headed, but it's out of necessity. These programs are very expensive to operate.
Do you think fans are going to be put off by seeing advertisement on player uniforms?
I don't, to be honest with you. I think we live in a rather commercialized world. And I'm a traditionalist, so these aren't things that I would have, you know, gone to on my own or gone to or segue to without lots of thought and concern. But I think by and large, you know, society has become very commercialized, and college athletics is kind of, you know, is kind of moving into this new age, contemporary place out of necessity, as we described. There's a real need to provide resources for student athletes, and you know, last time I checked, within the NCAA alone, and there are other entities, but the NCAA represents about 1,100 institutions and about 500,000 student athletes, all of which have an interest in harvesting some level of compensation. So those resources have to come from somewhere.
You know, these patches that they would allow for jerseys would just be during the regular season. Apparently, during the NCAA championships, Paul, it doesn't apply because the NCAA has its own deals,
yeah.
right? So,
yeah,
different
exactly.
eyeballs.
Hey, Kevin, it particularly as it relates to name, image, and likeness and the transfer portal, a lot of folks feel like this is the Wild West out there. Do you believe it needs to be regulated, and if so, by whom?
Well, it certainly needs to be regulated. I don't think what we're doing right now is sustainable. With the elusive level playing field has taken a huge time out. It's not even close to a level playing field at the moment. You know, it's pay for play and it's tampering, and we're buying players like crazy, one institution against another. And when you think for a second, just the professional leagues, NBA, NFL, Major League Baseball, NHL, WNBA, we all have restricted environments in those professional leagues. The only non-restricted and or unregulated environment that I'm aware of right now is the NCAA. And it's ironic because, you know, I was in AD for 38 years. For years, I mean, we couldn't provide a bagel in the morning after a workout with cream cheese. And now we're providing, you know, student athletes the opportunity to, you know, we're buying Broncos by the truckload. I mean, and dispersing them. I mean, this thing has gone so dramatically in another direction, but it is really unregulated. That's the problem. And it's going to require some regulation to take the Wild West out of the everyday business momentum.
But fans are watching these games at record levels. What do you make of all these changing economics in college sports?
You know, I think I've already kind of spoken to it. I think fans have always been a little bit more interested in the professionalization of college athletics. And so I don't think they're turned off by it. They recognize there's a new age, and they do recognize, I think fans recognize the fact that student athletes need to realize some level of resource for their participation. They are in the entertainment business. Now, I'm a traditionalist, as I've already said. I love the fact that we're the only country in the world that in terms of higher education, that has athletics tied to the academy. And so I'm really worried about that being kind of pulled apart to any further degree. But fans tend to be in the entertainment
Yeah, Kevin, we're going to have to, I'm sorry, Kevin, just because of time, we're going to have to leave it there, but we'll certainly come back to this story because everybody's interested. My emails are blowing up here. Kevin White, former Director of Athletics at Duke University, and Janet Lauren.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we have some headlines crossing in the last couple of minutes here. The president posting on Truth Social that he talked with Xi Jinping today about China buying U.S. oil and gas. Apparently, they also discussed commodities, too, when it comes to soybeans, because the president says China may buy 20 million tons of soybeans in the current season. And you are seeing a bit of a reaction in the soybean futures price, up about 2.6%. That appears to be the biggest gain since November. We'll keep you posted on these headlines and give you more of them as they cross. Paul?
All right, let's talk about some technology earnings here. We got Supermicro delivers, I guess, better than expected sales forecast in the quarter. We had HP. They maintained their guidance here. Their CEO left. I don't know what's going on there. Let's talk to Woo Jin Ho. He does know what's going on there. Senior technology analyst for Bloomberg Intelligence. Hey, Woo, let's talk about Hewlett-Packard here, HP. Yeah. I guess they kept their guidance, but the CEO departure, was that unexpected?
Yeah, hey, Paul. Yeah, that was highly unexpected. Enrique, the CEO, was a lifer, started there as an intern. And jumping over to PayPal was a surprise to us. And he's leaving at a precarious time because he was tasked to navigate the PC business when DRAM prices are spiking, and quite frankly, I did find it positive that they did maintain their guidance for the year.
Yeah, let's talk a little bit more about those DRAM prices spiking, because this is something that people really zeroed in on when it came to Apple's results as well. How big a cost is these rising prices of memory chips for a PC company like HP?
Yeah, so if we think about the total bill of materials, DRAM as well as the storage that goes in there, it's roughly it went from about 10 to 15% of the cost, and now it's spiking up to about 20 to 30% of the cost, right?
Wow.
So what's going to happen? They're not going to give it away in gross margin, that's for sure, because we're talking about very thin margins for the PC business, and we're already hearing about PC pricing going up around 20 to 30% going into the later into 2026. So, Scarlett, if we think about it as a very elastic demand for PCs, it is going to hit possibly on the demand side and then keep people keeping PCs longer.
How about the print supply business? Just as a consumer, that's where I feel like I pay a lot of money when I get the print supply stuff for the HP printer. Talk to us about that business.
Yeah, I will tell you though, I think what's being overlooked by investors here is that the print supply business is going to be the cushion. The inks that you and I pay for, that's a 19% EBIT margin business.
Boy, it feels a lot more than that.
Trust me, my wallet's light as well. I'm glad my kids are out of school so they don't print as much. But it is going to provide a cushion. Even though it is the hardware is in secular decline, they are making some moves either by subscription to provide some of that downside risk in earnings.
What is the long-term trend line for that print supply business? Because, I mean, every office is trying to go digital and not have printers available to everyone. And I know there are some parts of government that can't do without actual physical printouts of documents, but I would imagine that this shift to everything being virtual and digital means that this overall is in a long-term structural decline.
Easy answer, or the simple answer, minus 2% on a year-on-year basis on a long-term basis, right? There's always that one. Yeah, well, there's always that one guy who's going to print the 10Ks and 10Qs. Right, and in color. So
but we're a dying breed. That's the thing, right? I mean, the young people aren't going to do that.
Yeah, I don't do that.
Really, you don't print?
I don't print anything.
Oh, that's true.
Got it on my phone now.
Go on,
I think the kids are going back to the old school ways of us old elder folk of printing more and having more photo keepsakes. So I don't think we're talking about a structural decline of 10% on a year-on-year basis, but there's enough print from a documentation standpoint that is going to hold the business.
How about Super Micro here? I see the stock up 14% here today. Talk to us about their earnings.
I will tell you, look, I've talked about this, ad nauseum about Supermicro. The AI server business is a double-edged sword, right? Where they won out in the last quarter print was that the AI servers demand came out a lot better than expected. Roughly 1.5 billion beat in sales, and that's primarily because the Blackwell ramp-up is starting to ramp up. Now, I will tell you, I think one customer really helped them out. 62% of their sales was from XAI. But look, the offset has always been the margin side, 4.5% in operating margin, and I think their guidance implies it's going to be roughly around the same next quarter.
Woo-Jin, we're talking a lot about how investors are really worried about software companies being disrupted by AI. Does any of that spill over, even sentiment-wise, to the hardware space?
No. I mean, if anything, the AI players are building more AI, and they need more hardware to build the infrastructure to drive the code that kills software.
Woo-Jin, thanks so much. Appreciate it. As always, Woo-Jin Ho, he's a senior technology analyst covering the hardware side and the networking side of the tech space for Bloomberg Intelligence. So we're talking about a little Super Micro, HP. I don't know. I think Carol Massar, in and of herself, she keeps HP and all the toner people and the paper people in business.
I used to do that a lot too, but now I use things like Google Docs, these sharing document services that allow you to not have to print all the time.
All right.
So,
we'll see how it goes.
Talk one up for the environment there.
Absolutely. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned. for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments with the S&P down 10 points, the Dow up 340 points, that's 0.7%, but the NASDAQ off about 215 points, that's 0.9%. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Wednesday morning from the Bloomberg Intelligence team. Paul Sweeney, Scarlett Fu, and John Tucker here with you from our Bloomberg Interactive Brokers studio and streaming live on YouTube. Coming up in this second hour of Bloomberg Intelligence, we are on earnings watch. We have Uber reporting results. It missed on its profit outlook, and that stock is on the move. Alphabet will be reporting after the close, so we'll check in with Mandeep Singh. He is our global tech research head here at Bloomberg Intelligence. Danny Berger, my co-host of at Bloomberg Television, will be launching a new show today called Bloomberg Deals, and that airs today, 12 p.m. Eastern Time. She will join us to give us a preview of what we'll be talking about on Bloomberg Deals. Afterwards, we're going to check in with Grace Lee of Columbia Threadneedle to get her take on these markets. We do have a down day when it comes to the S&P and the NASDAQ. And Kunjan Shaban will be joining us as well. Shabani, he is our senior semiconductor analyst. He's going to recap some earnings from AMD and also give us a preview of what Qualcomm is likely to say. First, though, let's check in with John Tucker for Bloomberg Business Flash.
All right, guys, tech shares pushing lower. This rotation continues. The iShares expanded tech software sector ETF. I didn't even know there was such a thing. That's down 1.6%.
There's an ETF for everything.
Yeah, I know, but this kind of gives you a flavor of this sell-off. And it's this continued idea that AI is going to replace all the things like software companies do. But, parenthetically, Microsoft, which is taking it on the chin, down like, 25% since its high in October. That is up today, up about 0.8%. Super Microcomputer, also a best performing stock in the S&P 500. That's up close to 15%. So they make the servers. They forecast, as we just heard, stronger than expected sales for the current quarter. Analysts note solid AI demand there as well. Meantime, Eric Friedman, the CIO at Northern Trust, says, you know what, earnings, they can continue to push stocks higher.
13% for calendar year 2026. If I go to my Bloomberg terminal, we think that's achievable. The question I think in front of us, and you've all done a nice job of covering this, is this broadening out concept.
Right now, the S&P 500, 23 points lower. It's down 0.3%, 68.95. And the Dow, where you find a lot of those material stocks, up 282 points right now. That's a rise of 0.6%. And the NASDAQ Composite Index down 279 points. This is a sell-off of 1.2% right now. The company behind dating sites Tinder and Hinge, they've been working to get ahead of the shift in how young people approach dating. I'm looking at you, too. Approach dating. Match.
Me? No. Wrong
Match has
demographic.
pledged to remove bad actors from its platforms. Oh, thank you so much. Remember that? The dating
People have to
game?
pay a fee for this, so there should be no bad actors on there.
I mean, you would assume. But remember
You
the
would
dating show, the dating game, back in the early 70s, late 60s?
Yeah, network television.
They had, I remember there was one episode, basically this, I'm going to tell this for Nora. You'd set it up, you'd have a guy and like 3 women, and they couldn't see him. But one of the episodes was Ted Bundy they had.
Oh, jeez.
Who, of course, went on
bad
to,
actor, bad actor.
You don't want bad actors like that. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John was saying, we got red and green on the screen here, but let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Nora Melinda. Nora, what are you looking at?
Well, let's kick things off with advanced micro devices. AMD, we've been talking about this all day. We are seeing shares that are plunging for their worst day since 2018. The stock is down as much as 15% today. And this is after the company's sales forecast fell short of analyst and investor expectations. This is really underscoring, creating a sign that it's not necessarily making the AI inroads that much of Wall Street had earlier anticipated. The company reported first quarter sales that will be roughly $9.8 billion plus or minus $300 million, which was lower than many projections that we did see across the street. So you're really seeing the stock getting hammered down about 16% so far today as we speak.
All right, let's stick with the hardware theme and take a look at another company on your radar.
So this one is in the green. We're looking at Super Microcomputers, ticker SMCI. We're seeing shares that are up about 14%, earlier up as much as 18% for the best day since May for this company. We did see shares gaining, of course, after the company delivered a forecast for sales in the current quarter that did signal strong demand for its gear to run AI data centers. So you're certainly seeing the stock being rewarded today. We're seeing shares up about 15% so far this year, but of course that double-digit gains that we are seeing today really adding to the optimism here, Scarlett.
Okay, Eli Lilly.
Eli Lilly, taking a look at the healthcare space, ticker LLY. We've also been talking about Novo Nordisk, its competitor, its peer, that's ticker NVO. We're seeing shares of Eli Lilly, though, up as much as 11% on the day. That's the biggest jump since April for this company. This is after the company delivered an upbeat sales forecast for the year. It said it expects sales to grow as much as 27% this year. We do know that just yesterday we were getting some news that Novo Nordisk was saying that it was expecting to see a downturn in sales. They expect sales to fall by as much as 13% this year. So you're certainly seeing a bit of a divergence, a bifurcation between these two names as we're looking at the outlook for this year. So you are seeing that really playing into how shares are trading today.
All right, Nora, thank you so much. Appreciate that. Norma Linda, she is the markets correspondent for Bloomberg Television, giving us a few minutes of her time with some of the stock movers today. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. Earnings continue to come from the tech and tech adjacent area of the market. We have Alphabet after the close today. That'll be the big one. Uber Technologies, they gave I guess I would call it a weak profit outlook here, and we got a new CFO, so we got some movement there. They're getting ready for the driverless vehicle technology. Mandeep Singh joins us here, Global Tech Research Head for Bloomberg Intelligence. Talk to us about Uber here. The stock's off about 3% today, Mandeep, on the news.
I mean, the print was pretty strong. And overall, I would say, the CFO departures are never easy to digest. You question why he's leaving around 2-year mark. And I think with Uber, the main concern is around the impact of take rates from EVs. And that's where the business model is very solid in terms of what they currently have. 200 million monthly active users. I mean, I compare them to our social media platforms, right, that are so sticky. This company has got, 15 billion trips in a year. So the kind of scale we are talking about, it's a very sticky, product. People use it. It's just AVs are 0.1% of their overall rides. So you have to ask yourself, if AVs become, let's say, 10%, how does it change the take rates for Uber? And that's the question that everyone is trying to figure out. Does it change the profitability completely? My guess is no, because AVs ramp would be a lot more slow than what people anticipate, even though Waymo is successful and they've raised more money. But you can't get to the level of scale that Uber is at very quickly. And that's where it'll be a lot more measured and slow.
That's the exciting part of the Uber story, certainly the automated vehicle driving and all of that. Yet, as you say, right now it's all about rides and bookings and, the physical kind. And that's not going to change anytime soon. What does this say about Lyft? Because you mentioned how sticky those customers are. But I think about how my kids use Uber or Lyft, and it's like whichever has a better price they'll go with. They're not loyal to one or the other.
Price, and the other one is ETAs, the wait times. So for people who are looking to use Lyft or even Waymos, at times you have to wait, 10, 15 minutes. And not everyone wants to do that. Yes, if you're very price sensitive, you would do that. But that's where I think Uber has done well to have a tiering structure for, different products for different customers who are price sensitive. And so for me, the real number is the 200 million monthly actives. In fact, on an annual basis, that number is much bigger, 450 million. So they really have pretty much all of the population, as their customers.
That might be the case, but they also cite in their outlook for the gross bookings that there's a strong supply of driver dynamics. Don't they have the same drivers as Lyft? I mean, a lot of the drivers, you get into their car, they have both the Lyft sticker
Agreed.
and the Uber sticker.
Yeah, no, that's a very good point. And their supply did grow 19%. So that's a very healthy dynamic for a marketplace. When your top line grows 20% and your supply is growing 19%, that means you basically have supply to serve additional demand. And you're right, a lot of those drivers are on Lyft as well, but where are they getting more rides?
I see.
I would argue it's on Uber's platform because, again, they have that scale. And when you're doing 15 billion trips a year, like that's unmatched in terms of controlling the ETAs and what you can do with the algorithm. So that, to me, is the real moat here.
Scarlett, do you arbitrage between Lyft and Uber?
Oh, constantly.
You do?
Yeah, well, I have credit cards that give me credit for Uber and for Lyft. So Uber will give me $15 a month. Lyft will give me $10 a month, but Lyft is usually cheaper. And if I'm in New York City, I can get either a Lyft or an Uber pretty quickly.
See, I scolded Matt Miller on air repeatedly. He doesn't do that. He just goes Uber. Doesn't arbitrage.
He's one of those sticky customers.
If you're in the city, every cab driver has told me just hail a cab if there's one around.
Yeah,
it's
but sometimes they don't
cheaper.
have the heat on or they don't have the air conditioning on, and I don't want to deal with that.
Please.
I mean, normally I walk. Or I take the subway. So if I'm getting into a car, it's because I need heat or air conditioning.
There you go. See, she's pragmatic.
So needy.
I have to make sure my hair is okay.
It's all about that, John. All right, Google after the close, what should we be looking for?
I mean, Google Cloud to me is what a lot of people care about. Yes, the search business should do well, and the sentiment has changed completely on Google. So YouTube, Google search, we saw what Meta did with their print, big beat and raise.
Yep.
So I expect that on the ad side. But the real kicker would be Google Cloud outperforming Microsoft Azure, because that's where people were let down. Azure growth did not come as expected. So if Google Cloud really beats, that's where you can talk about a share shift type of situation.
All right.
The winners and the losers.
10
in the
seconds.
cloud war.
And then I know Anurag covers Microsoft, but this stock feels oversold to me.
It is. I mean, the whole software complex seems oversold. And right now, there is definitely, you can do work at the company level where you can say, the valuation is way too compressed in terms of what their growth expectations are.
All right, Mandeep, thanks so much. Appreciate that. Mandeep, Global Tech Research Head, Bloomberg Intelligence here in our Bloomberg Interactive Brokers studio. Again, Google after the close here. Tim Stenovic, Karen Masso, they'll break it down for you. They're really good at getting those things right as they cross the tape and giving you the color there. So we'll have that. New TV show coming?
New TV show coming. It debuts today, 12 noon, every Wednesday, and it's called Bloomberg Deals. And the host, Danny Berger, joins us now. And I know, Danny, that you're going to talk about these distressed software loans and what it means for private credit investors and those business development companies, those BDCs.
But to be clear, we're going to talk about it, Scarlett. You're not leaving my side for this, right? But no, it is interesting because, okay, of course, it's Bloomberg Deals. We're going to be talking about all the hot deals of the day. But also maybe deals, I think maybe it's too strong to say that deals that went wrong, but maybe deals that are being rethought. The leverage loan market does have a lot of these software deals in it. You also have private capital loves software. It was seen as one of these sectors that was a safe thing. It was one of these technology bets. You have entire firms whose existence is based around investing in software. So it's a really interesting time for the sector as a whole, not just because of the exciting and new flashy IPOs and all the deals that are coming, but deals that they've done in the past.
Yeah, it's a complete rethink for a lot of these investors.
You know, I think it's a great time for you guys to bring the show Bloomberg Deals to Bloomberg, because you listen to the Jamie Dimons of the world, you listen to the John Grays on the private equity side, the Larry Finks. They're all talking pretty optimistically about M&A deals, IPOs, actually being able to monetize some of their prior investments. Is that, I would think that's got to be a big part of what you guys are going to look at.
I mean, it's hard to find someone who's not enthusiastic that this is just going to be a big year. It kind of feels like everything's working in the favor. For one, regulatory environments are easier, and it seems
Hands
like
off.
Yeah, exactly. You just have a much quicker timeline of getting deals done. The economy looks strong, and you kind of have this overhang of like CEOs who maybe were thinking of leaving and didn't necessarily because of COVID, and are now rethinking their entire strategies and are thinking, hey, maybe now's a good time to do deals
and build a legacy, create this legacy.
Exactly, because you have a largely aging CEO population. And Paul, the other things, what you said, private equity is holding on to a lot of companies that are now starting to age. Maybe they paid a lot for them and were a little reluctant to relinquish them. Now kind of seems to be when the music stops playing and they need to think about options for them.
So we talk a lot about how this is a brand new show, but it's actually more like a decade in the making because we've been talking with our colleagues on the print news side, which you used to be part of, about forming this deal show. So they will be a prominent part of this show, all of our expert reporters and analysts here at Bloomberg.
Yeah, I was going to say a great lineup even on today's show. We're going to have Liana Baker, Michelle Davis, Matt Monks, Ryan Gould, all talking about a lot of stories that they've been breaking. I mean, they've been excellent on the SpaceX XAI merger. There was a big oil deal recently. That Santander cross-border deal for Webster is also an interesting one. So I'm really excited to hear from our very hardworking reporters who, again, break news constantly on deals and beyond.
And of course, we've got big deal makers as well. Who are we featuring today, Danny?
So it's actually the timing could not be more perfect. It's almost as if we planned it. We're going to be having the Brookfield CEO, Bruce Flatt, on. And this I'm really excited for because, of course, he's a titan of the industry. Everything from infrastructure to consumer companies. Brookfield is in it all. And they have Brookfield Asset Management, which sits under the umbrella of Brookfield. And Bruce Flatt just announced that a new CEO would be coming up through the ranks, a really young guy, Connor Teskey, only 38 years old. Bruce Flatt will stay on as the chair of Brookfield Asset Management and stay on as the CEO of the overall company. So here you have a guy who is thinking about legacy. I mean, this is an industry known for its ego. So it's kind of a one-off where you have someone who's legacy planning very soon and very quickly.
And you're also going to be talking to some prominent lawyers in the M&A space, too.
That's right. Paul, I think you're going to want to listen. We're going to have one of the top lawyers representing Warner Brothers Discovery. We're going to have a healthy little debate along with another titan of media deal making about why Netflix? What are the regulatory risks? How should we think about it? And then we also have Melissa Sawyer of Sullivan Cromwell.
She's awesome.
I'm happy to hear that you know her well. All right, so what questions you got for me, Paul? What should I ask her?
I mean, is it in fact an administration that is taking a lighter touch? What are you seeing when you actually go down to D.C. to talk to the Federal Trade Commission, the Federal, whatever, Department of Justice? Because the rhetoric certainly sounds supportive. So I'd be interested if, when you're the lawyer and you have to go down and start negotiating these things.
That's a good point because Trump will weigh in at different times, right? He's clearly made the point that he is going to be personally involved in this bid for Warner Brothers Discovery between Netflix and Paramount Skydance. And being a friend of President Trump does matter.
It does. He even said, he's talked about the deal and has been like, well, neither of them are a friend of mine, so I don't have any strong feelings. But someone described it to me, a lawyer the other day, basically said, yes, it's easier for deals to get done, but it feels like a black box.
Yep.
That's a good way of putting it. All right, Bloomberg Deals debuting today, Wednesday, 12 noon. Danny Berger, I'll be there as well. All of our deals team will be there. Don't miss it. All right, we've got a lot more to come on Bloomberg Intelligence. We're looking at a mixed market here. The Nasdaq off by 1.2%. The Dow Industrials, however, gaining 0.6%. This is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And we are brought to you by Golden Crest Metals. Inflation, tariffs, volatility of some investors turning to gold for stability. To get a free gold and silver information guide, learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Rotation out of some of the tech companies that continues. The software firms caught in this next wave of selling. Investors worried about the business risk they face from better artificial intelligence tools. The chip makers under renewed pressure. Advanced Micro Devices outlook kind of underwhelmed the street. Alphabet, of course, they're going to report results after the close of regular trading today. Back to AMD, those shares, they are down 16%. Wow. Sales forecast, again, a sign that it's not making the AI inroads earlier anticipated. And as Danny was mentioning, a really interesting story. There's been this sell-off in software companies. The software debt, don't forget about that. More than $17.7 billion of U.S. tech company loans in a Bloomberg index dropping to distressed trading levels during the past 4 weeks. So, I mean, go figure. S&P 500, 29 points lower right now. That's down 0.4%. 6890 on the index. The Dow is up 274 points. That's up 0.6%. And the NASDAQ Composite Index is 274 points lower, and that is down 1.2%. And we check the markets for you all day long, right?
The UK stands apart as a place to do business, not because of one advantage, but many working together. Over £10 trillion in capital, 4 of the world's top universities, a 10-year industrial strategy in action. It's stability with dynamism, global reach with local depth. It all adds up to greater growth. Find out more at business.gov.uk/growth.
News when you want it with Bloomberg News Now. I'm Nathan Hager. The immigration enforcement surge in Minneapolis is easing a bit. White House Border Czar Tom Homan says he will remove 700 ICE and Border Patrol agents effective immediately. Homan says it's thanks to greater cooperation from local authorities in detaining immigrants with criminal records.
More officers taking custody of criminal aliens directly from the jails means less officers on the street doing criminal operations. This is smart law enforcement, not less law enforcement. It's safer for the community, safer for the officers, and safer for the alien.
White House Border Czar Tom Homan says it still leaves about 2,000 federal agents in Minnesota, still well more than the 150 or so that are typically assigned to the state. President Trump had a phone call this morning with Chinese President Xi Jinping. A source confirmed that to Bloomberg News after China's Xinhua first reported it. The president just posted details about the call on X, saying they discussed trade, the military, and Taiwan. He says China may boost its agricultural purchases ahead of his trip to China in April. Vice President J.D. Vance is pitching about 50 countries on forming a critical minerals alliance to reduce dependence on China.
Together, we want members to form a trading bloc among allies and partners, one that guarantees American access to American industrial might, while also expanding production across the entire zone.
Vice President J.D. Vance spoke at a State Department summit on critical minerals. He says the U.S. is seeking a coordinated agreement on price floors to shield companies from China flooding the market. The European Parliament has agreed to restart ratification of a frozen trade deal with the U.S. That's after President Trump walked back his threats on seizing Greenland. The head of the European Parliament's Trade Committee posted on X that a vote on the trade deal could take place on February 24th. 4th. Fulton County, Georgia has filed a motion in federal court for the FBI to return all the documents it seized last week on the 2020 election. The motion also asks to unseal a law enforcement agent's sworn statement to the judge who signed off on the warrant. President Trump has long claimed without evidence that widespread voter fraud in Fulton County cost him Georgia in 2020. A huge axe is falling at one of the biggest names in journalism. The Washington Post is laying off about a third of its newsroom staff. That includes its entire sports division, as well as a number of reporters who are stationed overseas. The Post's executive editor announced the layoffs in a Zoom meeting with staff this morning. The Post is owned by Amazon founder Jeff Bezos. Its troubles stand in contrast to the New York Times. That paper has doubled its staff over the past decade. Turning to markets, we have a new read on the services economy from the Institute for Supply Management. Its index was unchanged last month at 53.8. That's the strongest back-to-back growth for services since 2024. Still, a rotation out of big tech stocks continues after Anthropic unveiled its new AI tool that can do a lot of software companies' work for them. Mandeep Singh is global head of tech research at Bloomberg Intelligence.
They launched a new product, and they have been launching a lot of new products that are coded by their coding agent tool with minimal human intervention in terms of, the human-generated code. So from that perspective, their cadence and product launches have really taken off, and that's what spooked the market.
Mandeep Singh with Bloomberg Intelligence. And right now, tech shares are leading the declines. The NASDAQ Composite is down about 1%. The S&P 500 is lower by 0.3%. The Dow Jones Industrial Average is on the rise by 0.4%. Uber is down more than 4%. The rideshare company gave a mixed forecast in its latest earnings report, and more signs that it's focusing more on robo-taxis than human drivers. Bloomberg tech host Ed Ludlow has more.
What they said is we're launching in more markets around the world for robotaxi through partners. Capital-light model where they rely on the technology provider. They just do the platform, fleet management and matching with a ride. And they've also promoted somebody from one of the internal finance teams to be CFO.
That's Bloomberg's Ed Ludlow reporting. And Uber's main rival, Lyft, is also on the decline by about 3%. We'll get more tech earnings after the closing bell when we hear from Google parent Alphabet. Bloomberg Intelligence tech analyst Matthew Bloxham has more on what investors are looking for there.
On the sales side, I think reassurance that the ad business, which is the vast bulk of their revenues, is being resilient. Market's looking for about 13% year-on-year growth, and that the cloud business is still growing at about 30 to 35%.
That's Matthew Bloxham of Bloomberg Intelligence. And ahead of those earnings, Alphabet shares are down nearly 2%. That's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
As a place to do business, the UK stands apart, not because of a single advantage, but a uniquely powerful
Adobe Acrobat Studio is all new. What can PDF spaces with AI do? Drag and research, drop in notes. Watch AI pull insights from your docs. Got the data? Do a recap. Generate a cool graph ASAP. You did your bit. It's time to share. Now let your team build from there. Ideate, generate, do it real quick. Let AI assistants do the trick. All wrapped up? Yeah, you won. Do that, doing that, did that, done. Now you can do that with Acrobat. Now you can do that with the all-new Acrobat.
We released our guide for 2026. 25% is the midpoint of the growth that we expect to see in 2026 is industry-leading growth, and that's a continuation of the momentum that we see as well in 2025. By the way, thinking about the Q4 that we also release the revenue that we deliver in the fourth quarter, we deliver 43% growth. So it's a continuation of that strong momentum getting into 2026. What is driving that is the similar drivers, the key growth products that we have. Of course, the incretin is getting all the attention, but we have a breadth of a portfolio across all our therapeutic areas that will continue to drive that growth into 2026. thinking about the drivers that you mentioned, we talk about the incretin portfolio, both in the US and OUS. You see that the market in the fourth quarter on the anti-obesity space grew 85%, and we actually outpaced that growth in the fourth quarter, and very strong growth as well in type 2 diabetes, 17%. So we continue to drive that growth into 2026. You mentioned as well the introduction of orforglipron. Very excited. We submitted for regulatory approval in the fourth quarter, and we expect to have regulatory action as early as Q2. So expect to see as well our oral pill coming into the market, a very exciting opportunity to expand the market. In addition to that, we are expanding through access as well with the agreement that we have signed with the administration in Medicare that we expect not later than July will provide access to Medicare patients, more than 40 million patients that could benefit to have access to anti-obesity medications as well. So very exciting time, very exciting opportunity ahead of us.
So, Lucas, there's a lot to dig into there. And you mentioned, of course, the breadth of your portfolio. But investors really, really care about the pill at this moment. So I have to ask a little bit more about that. You mentioned that potential 2Q launch. Is there a possibility that this outlook that you gave this morning gets upgraded as we start to see some of the uptake there?
Yeah, it's early days at this time. We just put the guide out there. We have a very thorough process, and we feel good about the guide that we have in place for 2026. It's still very compelling, by the way, 25%. There is no single pharma company growing at this pace. So we feel about good. We can see throughout the year if we see that continue to trend in the positive direction. But at this time, given all the variables that we have, we feel good about the guide that we have in place.
And so let's talk about the timeline a little bit more here. You and I spoke a few weeks ago at the JP Morgan Healthcare Conference. You said that you're on track for that second quarter approval. You reiterated that timeline today, of course, pending FDA approval. Let's talk a little bit about the FDA. There's been some challenges there. There's been some turnover. Do you see that potentially impacting the timeline at all?
At this time, we are engaging with the FDA, and we feel good about the progress. And so the time that I covered in JP Morgan that you alluded is still consistent with our expectation that we expect to see regulatory action as early as Q2.
All right. Well, we're almost in the second quarter, so we'll keep looking for updates there. I want to talk about pricing as well, because you take a look at this headline, you see global pricing declines in the low to mid-teens. This caught my eye because, of course, Novo Nordisk came out with that early release yesterday, and then they said on their earnings call this morning that they're facing unprecedented pricing pressure this year. So talk us through that, what that means for Eli Lilly and how you plan to make that up.
Yeah, well, actually, the guide, 25%, is encompassing as well the price step up or step down that we have in 2026. So that's included in our guide for 2026 already. When you think about the variables, they are all actually out there. We talk about the agreement with the administration. Those prices are public. We talk about direct to patient that we adjust the price by $50 across all our presentations. That's actually already implemented in the marketplace as of last December. And then we have the Medicare access that, again, we have a price of $245. That's also public price, public information out there as well. So those variables are out there. There is no news from my perspective in terms of the pricing dynamics. It's still going to be a price erosion versus last year. That's included in our guide. Very strong volume growth that we expect to see that will more than offset that to get to that 25% that we have in our guide.
Well, the dynamic is really interesting between pricing and volume. Another line in your earnings release that caught my eye was that you take a look at U.S. revenue. It increased 43%. That was driven by a 50% increase in volume, but it was partially offset by that 7% decrease due to those lower realized prices. So is the hope that, you think about some of the things in the pipeline, the pill being one of them, is the hope that that's going to help expand the market and thus expand volume as you see that price erosion?
Yeah, that's very important. As you mentioned, again, when you think about the volume growth and the volume opportunity, in particular, starting with both obesity and type 2 diabetes, we have a large opportunity. Both segments are really large, in particular anti-obesity medications. We are talking about more than 100 million patients in the U.S. that we can serve. And then globally, there is another 900 million patients that we can serve as well. Nowadays, we are serving low single digits, so the penetration is low, so there is a big opportunity to continue to drive that growth. The fourth quarter, I mentioned that the market in the US grew 85%. So there is a very big runway to continue to drive growth into the future that's reflected on our volume growth expectation for 2026.
And you touched on this a little bit, Lucas, but I do want to talk a little bit more about MFN pricing there. What impact would you expect that to have on your weight loss sales this year?
So the impact is included in that guide that I talk about, again, the low to mid-teens in price erosion. That's reflected in that price guide that we have for the year. And the prices, as I mentioned, are public. The $245 for the government segment and the public prices that we have in direct to patients, including the adjustment that we did for $50. So all is public prices. We have been very disciplined on our pricing strategy. You can look at the results quarter on quarter that we maintain that discipline throughout 2025. And my commitment is to maintain that price discipline getting into 2026 as well.
All right, fair enough. And I should bring up Medicare access as well, because expanding Medicare access, that is certainly top of mind for investors. And I'd love to hear from your perspective. How do you see that wider access impacting the market? And again, when it comes to the pill, would you expect that to be available to Medicare patients at launch?
That's a great point. Of course, again, not only tirzepatide, again, Zepbound, but also orforglipron will be available in the Medicare segment once that access is provided. So both molecules will have access to Medicare patients, and the patients will pay, actually $50 will be the copay that the patients will be paying for both medicines. So great opportunity to drive access. I mentioned 40 million patients. As always, penetrations will build over time. So starting of July, hopefully we will see that penetration growing over time. So that will build not only in 2026, but also getting into 2027 as well.
And Lucas, before I let you go, one thing that has changed since you and I spoke a couple of weeks ago back in January is that your Zepbound KwikPen, it actually won approval last month. As I understand it, that product is tied to your deal that you have with the Trump administration. So talk us through the rollout here. Do you plan to make KwikPen available to all patients, or would it only be an option for those Medicare patients?
Yeah, it's great news, by the way. I'm glad that you brought it up, because you asked me about the KwikPen approval. And again, it has been 3 weeks, and now we have the KwikPen approval, and we're planning to bring it to the market within the next 30 days. So that will bring another option. Of course, again, we are discussing about the channel segments. You mentioned Medicare being one of them, but also we will bring it in direct to patients. So that we will have more broad access is another opportunity, another option for patients that will have the opportunity to get to the KwikPen device. By the way, the KwikPen device is one that we have available in many countries globally with great acceptance as well.
All right, Lucas, thank you so much. I know it's a busy morning, so really appreciate you taking the time for us.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Traders driving this rotation out of some of the tech giants, advanced micro devices. Let's start there. We just talked about that a moment ago, Paul, but suffering the worst stock decline in more than 7 years. The sales forecast for this chip maker underwhelming investors. Eli Lilly providing an upbeat sales forecast for the year. The guidance, pretty sharp contrast to Novo Nordisk, for example. They warned investors that yesterday that its sales could drop as much as 13% this year. So Lilly's up close to 10%, and Novo Nordisk, these are the ADRs, they're down close to 5% right now. Some deal news. Banco Santander, this is the Spanish bank, agreeing to acquire Webster Financial, $12 billion deal to expand its operations in the U.S. And Mike Mayo, he's the head of the U.S. large cap bank research at Wells Fargo, says there is a new era for bank mergers.
Night and day difference in bank regulation. This is once in a generation deregulation. Since the financial crisis, regulators didn't want banks to merge so much, and now it's back to the future.
Right now, the S&P 500 down 34 points. That's down 0.5%, 6883 on the index. The Dow Jones Industrial Average up 290 points. And the Nasdaq Composite Index 347 points lower. This is down another 1.5% today. You see this one, the National Football League, the NFL, closing in on yet another record-breaking season.
Yep.
Viewership this season reaching levels not seen since 1989, and the league revenue on track to reach $25 billion, a new high. The thing is, they're searching for ways to push that even higher. As
Well,
you can
you know how
expect.
they're going to do it? They're going to lengthen the season to 18 games, so it's going to go. They're going to do it Labor Day because they saw the ratings that college got for Labor Day, and they're like, we're going to take some of those ratings.
Yeah, but then, do you make changes to keep all your players from getting injured?
I know,
so,
exactly.
whatever. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. What happened to Scarlett?
All right, Scarlett left a little early to get ready for the debut of her new TV show starting today. So if you want to chime in, feel free there anytime there. I want to start, John, with the AMD. That story really got my attention. It's down 16.5% today. I mean, this was one of the darling tech stocks, the chip names that were really riding the AI wave here, and it's at its worst day since 2017. The stock's up 70% over the trailing 12 months, but taking a big hit today. So let's figure out what's going on in that part of the world. Kunjan Sabani joins us, senior analyst covering the semiconductor companies, Bloomberg Intelligence. He's based in our Los Angeles office. Kunjan, is this an overreaction for AMD, or is there something fundamentally problematic there?
There was nothing fundamentally wrong in this report. There were a lot of good things to take away, but it comes down to, when you become an AI darling, you set up really, really high expectations. And when you take out the China revenue, which was not included in the guidance and the expectations, the beat came out pretty modest, which I guess people didn't like and was not at par against the really high expectations that you have now every quarter from these companies.
Like they used to ask in the old Westerns, is there room enough for the two of us in this town? Is there room enough for them and NVIDIA?
There is right now. I mean, look, the tide is lifting all boats. There is so much demand for accelerator chips that there's room for AMD as a GPU provider. There's even room for other folks like Broadcom and Marvell as an ASIC provider. So there's plenty of demand right now.
I used to work for a portfolio manager, and, one of our neighbors, I was recommending AMD, and it had a day like today. He would just pop his head in and said, do we like management? Do we still like management? And if the answer was yes, oftentimes he'd go out and buy more on days like today. Do we like management? Lisa Su, I think, is just, whenever I just see her interview, she seems super on top of it.
Yeah, I mean, like I said, fundamentally, nothing changed from yesterday, right? Their CPU story continues to become stronger. Nobody's paying attention to it right now because all the focus is on GPU and competing with NVIDIA. But people are forgetting inherently, when you look at 2 years back, this was really a CPU company. Their GPU storyline remains intact. We didn't expect any fireworks coming into this earnings. We don't expect it until really 4Q of 2026. So the market is aware of this. We really have to wait until the 4Q 2026. This is when they will be really put to test if they can really execute their first server level solution or not. So there's nothing changed overnight yesterday that we saw should really concern us.
And how important is China in all this? I thought the export restrictions were lifted. I mean, what's taking so long?
Well, so the export restrictions are different for each chip. So the MI308, which they were able to ship, had already licenses approved prior. So that's a different chip. The newer chips that now is in the news when it comes to NVIDIA is their H200s, and equivalent, it will be the MI325. Licenses for those have not been granted yet. Even though the White House has said that, yes, these companies can start shipping these products yet, the formal licenses have not been granted.
Kunjan, some M&A in your space today. Texas Instruments has reached an agreement to buy Silicon Laboratories for about $7.5 billion here. What's going on here with TI?
Yeah, so just to give some context, this is sort of this size of the deal they have not done in the past. The last time they did a deal like this was buying National for about $6-7 billion in 2011. So this is not the typical nature. So a bit of a surprise. Strategically, it fits well. Their industrial segment, which is their largest segment, and that's where they want to be focused, has a missing piece when it comes to wireless connectivity in IoT. So Silicon Lab gives them that portfolio. Financially, however, it's a lot more important. They have reiterated that this does not change their free cash flow trajectory. This does not change their dividend path, and this does not increase. The most important thing is the capex. So all those things we really like. If they're able to execute to that, get the cost synergies, then this will be a really good deal for them. Also remember, TI has been on a spending spree for the last 3 to 5 years, building up a lot of capacity. So this will help bring more loading to their internal factories and bring more manufacturing internal to own TI and help with utilization.
You know, one of the themes we saw in the sell-off today and yesterday was this CapEx spending. When it's all going to be paying off, investors getting a little impatient with everything. Is it all paying off immediately or in the near future for all these firms?
Well, so there's two pieces of CapEx spending, right? The one I think you're referring to is the high AI
well,
CapEx
for everybody,
spending.
yeah.
It's the jury is not out yet, right? We still need to see monetization. The CapEx spending is not done yet, so we still need to see a lot more proof points of monetization from all of this AI hyperscale infrastructure spending that's been going on.
All right, Qualcomm.
It's definitely been paying off for the chip companies, though.
Yeah, absolutely. All right, Qualcomm, the biggest maker of smartphone processors, will deliver its first quarter report on Wednesday afternoon today, offering insight into the impact of rising component prices on demand for mobile phones. What do you expect to hear from Qualcomm today?
Yeah, I mean, so far from what we have seen, yes, some industry analysts have reduced their unit expectations for 2026. Now folks are calling for the handset unit market, which is the phone market, to decline mid-single digits this year. We don't expect in the near term, which is the guide, the report and the guide today, Qualcomm to say anything negative. Remember, they have had this year a few of the premium Android launches ahead of what they have usually this time of the year. So that should really protect and benefit them for the near term. The concern is about the implied outlook of the June quarter because of these upfront launches, and if the memory prices do impact the handset unit volume projections for the second half, this is where the trough for them, which generally is a trough quarter, could be really negative. Also remember, since the start of this year, because of this memory price noise, this company, and also remember the upcoming Apple loss headwind this year, which will be multi-billion-dollar of revenue loss this year. The company has had a lot of negative sentiment, and you can see that in the stock since the start of January.
Absolutely. Today, the stock's up 1.6%, but down about 12.5% year to date. Kunjan, thanks so much when you're busy with all the M&A out there, earnings, all that kind of stuff. Kunjan Sobhani, he's a senior analyst covering the semiconductor space for Bloomberg Intelligence. He's based right out there in San Francisco, right in Silicon Valley, where all the action is taking place, is where a lot of the companies are domiciled there, so right in the middle of it, which is kind of what we like. Looking at the market here as we approach midday in the East Coast, S&P down 50 points, let's call it, 0.75%. The Dow's up 200 points, 0.4%. But again, the NASDAQ software companies taking it on the chin. The NASDAQ down 415 points, that's 1.8%. Bitcoin down 3.95%. Wow.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we got Scarlett Fu, Paul Sweeney, John Tucker live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well here. Super Bowl Sunday coming up. Big game. Go crazy. Seahawks and the Patriots here. Big business. I don't care how you look at it. Just monster business. Being a former media analyst, I always looked at how much they sell their advertising spots for. This year, I think NBC's getting $10 million for a 30-second spot. Geetha Ranganathan says she's a Bloomberg Intelligence media analyst. That could be $850 million and boost advertising revenues for Comcast NBC. Wow, that's big news. And
How much do they pay for the rights in the first place?
So this is the way you think about it. They pay a lot.
Okay.
So what they all say, and they've been saying it for about 30 years, is we'll make $1 on this. We'll make $1 on the Olympics. So from a cash accounting perspective, it's break even at best. But you'll see they use it as a big promotional vehicle for everything else that they own. Also a big betting situation. So let's check in with Brian Egger on the gaming side of the business. Senior gaming and lodging analyst with Bloomberg Intelligence. He's here in our Bloomberg Interactive Broker Studio. He doesn't mail it in. Brian, talk to us about the gaming aspect, the gambling aspect, because now everybody's got it on their phones. Everybody's got the DraftKings, and well, not every state, but a lot of the states do. What are the numbers?
So as far as games go, you're right. Everybody has the mobile app. I think that probably one of the downsides to sports handle comparisons might be there's only one new betting state since last year, Missouri.
Okay.
So not quite as much growth in terms of new markets. On the plus side, you have the Seahawks back in the game for the first time after 12 years. Now, if you look at the actual, like the betting line, if you will, Seahawks favored by 4.5, with a money line suggesting like a 70% probability they win. Kind of suggests not exactly a close game, and usually closer games you might think have better betting action. So that might work against it a bit, but overall, pretty good.
Red headline crossing the Bloomberg terminal. I want to get that out there. Bureau of Labor Statistics, BLS, reschedules January employment report for February 11th. So a little delay, John, but we'll get it nonetheless.
Okay, because of the partial shutdown that's now reopened.
Yeah, there you go.
The betting markets or prediction markets part of this thing too?
So prediction markets, Kalshi, Polymarket, Robinhood, there are others there. They're involved, obviously. It's a big source of contention between states and federal, between sports books and the prediction market apps, but they are certainly involved as well in terms of the probability. So,
I'm a big fan of the sports books and the Vegas casinos. And actually, I think my favorite, I'm a Bellagio guy for rolling the dice, but sports book, I still like Caesar's Palace.
Mm-hmm.
How is the sports book as a part of the casino revenue? That's not a big deal, is it?
That's maybe 2-3% of revenue. It's but it's a big, obviously there's a lot of traffic in the casino for events like the Super Bowl. Sports books are busy, so it helps table play, all else being the same.
Sports book at Caesars, yeah.
So Drake May is not Patrick Mahomes. I mean, can I say there's a lack of a really big superstar with either one of these teams? How is that going to impact things?
Yeah, our analyst Poonam Goyal covers athleisure, has written about this. I think the lack of a marquee name, Mahomes in particular, the Adidas spokesperson, probably hurts them. Nike maybe benefits a bit because they've got a uniform deal. They don't have an ad spot, but they've got a fairly significant uniform deal. So it kind of works both ways in terms of the absence of star power.
How is the DraftKings of the world, and how are they doing as companies, as businesses, and stocks?
Yeah, I mean, overall, there are some overriding concerns about the future of sportsbooks in particular. One is, which John mentioned, prediction markets. Do they have an adverse competitive impact? We think probably it's a much bigger deal in states where betting isn't legal. Okay. So that might be a little bit of an overstated concern, but it's a concern that's out there. And the other is how the game outcomes affect the hold rate and the win.
All right. Another red headline here. We're getting fast and furious. The BLS reschedules U.S. January CPI report to February 13th. So there you go.
February 13th. I don't have the what's.
No, I don't know if that's a Friday.
Anyway. Mr. Bunny at halftime show. Yep. What's that going to do for
halftime shows are a big deal. I mean, if you look at the Paul and I were just talking about.
Can you bet on the halftime show?
I bet you with these prediction markets.
I'm sure there's prop bets to that effect. I haven't looked at them, but there certainly are prop bets to that effect.
Will Bunny fall off the stage?
Right, exactly.
Comcast, NBC poised to do well with an increase in ad revenue versus Fox last year. Bad Bunny halftime show is obviously a big benefit.
So just broad, let's step back. Vegas or just gaming. How's the year expected to be for global gaming here?
it's mixed across jurisdictions. Vegas had fairly soft second half versus the prior year, particularly in kind of the low end of the market, better on the high end. It seems to be doing better in terms of group events this year. And then regional gaming has been a relatively stable business.
That's stable.
So it varies a lot by subsector.
Like the regional ones, like the riverboat.
Yeah.
The price of gasoline impacts that business,
yeah.
right? I mean, if people aren't going to drive, the
a lot of local economic considerations affect the regional casinos for sure.
And I like Asia. I mean, I'm a big Macau fan, and even I like the Singapore casino.
I mean,
too.
Macau is up a bit, particularly in the VIP business. This year, I think January was pretty solid. We have Lunar New Year next year, Golden Week and all that. So we'll see how that fares for the big Vegas casinos, and we get the other companies report earnings and get a better sense.
All right.
But Lunar New Year, big deal.
Lunar New Year, big deal. Okay. See, that's stuff you got to know in this gaming business, John.
How much you got on the line for this game?
No, I'm clean on this game. Got nothing going here.
Right.
Brian Egger, thank you very much.
Thank you.
Senior gaming and lodging analyst for Bloomberg Intelligence. Appreciate that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment, with the S&P down 30 points, the Dow up 300 points, the NASDAQ down 330 points. Find the trend there. 10-year Treasury yielding pretty steady here, 4.27%. That does this for the Bloomberg Intelligence Program. More Bloomberg Radio coming up right now.
Is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Trump borders our Tom Homan says 700 federal officers will be withdrawn from Minnesota. That's about a quarter of the total number sent in.
We created one unified chain of command, make sure everybody's on the same page, make sure we deconflicting targets, and making sure we follow the rules.
Agents in Minneapolis have been involved in 2 fatal shootings. CBS's Omar Villafranca tells us federal authorities are releasing 4th grader Elizabeth Zuna, the first of several students detained by immigration officers in a Minneapolis suburb.
The school district told us that it was a mother and daughter. They were detained last month. They were down in Texas. They are out of the detention center. They're now in a shelter right now, waiting transportation back up.
Now to Arizona, CBS's Andres Gutierrez says investigators looking into the disappearance of Savannah Guthrie's mother are trying to authenticate an apparent ransom note.
They won't discuss its demands. They won't discuss how it was delivered, but they are treating it as potential evidence, not as a distraction. And for today, they don't plan to have any briefings or news conferences, but that could change if there's a big break in this case.
In Washington, CBS's Linda Kenyon reports President Trump had a phone call today with China's president.
President Trump continues to take steps to isolate Iran, in large part due to its nuclear program. In his call with President Xi, he says he discussed sanctions against countries that do business with Iran, including China. Also, posting on social media, Trump wrote, quote, "The relationship with China and my personal relationship with President Xi is an extremely good one, and we both realize how important it is to keep it that way."
A third of the staff has been laid off at the Washington Post, as we hear from CBS's Michael Wallace.
During a Zoom call with employees, executive editor Matt Murray announced the elimination of the paper's sports department, a restructuring of its local news department and editing staff, and a reduction of its foreign coverage, with fewer journalists stationed overseas. Reacting to the Post's layoffs, White House Communications Director Stephen Chung posted on X, quote, "Just a reminder that printing fake news is not a profitable business model."
On the Health Watch today, CBS's Allison Keyes has more on a recall of some glucose monitoring sensors linked to at least 7 deaths.
Abbott Diabetes Care is recalling its Freestyle Libre 3 and Freestyle Libre 3 Plus glucose monitoring sensors, saying the devices are giving readings that are lower than actual blood glucose levels. The company says as of last month, 7 deaths and 860 serious injuries had been linked to the problem.
And checking Wall Street, right now the Dow is up 290 points. The S&P is lower and the NASDAQ is down as well. This is CBS News.
नेचुरल गैस का व्यू एनी नियर टारगेट सी टारगेट है ऊपर फिलहाल के लिए तो 325 330 के अराउंड 320 तक तो चला गया है 10 पॉइंट और अगर ऊपर जाता है तो बाइंग में हो तो अपना 90% प्रॉफिट बुक कर लो ऑलरेडी ये सपोर्ट जोन से देखोगे तो 25 पॉइंट चला गया है तो 30 पॉइंट के आसपास का ही फाइनल टारगेट है लेट्स सी अब जाता नहीं जाता ऑलरेडी 1.5 घंटा और है मार्केट क्लोजिंग में तो चांसेस वैसे थोड़े से कम ही लग रहे हैं अब थोड़ा सा डाउन ही हो गया नाउ बट या 330 तक फाइनल टारगेट है अगर जाता है तो ऊपर कोई नई एंट्री नहीं है क्रूड भी साइडवेज हो गया एक रेंज के अंदर नीचे सपोर्ट अच्छे हैं इसलिए प्राइस नीचे भी जाने के चांसेस बहुत ज़्यादा कम है 5590 के नीचे तो रेयरली ही जाएगा ये सपोर्ट काफ़ी स्ट्रांग है दिस होल एरिया हो सकता है डीप लेवल से सपोर्ट ले ले बट ओवरऑल इट इज़ वेरी स्ट्रांग कि जिस तरह का स्ट्रक्चर बन रहा है क्रूड ऑयल का, लग तो बुलिस ही रहा है ओवरऑल। एक फ्लैग भी है यहाँ पर छोटा सा, आज इंट्राडे में देखोगे तो। यहाँ से ऊपर अगर सक्सेसफुली ब्रेकआउट हुआ तो फिर 6000 का लेवल ही है नेक्स्ट, अगर होता है ब्रेकआउट अबव 5790 के ऊपर 15 मिनट टाइम फ्रेम पर। ईरान इशू भी ऑलमोस्ट रिजॉल्व हो गया, अब क्यों भाग रहा है? ईरान इशू अभी रिजॉल्व हुआ नहीं है, अभी फ्राइडे को यूएस और ईरान की मीटिंग है ओमान में, तो वो अभी कह नहीं सकते इशू रिजॉल्व हुआ है। बाकी वैसे यूएस का कुछ भरोसा भी नहीं है, पता चला आज बातचीत करी, कल वहाँ वापस अटैक कर दिया, हु नोस। बाकी यस, जियोपॉलिटिकल टेंशन तो कम है। क्रूड ऑयल वैसे भाग नहीं रहा है, क्रूड ऑयल इट इज नाउ साइडवेज। गोल्ड ओवरऑल बुलिश है, गोल्ड का ऐसा कुछ वॉर से रिलेटेड नहीं है। मेजरली जितने भी सेंट्रल बैंक्स हैं वो कंटिन्यूअसली गोल्ड बाय करे जा रहे हैं। लास्ट मंथ का डेटा देख लो, जनवरी मंथ में भी जो मेजर कंट्रीज हैं उनके सेंट्रल बैंक ने इस बार भी गोल्ड बाई किया है कंटिन्यूअसली। तो गोल्ड और सिल्वर उस वजह से थोड़ा सा बुलिश ही है। हाँ, मेटल्स जरूर नहीं है सारे के सारे बुलिश ही हों। कॉपर में प्रॉफिट बुकिंग वापस आ गई, प्रॉफिट सेल ऑफ आया था वहां पर प्रॉफिट बुकिंग आई, उसके बाद वापस बाइंग की प्रॉफिट बुकिंग चल रही है। सेम फॉर गोल्ड एंड सिल्वर। ओवरऑल तो बुलिश ही दिखेंगे बट हायर लेवल से प्रॉफिट बुकिंग आती हुई नजर आएगी जरूर। गोल्ड फॉरेक्स में तो थोड़ा सा ज़्यादा ही प्रॉफिट बुकिंग में चला गया। बाकी जो मेजर टिकर थे फॉर डॉलर इंडेक्स, क्योंकि याद रखना गोल्ड और सिल्वर ऐसा नहीं है कि वो अपने आप ऊपर ही जाते रहेंगे, डॉलर नॉर्मली वीक होता जाता है। डॉलर 97 डॉलर के आसपास ट्रेड कर रहा था, मेजर रेजिस्टेंस है 97.50 डॉलर। 97.50 के ऊपर अगर ये सस्टेन करता है हायर टाइम फ्रेम पे तो फिर ये काफ़ी ऊपर चला जाएगा, और जितना डॉलर ऊपर जाएगा गोल्ड सिल्वर गिरेंगे गिरेंगे। तो गोल्ड और सिल्वर को ऊपर जाना है तो यूएस डॉलर को नीचे आना पड़ेगा, और नीचे भी अगर देखोगे 95.500 मेजर सपोर्ट। तो फिलहाल के लिए 95.50 से 97.50 के बीच में ही है। 97.50 के ऊपर बुलिस हो जाएगा काफ़ी ज़्यादा। 95.500 के नीचे सुपर बियरिश। तो जब तक इस रेंज में है मुझे लगता है थोड़ा सा होल्ड हो सकता है गोल्ड और सिल्वर में। वैसे अगर आप सिल्वर को देखोगे एमसीएक्स फॉरेक्स में, सिल्वर का जो प्राइस है दैट ट्रेडेड अराउंड $90 के अराउंड ट्रेड कर रहा था, अभी तो थोड़ा सा नीचे आ गया $86। संघाई में देखोगे, ये तो हमारा कॉमेक्स का है, संघाई में देखोगे तो लगभग 10 से 15 पॉइंट के प्रीमियम पे चल रहा है। अभी 90 जब हमारे वहाँ चल रहा था संघाई में, उस समय जो सिल्वर का प्राइस है वो काफ़ी ज़्यादा प्रीमियम पे था। तो ओवरऑल देखोगे तो वहाँ अभी भी बाइंग ही चल रही है, बट नीड टू सी क्या ये जो बाइंग है रियल है या फिर जस्ट चाइना के थ्रू बनाएगी एक बबल है जो बस्ट होगा अल्टीमेटली, हु नोस। बट या काफ़ी ज़्यादा प्रीमियम पे चल रहा है संघाई में सिल्वर अभी भी, इवन तो इतना फॉल हो गया। सबसे नीचे $78 है शायद, आई थिंक ना। हाँ, वो रिसेंट स्विंग बना था $78 के नीचे। उसके नीचे 4 आवर टाइम फ्रेम पे ब्रेकडाउन नहीं होता तब तक तो ये सपोर्ट ही है। $78 के नीचे गया ब्रेकडाउन पे तो फिर एक हेड एंड शोल्डर पैटर्न बन जाएगा, वो ध्यान रखना। 4 आवर टाइम फ्रेम बड़ा टाइम फ्रेम है, अगर ऐसा हुआ 72-78 है शायद, उसके नीचे अगर ब्रेकडाउन होता है तो एक हेड एंड शोल्डर के थ्रू गिरेगा पैटर्न हायर टाइम फ्रेम पे, और फिर आप मान के चलो जो हेड एंड शोल्डर का हेड है दैट इज ऑलमोस्ट टॉप से अगर देखोगे जितना फॉल किया है दैट इज अराउंड 38%। तो अगर वो फॉल करता है तो फिर वो वापस एक जो ब्रेकआउट हुआ था मल्टी ईयर्स $50 के अराउंड वहां तक चला जाएगा। बट उसके लिए $72 $78 के बीच का जो जोन है वो ब्रेक करना जरूरी है, तो दैट इज स्टिल अ स्ट्रॉन्ग सपोर्ट। उसके नीचे ब्रेक होता है नहीं होता, नीड टू सी। मुझे लगता नहीं इतना इजी रहेगा $72 को ब्रेक करना। बाकी ये हायर टाइम फ्रेम पे नीचे के बहुत सारे रिटेस्ट जोन पेंडिंग है, वहाँ आना तो चाहिए लॉजिकली एक ना एक बार कभी ना कभी, स्पेशली वो जो $50 का लेवल है सिल्वर में, वो हेड एंड शोल्डर भी है वहाँ पर, और एक कप सिर्फ बना हुआ है, उसका ब्रेकआउट लेवल भी है जिसको हम राउंडिंग बॉटम पैटर्न कहते हैं, तो उसका भी रिटेस्ट हुआ नहीं है अगर आप देखोगे मंथली, वीकली और डेली टाइम फ्रेम पे। तो वहाँ पर आना भी एक ना एक बार पेंडिंग बनता है लॉजिकली, क्योंकि पैराबोलिक कर्व में गया है, रैली में गया है मार्केट। ऊपर अगर चेकआउट करोगे तो ऊपर $112 $115 मेजर रेजिस्टेंस है, स्मॉल रेजिस्टेंस $95 $94 के अराउंड। गोल्ड और सिल्वर मुझे लगता है अब रैली करेंगे अगर करते हैं, या फिर फॉल आता है, दैट इज कम्प्लीटली बेस्ड ऑन द फंडामेंटल। ट्रिगर पॉइंट तो मुझे लगता नहीं अब कुछ होने वाला है, स्पेशली अगर ईरान और यूएस के बीच में वॉर वगैरह नहीं होती है, तो अगर कोई डील हो जाती है तो जियोपॉलिटिकल टेंशन वहाँ खत्म, रशिया यूक्रेन वॉर का भी मुझे लग रहा है एंड होने ही वाला है, तो फिर ऐसा कोई ट्रिगर पॉइंट बनता नहीं है। एंड आई थिंक नेक्स्ट मंथ यूएस प्रेसिडेंट चाइना भी जाने वाले हैं, चाइना की भी विजिट है उनकी, तो वहाँ पर भी शायद वो कुछ ताइवान को रिगार्डिंग बातचीत करेंगे, रेयर अर्थ मेटल के रिगार्डिंग बातचीत करेंगे, तो ओवरऑल ऐसा कोई बहुत बड़ा इशू लगता नहीं है गोल्ड और सिल्वर में होगा। हाँ, यूएस में इस साल नवंबर में मिड टर्म इलेक्शन है, जिसमें मोस्ट प्रॉब्ली ट्रम्प की पार्टी हारी जाएगी, तो उसका हो सकता है थोड़ा बहुत इम्पैक्ट पड़े मार्केट पे। अदरवाइज और जो पॉलिटिकल टेंशन कुछ है नहीं अभी जो इम्पैक्ट डालेगी मार्केट में।
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Elon Musk's SpaceX said to be open to its IPO pitching to non-U.S. banks. Now, sources tell Bloomberg SpaceX held meetings with banks from outside the U.S. for its IPO as Elon Musk's rocket and satellite maker targets a listing this year on an ambitious timeline. The January 11th employment report rescheduled for February 11th. Jobs Wednesday, this according to the Bureau of Labor Statistics. The Dow higher, the S&P, NASDAQ both lower. Tough day for a lot of software names. Wall Street traders keep driving a rotation out of tech giants. We got more with our Caroline Hyde coming up in just a moment. S&P right now down 40, drop there of just about 0.6%, 68.76 where we stand right now. The Dow pushing higher. Dow up 249, up 0.5, a retreat for NASDAQ down 1.6%. The NASDAQ 100 index down 1.85%, while the Russell 2000 index of small cap shares down now by 1.3%. And our Mag 7 index, the Bloomberg Mag 7 index down 1.6%. Your 10-year 4.26%. Spot gold is slumping 0.8%, 49.04 the ounce. Spot silver though higher, up 0.8%, 85.87 a barrel. And West Texas Intermediate crude 63.58 a barrel right now, up by 0.6%. Silver again 85.90 the ounce, up 0.8%. A slump for Bitcoin now with a $72,000 handle. Bitcoin 72,720. Bitcoin down by 4.5%. Uber after earnings trading lower by 3.6%. Lyft, which reports next week, down 2.5%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Quite a market on our hands here today, Charlie. Thank you. Charlie Pellet will have more on the markets in about 20 minutes' time here on Balance of Power as we connect the dots between Washington and Wall Street, although investors are connecting a lot of their own dots here today, and in some cases, they just may not be well placed. Looking at some of the declines here, my God, Google, you'd think there might be a little appetite for Alphabet after the bell. It's going to have a BOFO report we keep hearing. It's down 2%, but look around. Palantir, it's down $20, 13%, caught in the downdraft of the software sell-off. By the way, the IGV, the ETF that we track the whole industry on here, the iShares expanded software down 3%. Somehow Microsoft has a bid, but that's because it bounced off the floor near $400 earlier. Salesforce down again. Even the cyber stocks are crumbling. CrowdStrike is down. Palo Alto, they were both down super hard yesterday. And so there's a question that we explored a little bit with Caroline Hyde last time she joined us here. Yeah, look at NVIDIA's falling out of bed. Boy, James, we can't find a winner here in this space. Some of these memory stocks, by the way, don't even look at SanDisk. If you've been patting yourself on the back there, you might want to check the portfolio. Micron down 11%. Anyway, I digress. Last time Caroline Hyde joined us, we were talking about this spread into software that may or may not be justified. This negative spread because of AI, right? You talk to the folks at Anthropic, you talk to Claude, and you start thinking, well, maybe we don't need all of these expensive proprietary software companies. Adobe, anyone. This has been a rough ride for them. But as we asked Caroline Hyde last time, are we to believe then that we're going to vibe code like our new operating system? I'm going to buy a computer, don't need Windows, I'm going to vibe code that. Doubtful. Also, don't you need lots of software to run AI? Okay, so we'll park those questions there. It's about this undertow that's pulling a lot of good stocks down with it that I'm curious about. And she's back with us, as promised. Caroline Hyde, the co-host of Bloomberg Tech, live at World Headquarters in New York. Caroline, it's great to see you. How are you making sense out of all this? Because somebody's making some bad decisions right now, right?
Oh, boy. You've got to be riding out the volatility right now at the moment. And look, none of this narrative is new. We have been worrying about software having its lunch eaten by generative AI for a while. And then when you go to the fundamentals, look, we had ServiceNow CEO on Bill McDermott last week showing really good growth in subscriptions. Still, his tools are being bought. He has a platform offering that is interjecting generative AI within it. And still, his stock gets hammered. Palantir, its earnings just beat all expectations yesterday. And now it's the worst performing stock on the NASDAQ 100 at Lovin. I mean, close your eyes. Don't even look how much that particular software name is getting smacked. And you're right, the 2 trillion that we've seen being wiped off more broadly on the Goldman Sachs software index since its highs just speaks to the ongoing concern that we've seen, but it does seem to have been catalyzed. The straw on the camel's back has been broken by the latest co-work offering coming from Anthropic, which does manage to help automate your contracts. Yes, you still need a pair of legal eyes, a human in the loop, as they say, but maybe far fewer humans. And I think that's why we had a really interesting conversation with an investor on our show a little bit earlier. And he was saying, look, yes, LexisNexis is perhaps a worry. That's a point solution that you have when it comes to the legal work of the future. Yeah. However, are you really going to rip out your platforms like Microsoft Copilot? Are you going to take away ServiceNow? Is Salesforce going to be unlocked? Is Adobe going to no longer be within your offering from an enterprise perspective? He doubts that. He thinks long-term, fundamentally, a lot of these platforms have stickiness and actually are showing good growth when it comes to the adoption and use cases of Copilot, for example. However, that doesn't take away the ongoing anxiety and the willingness to just sell into this market. Who wants to catch a falling knife?
God, wow. I'm just looking at the tickers you mentioned. James is putting them all in the IB here. This is beyond software, by the way. Look at AMD. My God, it's down 17%. NVIDIA down 4%. You said AppLovin, 14%. Palantir. So is this the washout? What's happening?
It feels that way because AMD, again, look at the fundamentals. The earnings beat the general consensus expectations. However, it wasn't bullish enough for some of those at the top end of the market. And also they had a little bit of sales, more than $300 million worth, into China. Was that able to support perhaps some of the underlying metrics? And actually that China demand is still going to slow until they really get their licenses in focus. Bloomberg Intelligence is saying, look, the second half is going to be the inflection for AMD. That's when their new and latest architecture is going to be taken up and adopted at more given scale. But for now, does it really need to be punished for the worst day since 2017? May 2017? What's Lisa Su to do to try and calm this? She sounded bullish. She was talking about the tens of billions that they're going to be getting from their AI accelerator products. But NVIDIA's out there currently. We've got a scoop saying that NVIDIA is going to be committing $20 billion to the latest OpenAI funding round. That means it is ever more integrating into these large language model providers that are going to use its GPU going forward. However, their stock's getting slammed as well. It really feels just like a sell the news moment. Risk assets, as you say, crypto's off significantly.
Yeah, boy, I haven't even mentioned Bitcoin in this conversation. But great quote from Jensen Huang at an AI conference in San Francisco. This was the Cisco conference in San Francisco. He called the idea of AI replacing software, quote, the most illogical thing in the world, unquote. If you were a robot, he says, would you use tools or reinvent tools? The answer, obviously, is to use tools. That's why the latest breakthroughs in AI are about tool use. It's just an interesting aside here because Jensen Huang always talks about software, right? We call it a chip maker, but the software is a critical component of the stack.
Yes, exactly. And why he is so sticky, why his offering is so necessary, because a lot of the times to get the most effective bang for your buck, you want the entire offering coming from NVIDIA. You don't want a separate software. You want it to be working with CUDA when you put in the latest offering of Blackwell, and even looking out into Vera Rubin at the moment. He's even trying to get in on the CPU play, not just the GPU play. And of course, that sent anxieties into the likes of AMD, Intel, and the like. But he, of course, wants to be talking up the stickiness of current offerings out there at the moment more broadly. And it doesn't serve him to see all of the Salesforce, the ServiceNow, the companies that he's been so used to, and in many ways are trying to inject agentic AI into their offerings. He doesn't want them to fail at the sword of these new Harvey AI and new adoptions that we're seeing. But if you talk to a venture capitalist, many of them are banking on this new layer of AI offering, taking away market share. I was just talking about a travel company, Fora, the modern travel agency that's backed by the likes of, well, Thrive Capital, for example. Will that eat into Booking.com, even though Booking.com is currently in ChatGPT, should you wish to it? You know, we are at this moment of dislocation, and everyone's trying to push us forward into the future. And really, is history the guide? Or is it your view on how big certain companies and how sticky big companies currently are in the enterprise space? Because consumers, yeah, we're fickle. But enterprises, far less so.
Amazing. This moment of dislocation. Look at Broadcom, just fell below $300. Absolutely incredible
And it's
moment.
making
So
all
what's
the
going to
chips
happen
for all
after
of
4 o'clock?
I mean,
Yeah,
it's
this is-
making all these ASICs for everyone else.
Right. And that this was a darling just a couple of minutes ago when it cut the deal with Google with these TPUs. So bring us to 4 o'clock after the bell and Alphabet opens its books. Could this whole story change?
I wonder, because we're expecting good growth. But the market had already run into that good growth. So Alphabet had been one of the best performers of 2025. They had been up significantly in 2026. And they're now just up about 6% more broadly. But we are thinking of healthy revenues. 17% growth for their fiscal fourth quarter. $95 billion is what they're bringing in. $340 billion on a year. This is a company that's going to be showing profitability. But again, when it comes to Microsoft, remember just last week, Microsoft had its worst sell-off in years since 2020, even though it beat expectations. So we're going to want to see the cloud growth. You want to understand how the TPUs are helping serve the rest of the overall Alphabet offering, how Gemini is stealing a march within large language models and adoption more broadly. Look, Google has just let out a new model to help you make games. Well, gaming stocks, Take-Two is down hard today, even though its earnings were pretty solid because of the development that maybe is going to be taken away by some of these big large language model providers. So Alphabet, we are going to need also CapEx. How much are they having to spend? Because as a percentage of revenue, they haven't spent as much as some of the other hyperscalers. How are they thinking about maybe up to $28 billion that they're going to have been spending in this quarter alone?
Amazing. So counsel our listeners and viewers then on how they should be looking at this massive company. You just gave us a couple of important numbers to look at, but when you consider what Alphabet or Google is, it's a combination of a number of really fast-growing companies, including Waymo. They've got the biggest video service in YouTube. Yes, they're going to be talking about AI. But do we miss the forest for the trees when we have so much to consider in a company like this?
I think sometimes, in a way, like Waymo, woohoo, just raised all this money. It's got a huge valuation. But how much is that helping the rest of the ecosystem? And that's what Sundar Pichai really needs to get across. The fact that they have grown in-house and now with external money coming in as well, Waymo, which many would say the future of robotics. Robotics is the use case for generative AI. Automotive and AV is the current use case that's going to drive these models forward. How can he say that that is turning the flywheel of the rest of the business that will help him score more business for Gemini more broadly and the rest of their software offerings that we're currently trying to understand and game out the competitive landscape on? So I think Sundar often does a great job at that, at how this all works together. But where they can dine out is how much TPUs, their hardware, their chips, have really helped their own models.
It's going to be a really important call. And of course, Caroline's going to be listening. And we're going to be joined by the great Caroline Hyde in the heat of the moment, I am told, on the late edition of Balance of Power. I hate doing that to you right when the numbers are flying after the bell, but it's going to be great. And we appreciate, as always, your clutch analysis on this. I could listen to you all day. And so we're going to do just that. Caroline Hyde, thank you as ever. The co-host of Bloomberg Tech and a sage on these stories, a great helpful voice on Balance of Power. I'm Joe Matthew in Washington. Thank you for joining us here on the Wednesday edition. So you've got a date here, right? Late edition of Balance of Power, Alphabet earnings. We'll spend time with Caroline, and coming up, we spend time with our political panel. Rick Davis and Jeannie Shanzano join us as more ICE agents leave Minneapolis.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing political story out of New York State. New York Governor Kathy Hochul has selected former New York City Council Speaker Adrienne Adams as her running mate. Now, that's according to multiple news reports at this hour. Adrienne Adams, you'll recall, recently ran for mayor. U.S. equities trading mixed right now. We've got the Dow Jones Industrial Average now up by under 0.1%, still holding on to a gain of 28 points. The S&P 500 index down 75, a drop there of 1.1%. NASDAQ down 548 points. The NASDAQ Composite Index now down by 2.4%. The tech selling intensifying. NASDAQ 100 Index down 2.5%. The Russell 2000 Index of small cap shares down now by 2%. The 10-year at 4.26% with the 2-year 3.55%. Gold down $31 the ounce, 49.13, down 0.6%. Silver up 0.4, 85.50 the ounce. West Texas Intermediate crude now surging back above $65 a barrel, 65.18. WTI up 3.2%. And Bitcoin, the selling continues there. We've got Bitcoin 72,390 now. Bitcoin down by just about 5%. UBS shares trading lower despite the bank posting profit that did beat expectations. UBS down now by 6.6%. Elsewhere in the banking industry, a cross-border deal involving Spain's largest bank, Banco Santander, and Webster Financial. It is one of the largest ever U.S. transactions by a European lender. Mike Mayo, the head of U.S. large-cap bank research at Wells Fargo Securities, told Bloomberg Open Interest to expect more bank deals because of a shifting regulatory environment out of Washington.
The regulators are approving deals, faster with more certainty, and I think that's a good step. So, look, there's a need for economies of scale. There's an ability with regulations, and then we just had this big merger yesterday. I think this is the start of a new era for bank consolidation. I think the window is literally now.
Mike Mayo of Wells Fargo Securities. And right now, Webster up by 0.5%. Again, Banco Santander, the ADRs up by 1.1%. Balance of power continues now. Back we go to Washington. Once again, your host, here is Joe Matthew.
Boy, it happens fast, Charlie. This has been quite the day, huh? The VIX is back up around 21 here. Tom Keene's antennas just went up on Park Avenue. And crypto, we haven't gotten to it till Charlie just mentioned it right now with a 72 handle. Crypto's down 5%. I say crypto, I mean Bitcoin, down $3,700 at the moment. With high tech just in the crosshairs. We'll see what happens after the bell. Alphabet will have quarterly results. Caroline Hyde will join us on the late edition of Balance of Power with the readout. I will let you know Google shares are lower right now. Not a lot of love, even though expectations are high for this report. It's down $10 or 3%. Quite a day at the Washington Post. One of the stories you might have heard mentioned in our newscast is about 2 blocks over from where I sit right now. As the Washington Post tells employees, it is beginning a widespread round of layoffs. 30% of the newsroom today gone. 300 journalists out. And this is a company, of course, that had already been cutting significantly. This is Jeff Bezos' operation now. And it's getting a lot of news, getting a lot of attention because of the amount of money. I think it was $40 million that they paid for the Melania film. Lizzie Johnson, correspondent at the Washington Post, just noticed on Twitter, is reporting from Kyiv and has been, how this goes, has been living in bomb shelters. Waking up, she wrote just hours ago. Actually, I'm sorry, this was a retweet from just hours ago. On the 25th of January, waking up without power, heat, or running water again, but the work here in Kyiv continues. And she's got a picture sitting in the back of a car freezing. Lizzie Johnson, I was just laid off by the Washington Post in the middle of a war zone. I have no words. I am devastated. Our thoughts are with the journalists at the Washington Post today. As we make our way through the Wednesday edition of Balance of Power, important conversation coming up at the top of the hour, by the way. Mitch Landrieu is going to be with us. We thought we'd pick his brain, the former mayor of New Orleans, following the standoff that we have been witnessing in Minneapolis. The standoff, of course, between federal law enforcement and local authorities. What would you do if you were still in charge, will be our question for Mitch Landrieu, who is, of course, President Biden's infrastructure implementor. Did we call him the infrastructure czar? There were too many czars to keep straight. And this whole story in Minneapolis today is a pretty big one. Tom Homan this morning announcing the withdrawal of 700 federal agents from the city of Minneapolis, the beginning of what could be more. There are 2,000 remaining here. This is about a quarter that we're losing in Minneapolis. And he says if cooperation continues, and you know what the line from the administration has been about sanctuary cities and states, if this continues, then maybe they'll all leave. It's where we start our conversation with our political panel. Bloomberg Politics contributors Rick Davis, Jeannie Shanzano are with us. Jeannie is our Democratic analyst and a democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick, our Republican strategist and partner at Stone Court Capital. Jeannie, is something developing positively here? Because it's against the backdrop of the rewriting of rules for DHS here in Washington that may or may not be done by the time this continuing resolution is complete. But moves like this, moves like body cameras announced by Kristi Noem, do they move the needle for Democrats?
I don't think so. I think you still have a very strong sense on the Democratic side that this is something of theater, the Republicans and the president reacting to polls which are not going in their direction. Even just a few hours ago, you had reports out of Minneapolis of protesters being maltreated. You had the testimony on Capitol Hill, which was absolutely devastating yesterday, of victims, not just from Minneapolis, but other cities who have been maltreated and indeed had family members killed at the hands of ICE. So I don't think this is going to be anything that's going to placate the Democrats in Congress, and certainly people on the ground, especially when you listen to the president's rhetoric, and the rhetoric coming out of the House from Mike Johnson and others who are saying, you know, in return for making a deal on DHS funding, we need a deal on sanctuary cities. All of that is a non-starter for Democrats. So I think we are right back where we started from, with very little room to maneuver here.
Boy, well, that doesn't sound encouraging, Rick, because it does seem like that's where Republicans are going here, right? If you want to demask, if you want tighter rules on the use of warrants in these raids, then we need an agreement on sanctuary cities cooperating with the feds. Is the negotiation already over, or is this the start of something?
Yeah, I think it's the start of something. Look, you needed to get to this point where you take the rest of the government agencies that were, needing funding off the table. You've isolated it now to DHS, and not even to ICE, but to other agencies within DHS that didn't get the generous funding in the big, beautiful bill that ICE got. That being said, I got to believe that Homan's actions in Minneapolis, St. Paul, have contributed to an environment where there are conversations. Remember where we started. Bongino and his thugs were in Minneapolis wreaking havoc. Democrats were all over it. There was no appetite to have any negotiations related to the budget until that changed. President dispatched Homan. They got rid of Bongino and his guys and immediately started doing business with the city and the state. You haven't seen the governor or the mayor of Minneapolis attacking the administration in the last 48 hours. I mean, it is definitely a better environment to have a negotiations. Not perfect, but substantially better. And if they continue to draw down the remaining 2,000 federal officers who are there, that'll just create more goodwill on Capitol Hill to get a deal done. And then look what's happened on the Hill. How many Republicans have actually started saying, hey, it's okay, body cameras, we're for that. Yep. We need a code of conduct. I mean, a lot of the negotiating items that Democrats put on the table just a few weeks ago are now being embraced by Republican senators and members in the House. So I think there's a deal to be done here. Obviously, it's never pretty to watch the sausage being made, but it always tastes good when you fry it up at the end.
Well, I guess that's true, Jeannie, although getting another CR, if this isn't done in 9 days, could be a really heavy lift. What do you think of this idea? And we've talked about this before, that Homeland Security never gets funded, that there's just a CR for the rest of the year or none at all, and the administration's forced to use money from the big, beautiful bill.
That's, I think, the most likely scenario here. We should say the mayor of Minneapolis did respond to Tom Homan, as did the governor. You don't hear a lot of people out there who are happy that this has moved in this direction. Certainly, the governor said the 700 is a start, but it's nowhere near where they need to be. I do think the most likely scenarios here are we get a CR. And I think that's not likely. The most likely is we get no deal at all because there's simply not the incentive to work together on this. I don't think Democrats care at all if DHS is not funded. I think Republicans will hit them hard for not funding DHS, but I think they are willing to take it because the reality is that what they are responding to is what they see as killings, and it is true, of American citizens unarmed on the streets and treated very badly. I mean, go back to the hearings yesterday. You have a woman testifying out of Chicago talking about the fact that she was shot 5 to 7 times, and then ICE agents bragging about that on tweets. You have people who describe themselves as autistic, as having brain injuries, maltreated at the hands of ICE agents. None of this is going to be the grounds of constructive conversation. And while Tom Homan on the one hand is saying we're going to draw down, you have to also listen to the rhetoric coming out of Donald Trump's mouth, which is just making the situation worse in the House and the Senate.
Well, just to understand, Jeannie, if we're talking about no more funding for DHS, that is the TSA and FEMA we're talking about. Would those have to be handled in some other way? Because, we remember what happened last time the TSA wasn't getting paid.
I think Democrats are going to say, we simply will not fund DHS if we don't see these really necessary reforms of ICE or CBP. You got a lot of money in the big, beautiful bill. You want to use it, but they're not going to, I think, make an agreement on this. I don't think there's any political incentive for them to do that. And yes, it's going to open them up to criticism from the Republicans, but I think politically they'd like nothing more than to continue to have this conversation about armed troops on city streets. Yeah. And oh, by the way, keep asking, why was the need to send 3,000 ICE agents to Minneapolis anyways? Why aren't they in Texas? Why aren't they in Arizona? Why aren't they on the border states? Is this because they have a Democratic governor and a Democratic mayor? These are all the questions that they're asking while the ICE agents continue on these streets.
Got breaking news from Politico, Rick Davis. Speaker Johnson is going to be going to the White House this afternoon. He plans to meet with President Trump for talks around DHS ahead of the deadline on February 13th. Quote, "We'll start to figure all this out," unquote. The speaker to reporters echoed John Thune. Primarily, we see this as a White House, Schumer, and Senate Democrats negotiation. Isn't that making this more complicated? Why don't we get all the leaders in the same room?
Yeah, I think it actually proves that the leaders are irrelevant. Thune and Johnson will do whatever Trump says that they got to do.
Wow.
That's what Johnson's doing. He's going to the White House to get his instructions. And that's been the case, for the last year plus since Donald Trump took office. I mean, Donald Trump serves as Speaker and Majority Leader of the United States Senate and House. Yeah, I mean, they've not been bashful about the fact that the deal they got to pass this budget and a CR for Homeland Security, Homeland Defense was from Trump to Schumer. So, look, I think it actually makes it easier. Trump's a deal cutter. You've already seen him totally reverse course, not so much rhetorically, but administratively in the last week. He wants a deal to get this off the table. I think Jeannie's right in the sense that this is stinking up the joint politically right before a midterm election gets really started off. Republicans want to pivot away from this. They're willing to cut a deal to do it. I totally disagree with Jeannie. There is zero chance Democrats are going to let TSA go home, put the pencils down at FEMA, and that kind of thing. I mean, this is potentially a crisis, just like the situation we had with the over 30-day government shutdown in these agencies. I mean, the minute those planes are grounded, everyone's back voting in D.C. I mean, this is a sensitive thing. The only thing that the big beautiful bill covers is the border security.
Right. immigration enforcement. So in our remaining 30 seconds, Jeannie, how long can Democrats hold out without a TSA funded?
You know, I think there is a lot of push amongst the base to hold out. And so I think we're going to see holdouts there. I don't know how long, but I think we're going to see holdouts.
Ugh.
Then again, Joe, the Democrats do cave. So there's that as well. But they're getting a lot of push.
I can't believe we might be going through this all over again. Thankfully, we have Rick and Jeannie to help us figure it out, and they're going to be back in our second hour as we welcome our global television audience to the conversation. Former mayor of New Orleans is coming in, Mitch Landrieu, with his take on all of this. It's next on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
ICE begins to pull out of Minneapolis. Welcome to the Wednesday edition as the president's border czar announces plans to withdraw some 700 federal agents from the city. And more, he says, if local authorities cooperate with ICE. Bloomberg Washington correspondent Tyler Kendall will have more on this coming up as well. The latest on a phone call the president had today with President Xi. And we'll talk about the standoff between ICE and local authorities when we spend some time, a couple of moments from now, with Mitch Landrieu, the former New Orleans mayor and former infrastructure czar in the Biden administration, will join us on a delicate moment in American politics. With analysis from our political panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. And we start, as always, on Wall Street, where it has been a bumpy ride today. Charlie Pellet has the latest from world headquarters in New York. Hey, Charlie.
Indeed, Joe Matthew, the Dow higher, the S&P, NASDAQ, both lower, but do want to begin with a number of developing stories. Busy day. I begin with politics in New York City, a New York State. New York Governor Kathy Hochul making it official moments ago that she has selected former New York City Council Speaker Adrienne Adams as her running mate. Adrienne Adams, you recall, recently ran for mayor. The January employment report rescheduled for February 11th. That, according to the Bureau of Labor Statistics, it will be a Jobs Wednesday. And oil right now surging on a report that U.S.-Iran talks have hit a snag. West Texas Intermediate crude up almost 3%, back above 65.05 a barrel. Right now, we got the S&P trading lower by 64 points, 68.53, down 0.9%. Dow Jones Industrial Average giving up earlier gains. As I speak, just turning negative. Little change right now. We have got NASDAQ down 500 points. The NASDAQ Composite Index now down 2.1%. The Russell 2000 Index of small cap shares trading lower by 2%. Traders here keep driving a rotation out of tech giants. The 10-year 4.27%. The 2-year 3.55%. Spot gold down 1.4%, 48.79 the ounce. Spot silver down 1.4%, 84 even. And West Texas Intermediate crude again up 3% right now, 65.05 a barrel. A major sell-off underway in Bitcoin. Right now, Bitcoin plunging by 5.1%. Indeed, just above 72,000. Yep, 72,227 on Bitcoin. Lots going on. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, this is really something. Brutal day. Charlie, thank you. It's almost like the election never happened in the Bitcoin market. Indeed, down over 5% now. The VIX is creeping back up toward 21, and we'll have more on the markets when Charlie gets back with us in about 20 minutes' time here on Bloomberg TV and radio. Make it stop. I'm Joe Matthew in Washington. We thank you for joining us with news coming from the White House. We've got actually quite a bit of news coming from the administration today, just hours after lawmakers began heading home, having codified in legislation what was done in the Senate last week for a reopening of the government. But that might not last a terribly long time, with a 9-day deadline to refinance funding for Homeland Security. And we're going to get our arms around that story a bit later. President started his day on the phone with President Xi. Bloomberg's Tyler Kendall's going to join us to dig into this. I have just completed an excellent telephone conversation, he writes on Truth Social, with President Xi of China. It was a long and thorough call where many important subjects were discussed, including trade, military, the April trip that I will be making to China, Taiwan, the war between Russia, Ukraine, the current situation with Iran, the purchase of oil and gas by China from the U.S., the consideration by China of the purchase for additional agricultural products, and I could go on. This is an incredibly long post here and a run-on sentence for the ages. Tyler Kendall joins us, Bloomberg Washington correspondent, to get into this and what's happening in Minneapolis as well. Tyler, what came from this call that we can actually call a deliverable?
Well, at this moment, it appears that it was almost a check-in ahead of President Trump's visit to Beijing in April. We're a few months out from that. We know this is going to be a highly anticipated visit for President Trump that he's been touting ever since he struck that deal in South Korea late last year. Now, in terms of deliverables, it sounds like we raised the threshold of how China's going to be purchasing U.S. soybeans. So far, they've purchased about 12 million tons. President Trump says that they have committed to 20 million tons by the end of this harvest season. We know that enforcement mechanisms for pledged agricultural purchases like this has been something that the U.S. has really grappled with in recent years. So that's going to be a metric that we watch really closely. He also outlined that we can expect 25 million tons by next harvest year, though that's not necessarily new. The U.S. Treasury Secretary has been out previewing essentially that's aims that they're going to be looking for. The pair also discussed Taiwan, also the war between Russia and Ukraine. That's notable, Joe, because it appears that Chinese President Xi Jinping was also busy this morning, because before he had this phone call with President Trump, he had a video call with the Russian President Vladimir Putin, in which they touted the ties between those two countries when it comes to political ties, but also trade ties. So it appears that perhaps he detailed some of those comments with President Trump on the phone earlier today.
Critical minerals constantly in the conversation with this administration in the name of national security. And we've told you about this critical minerals stockpile that the president has been pursuing. It's $12 billion in seed money, cobalt, gallium, other elements that are used in everything from making telephones to jet engines, as opposed to weaponry. We talked to Raja Krishnamurthy, the Democratic congressman on the China Select Committee, about this last evening. Here's what he said.
What we know is over and over again, the Chinese Communist Party destroys their competition by flooding the market with critical minerals at costs even beneath the cost of production. And so if you have price floors, you can keep our businesses intact, and we can do it among our trusted partners potentially. But then again, you can't have chaotic trade policy, and you can't talk about invading Greenland and dumb things like that just hurt our broader initiatives, such as on critical minerals.
Now, Tyler, you've got new reporting on this with a number of nations getting involved. How broad will this stockpile be?
Well, I'm glad we played that sound from the congressman there, because a senior administration official tells me that one of the first steps here is that we're going to start to see nations talk about this idea of a price floor. The idea here being, when it comes to imports of critical minerals, that could help counteract against China flooding the market and eating into Western firms' profits. Now, today, we saw the Trump administration host 55 countries at the State Department for this critical minerals summit. We've gotten some tangible agreements. I think we can say they're being called critical mineral action plans. So they're not necessarily binding agreements, but there's one trilateral one with the European Union, Japan, and the U.S., and then one between the U.S. and Mexico. So something to watch as this keeps developing and the U.S. tries to use bolstering our supply chains to counter, of course, where we started this conversation.
So it's another framework that could end up being a plan. I guess is the ideal, Tyler. Thank you so much. Bloomberg's Tyler Kendall with us live in Washington as we consider the other major headline coming out of the administration today by way of Minneapolis. The president's border czar, Tom Homan, still in Minneapolis, announcing not only a calming of nerves, but an actual withdrawal of ICE forces, at least some of those agents who are on the ground. Listen.
Given this increase in unprecedented collaboration, and as a result of the need for less law enforcement officers to do this work in a safer environment, I have announced effective immediately we will draw down 700 people effective today. 700 law enforcement personnel.
And more if local authorities better cooperate with ICE, according to Tom Homan. This is a very delicate moment in American politics, and of course it's coming against the backdrop of a big debate here in Washington, D.C. about putting new restrictions and what restrictions should be put on ICE agents, whether it be demasking body cameras, which the department is already in the process of doing, the use of warrants, though, and some other elements are making this very controversial with only 9 days to figure it out. That's the continuing resolution for the Department of Homeland Security. But as we consider this clash between local and federal authorities, not just Democrats and Republicans, we wanted to have a conversation with Mitch Landrieu, the former mayor of New Orleans, who came into office just in time to rebuild and recover from Hurricane Katrina. Went on to work in the Biden administration, of course. You heard our conversations with Mayor Landrieu talking about the implementation of the infrastructure law, which almost feels quaint at this point. But I'll remind you as well that after the Charleston shooting in 2015, he led the removal of 4 Confederate monuments for which he received great criticism as well as a Profile and Courage Award. And he has a place in politics here that might help us understand where we're going. With us now live on Bloomberg TV and radio, the former 2-term mayor of New Orleans. Mayor Landrieu, it's great to see you. Welcome back. I'm wondering what you would do if you were the mayor of a city like this, whether it's New Orleans, which has seen National Guard troops, or Minneapolis dealing with the ICE raids. What would you do? What would be your posture in dealing with the federal government?
Well, first of all, you're not
just dealing with the federal government, not DEA, ATF, the FBI, the U.S. Attorney, the National Guard. Those are all very familiar things to mayors in America. And cities work well when there's a good partnership between the president and the mayor and the governor and all of those different agencies, which, by the way, happens all the time in every administration. What's unique about what's going on right now is that Donald Trump and Stephen Miller and Tom Homan have trained and created a new animal that they now call ICE. That is a national law enforcement that's imposing their will without cooperation and essentially without proper training, or if they are properly trained, they're given the wrong message about shoot first, ask questions later, and causing much more havoc on the streets of America that need be. You know, Tom Homan who has been doing this a long time, and he's not exactly forthright. When he says, oh, we're going to draw down, remember, they had 3,000 ICE guys. Now, people should figure out where they got 3,000 ICE guys from so quickly. Who are they? Where were they trained? What are they supposed to be doing? You can see from their behavior that they're not really trained like the FBI or the DEA or local police departments. So the first thing that I would do is what I did when I was mayor. We had to rebuild the New Orleans Police Department. Police officers are hired to protect and to serve. They see the constituents as people that they're serving. They don't see them as enemies. You have to honor the Constitution. You know, people have the right to protest as long as they do it peacefully. Police officers, especially in New Orleans, are great at crowd control and making sure that people can exercise their constitutional rights. You never shoot first. You always shoot last, and only when it is absolutely necessary. And unfortunately, what has happened across the country at the direction of President Trump and Tom Homan and Stephen Miller is ICE agents have lost the confidence of the American people. Even people who will consider themselves to be Republicans, independents, and conservatives because of their behavior. So I think that ICE ought to get out of Minneapolis right now, and they should start again. There is no mayor in America that I'm aware of that would not receive help from federal agencies to help root out crime, whether it be committed by an American citizen or somebody that is here illegally. But that's actually not what's happening, and it's a shame. And I think Tom ought to back up a little bit, and they ought to rethink their strategy, and then they ought to be fair and thoughtful about how they help make the streets of America safe. But right now, most Americans think what ICE is doing is making us less safe. And I happen to agree with that. And I think they got to really rethink what they're doing and get better trained. They have to have background checks, body cameras. They have to learn de-escalation techniques, and then we'll begin again.
We heard the other side of this argument, Mayor, from Republican Senator John Cornyn of Texas, realizing he's running for re-election. I think he speaks for a number of members of the Republican-led Senate when it comes to who is agitating whom. Listen to what he said.
I think, unfortunately, in both of these instances, these individuals did not cooperate with law enforcement. And unfortunately, when that happens, tragedies like this occur, which are regrettable. But I think the answer to it is for the sanctuary jurisdictions to cooperate with federal law enforcement so that federal immigration laws can be enforced, hopefully without these kind of tragedies occurring.
I wonder how you react to that.
Well, first,
not
I just
seeing
want
the
you to
victim
think
being
about-
blamed here.
Sometimes people don't really think about what Senator Cornyn said. Alex Pretty, who was on TV being shot in the back, got shot 10 times, was not the aggressor in that situation. There wasn't a riot on the street. He was exercising his First Amendment right, and he was actually trying to protect another woman who had been pushed. There are very few law enforcement officers themselves who would look at that tape and say that those ICE agents or Border Patrol agents in that situation did the right thing. And if they were trained to do that, then they were trained improperly. So Senator Cornyn is wrong about what is actually happening. Now, listen, to be clear, people should protest, and when they do, if they do, they should do so peacefully. But American citizens have a right to be present and to film law enforcement. We should know who the law enforcement officers are that are taking away people's rights and liberties. They should be held accountable for their actions. And yes, people should cooperate to the extent that they can. But there's a big gulf between what ICE is doing and what reasonable, thoughtful police officers should do, even in the most difficult circumstances. Remember, I mean, in the city of New Orleans, we have millions of people on the street all the time. Our officers are trained really, really well to handle difficult situations. After, when we took the monuments down, there were lots of people on the street, and people were exercising their Second Amendment right to carry firearms, and yet our officers acted with great restraint so that everybody was safe. There's actually a way to do it, but ICE is not doing that now, and they have to do it if they're going to continue to do the work that the president wants them to do in a way that protects people's constitutional rights and people's lives.
You refer to the masking of these federal agents and the push to have them demask by law. Senator Cornyn called that request an insult to their professionalism. Mayor, when you consider the interaction that you had with New Orleans police, who, of course, not able to cover their faces when they're conducting an arrest, how would you react to that?
Well, first of all, almost all the police officers, I think almost all of them, I don't want to say all because there may be some instances, we know who they are. We know what their names are. We know where they were trained. We know what kind of training they got. We know what agency they worked for. They actually have labels on their vest. This is universally true across all of America. So I'm a little bit just confused by that answer. And the reason we do that is because these law enforcement officers, of course, are the most powerful people in the world. They can take people's life and liberty away. And we have a system of accountability. And so that's just kind of the way it is. For them to have to be in favor of masked men with guns who have been basically told that you will not be investigated, you will not be questioned, you actually have a license to kill, should chill every American. And I think that most reasonable people, conservative, liberal, extreme, will look at this and say, listen, this is not the way that we are going to be made to feel safe in America. We clearly should have some kind of reasonable restrictions. And most really great law enforcement officers, and most men and women in law enforcement will look at this thing and say, look, they're giving us a bad name. And because if you can't trust the police to treat you in the right way, you're not going to cooperate with them. It just doesn't work. And so I think Senator Cornyn and other people I think they're out of bounds. And I think most of the American people know that ICE is out of control, and they need to be better trained and better focused and giving better instructions, and they have to be held accountable when they get out of bounds, which most people think they are right now.
You don't worry about these officers being doxxed. That's what obviously is the explanation for them covering their faces, that they in fact will be targeted.
But it's also, listen, it's a very dangerous thing. But every other law enforcement agent in America doesn't have a mask on. They all operate under difficult circumstances. I mean, you would talk to folks in the FBI or the DEA or the ATF or the U.S. Marshal's Office or U.S. attorneys. But one of the things that they don't tell you, it's also an excuse for no accountability and not being able to question somebody's authority. In America, we get to, based on the Constitution, redress our grievances against the government and say when we think the government is wrong. That helps America be strong. You, in fact, are a great patriot when you constructively criticize your government. It is one thing that distinguishes from autocracies and kingships. It's one of the reasons why we actually revolted way back when. If you take that away, America ceases to become the country that we all promised that we would be to each other. And it just doesn't seem to me that it should be so hard to get this right. We have experience in it. The entire Department of Homeland Security needs to be rethought and redesigned. We put that thing together really quickly after 9/11. We're 26 years into it now. It's too big. It's too bloated. There's a lot of waste. And clearly it's not being run well right now. ICE is just a manifestation of that. So we've got to rethink about all this stuff. There's a way to be tough, but there's also a way to be smart. And that's what the policing should be. American citizens are not the enemy. And that is what ICE is treating people like. And that is a mistake.
I talked to Christian Menefee this week, Mayor. He's the newest member of Congress, a Democrat, young man, won a special election in Texas. Yeah. And we were having this conversation, and he called for the abolishment of ICE. I asked him about the impact of that statement and the way that it can be confused with defund the police, for instance. A lot of Democrats are very worried about the messaging that's coalescing around this issue. And here's what he told me.
You can't take something that was created and has been radicalized to this level that has harmed so many people and try to have minor reforms on it in a way that you think is going to protect people. I think that they are far past the line. And after folks are executed in the street, it's time to tear it down.
Time to tear it down, he said. How would you counsel Democrats in messaging around this?
Well, first of all, no, I don't. I'll let Democrats counsel, themselves. I'll say this about a couple things. First of all, Americans, everybody has a right to be safe. And I think that border security is really important and that we ought to make sure both of those things happen. Whatever kind of law enforcement agency we have, and in this instance, it's ICE, has to act appropriately. And if they don't, they have to be curbed and restricted and changed. Whether or not it's called abolishing ICE or reforming ICE or fixing ICE, tearing things down without having a replacement doesn't make any sense. I thought defunding the police was a really dumb slogan. Sometimes you need more money than less. But having said that, I want the American people to be aware of this. First of all, there are only 600 police officers in Minneapolis. There were 3,000 ICE agents there. And by the way, a very small number of immigrants. Texas has a lot more, and so does Florida, but they didn't send the ICE agents there. That's number one. Number two, they have now given ICE I think it's $156 billion. That is more money than most of the defense budgets of almost every country in the world. All right, that is extraordinary, and it is collectively more money than all of the FBI, ATF, DEA, U.S. Marshals. So I want the American people to think about a couple things. If everybody is focused on immigration and not just taking out the worst of the worst, but actually taking old ladies who happen to be gardening in their yard and throwing them away, and they're not focused on terrorism, and they're not focused on cyber crimes, and they're not focused on other kinds of violent crimes that are happening in America, don't you think we're off task and we're off focus if the whole point is to keep us safe? So I absolutely think that we have to completely rethink how much money ICE has, where the money is, and who doesn't have money. Like every mayor in America would like the FBI, the DEA, the ATF, the U.S. Marshal, and most police departments to have a robust amount of money to go after everybody who we know are the violent criminals, whether they're here legally or whether they're American citizens. And right now, the Trump administration has prioritized taking 5-year-olds and putting them in jail than actually gone after the real criminals. This is why police chiefs around America are saying that this is actually making us less safe. So we have to have an adult conversation about this, and we have to figure it out, because right now ICE is acting like the ass, and they got to get better at it, like really, really, really quick.
Wow. Mayor, while you're with us, I want to ask you about another trend that we're seeing here in Washington, D.C., and that's the return of some Confederate symbols and statues here in the city. You're probably aware of the statue of Albert Pike. There's another one that's going back into Arlington. It happens on a day that we understand the president wants to install a Christopher Columbus statue outside the White House, pulling some marble out of the river up in Baltimore to make this happen. It's pretty remarkable. I just wonder how someone like yourself, who had these Confederate statues removed from the city of New Orleans at great political peril, interprets this return, this move to go back to the future.
Well, let me say this. I think that the myth of the lost cause, which was that the Civil War was fought for a noble cause, is a lie. The Civil War was fought over the cause of slavery, which is this nation's original sin, and racism continues to be a very difficult issue for this country to grapple with. And people want to deny our history because for some reason people feel that because we think about things we've done in the past, that somehow we're saying this country was not great. America's the greatest country in the world. But if you're never ever going to get any better until you reconcile things from the past. Secondly, the Civil War was fought to destroy the Union. Had the Civil War succeeded, had Robert E. Lee succeeded, we wouldn't be here today. So I don't really think it's a great idea to lift those folks up and to memorialize them as though somehow they were American heroes, like we should put a statue of King George on the Washington Mall. I think that's a bad idea. If you want to remember the people that died, who were brothers fighting brothers, some on the Confederate side and some on the Union side in a cemetery, to realize the deaths, some of which Abraham Lincoln, memorialized in the Gettysburg Address, that's fine. But don't go tell me as an American citizen that you're going to lift up generals from the Confederacy or wave a Confederate flag and tell me that you're being patriotic. That's about as anti-American as you can get. And I just think it's a tremendous mistake. And I think it's a tremendous mistake to make men and women in the military right now who are fighting to save our lives walk under the banner of a Confederate general on our bases. I think that's a terrible mistake as well. We can remember our past, and we can make a promise for a better future without degrading the union or denying our patriotism for all of America's.
There's only one Mitch Landrieu, the former mayor of New Orleans. It's great to see you, Mr. Mayor. Don't be a stranger. Let us know when you're back in Washington. We'll continue this conversation because I think it's going to keep on going. A conversation you will only hear on Bloomberg TV and radio. This is why you want to subscribe to the podcast with a lot to unpack. We'll assemble our political panel next. Rick Davis and Jeannie Shanzano are on board today, and so is Charlie Pellet. Let's stop down and get a look at the markets because it has not been a fun ride today on Wall Street. Charlie, what do you have?
Absolutely right, especially for the bulls, Joe Matthew. Lower across the board with the Dow, the S&P, NASDAQ all declining. The VIX closing in on 21 right now. The S&P down 62 at 68.55. Drop there of 0.9%. Dow Industrial spent much of the morning higher. Lower now by 0.2%, down 86 on the Dow. NASDAQ, though, where the real damage is being done, down 2%. The NASDAQ 100 index down 2.2%. And we've got our Russell 2000, or the Russell 2000 index, down 2%. The Bloomberg Mag 7 index down by 1.9%. The 10-year, 4.27%. Gold down 0.6%, 49.15 the ounce. And West Texas Intermediate crude rallying 3.1%, 65.15 a barrel. Eli Lilly out with earnings, and Lilly shares are rallying now. We've got Lilly up by 8.6%. Finally, BLS says the January employment report rescheduled for February 11th. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, we'll meet you on a Jobs Wednesday, apparently, because, well, I guess nothing matters anymore. I'm Joe Matthew in Washington. Thanks for being with us on Bloomberg TV and radio on the Wednesday edition of Balance of Power. We assembled our political panel now following a fascinating conversation with the former mayor of New Orleans, Mitch Landrieu. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are here. Rick is our Republican strategist, partner, Stone Court Capital. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, our Democratic analyst. Rick, I wonder your thoughts on what we just heard from Mitch Landrieu, who is clearly not impressed terribly with the removal of 700 federal agents. He's making clear, and it's true, we've got another 2,000 agents there. But I had sensed some optimism when we spoke earlier on your part that the needle might be moving here when it comes to de-escalation and the impact that Tom Homan has had in Minneapolis. How do you read it?
Well, first of all, let me just say I am thankful that Mitch Landrieu is not running for the United States Senate as a Democrat this year because, like his sister, he would have been successful and we'd be down one, start of the game. I mean, he's an amazing politician and probably the Democratic Party's secret weapon. Yeah, look, I mean, I think there are ways to look at this. You can be negative, you can be positive. I think practically speaking, we're in a different place today than we were a week ago. A week ago, following the death of Mr. Petty, I mean, the country was ablaze with anger, rightly so. The Congress was in a grip over what to do about this. Even Democrats didn't have a full slate of reform measures that they wanted because they never thought they'd have a shot at getting those. And now today we have a legitimate conversation going on in Congress with the White House about how to, deconflict the situation, both in Minneapolis, but writ large with these ICE agents all over the country. So you're never going to solve all the problems at one time, but we're in a much more constructive dialogue today than we've been in the past. Doesn't mean everything's better. Doesn't mean it's not going to have problems. One more shooting by an ICE agent to a citizen is going to blow all that up. We are dancing on the edge of a pin, but right now we're still on that pin and we're still having conversations that could result in a positive change.
I'm struck by Rick's initial reaction to our conversation with Mitch Landrieu. Jeannie, just to digress for a moment, why aren't Democrats running him for president?
They very well might. Joe, I think not that long ago on this show, I said he would be a very good candidate, and there is a reason for that. And who knows who will run? There's a lot of talent on the bench, but I think he makes a really important point, and it's one that we've heard over and over again, which is that there is no question you need a secure border, but you don't get there by violating people's rights and liberties, terrorizing Americans on the streets. And I think a big question has to be asked about why Minneapolis. Again, 3,000 ICE officers sent there. We are told by the Attorney General, we'll pull down if you give us your voting rolls. We have an Attorney General in D.C. saying that you can't bring guns into the District of Columbia. What is the interest and intent on the part of this administration and the entire department on having masked and armed men on the streets of our cities, particularly our blue cities? It probably comes down to what Donald Trump has been spending a lot of time on, which is concern about what happens in November. And while all that is happening, you're not going to get a lot of Democrats in Congress or elsewhere who are going to say, hey, it's okay, keep those masks on, keep those guns afloat, keep 2,000 plus ICE agents in a city with just 700 police officers. This is where we are in this country, and big questions are being asked, and Democrats aren't trusting either DHS or Kristi Noem or Donald Trump or Tom Homan to say, we're pulling out 700, turn the other way and look away. That's not going to work. And it doesn't even depend on another incident. It's not going to work now.
How's this masking issue going to be solved here, Rick? This is a tough one. When we asked John Cornyn yesterday about demasking, he said that was an insult to the officers' professionalism. You heard what Mitch Landrieu just said. Should these ICE agents be held to the same standard as other law enforcement officers in this country, or should we be sensitive to the fact that they say they and their families are being targeted when they're identified?
Look, I mean, we live in a very difficult environment where elected officials are targeted. Police officers, no doubt, are targeted. What are we going to do? Members of the United States Senate and House start wearing masks because, like what Landry said, we all know who they are anyway, right? So what's the point? We know who are on the streets of Minneapolis, of LA, and I would say, I think that there has to be a level of trust. There is a social compact between law enforcement, regardless of what agency it is, and the public. The public pays for your salary, your gun, and your badge, and they give you a lot of discretion to keep the peace. But you have to keep the peace, and you have to do it without infringing upon the constitutional rights of every American. Right now, that social compact has been torn apart. And so I think that if this administration really wants to build confidence in the professionalism of the staff, they actually need to do the opposite and take those masks off to demonstrate that the people who maybe dox them or come after them, they're the enemy, not the police themselves. I mean, I worry about the net effect on any peace officer in any jurisdiction in the country losing its status and breaking that social compact, because that hurts us all. And so I think this is one of those symbolic things that needs to be disposed of so that we can get on with building those relationships, not tearing them down.
Well, boy, this is really important stuff. We could write a lot of columns about this, Jeannie, and have a debate that lasts the rest of the day. The fact of the matter is something's going to have to come in exchange. I'm guessing if there's going to be an agreement to fund the Department of Homeland Security, if there's a demasking requirement, what would Democrats be open to giving Republicans here? Would there be a measure on sanctuary cities? They've proposed increasing penalties on immigrants who cross the border illegally, for instance. Could any of these things help to fulfill a compromise?
I don't think Democrats are going to go along with the sanctuary city, at least as far as we've heard. The proposals are sort of created and talked about so far. I don't see that happening. I think there are a lot of Democrats who would go along with common sense immigration reform. We've known that for a long time. We've seen compromises. But what they want to see first and foremost is they want to see ICE addressed. And that means whether you're talking about revised, whether you're talking about defunded and then recreated in a way that makes common sense. These things are all very doable. We have wonderful police officers and military officials in this country working day in and day out without masks. And I think the question to be asked is, why is John Cornyn, apart from political reasons, and this administration and so many others committed to things like masking these agents when they aren't committed to masking regular police officers, except in certain circumstances like illness and certain circumstances? So, you know, there are big questions to be asked. There are agreements to be made, but Republicans are not going to be able to make those agreements by talking about nationalizing our electoral process or dealing with sanctuary cities. It needs to start with revitalizing ICE, retraining ICE, and reconfiguring an agency which is swimming in money And none of it makes any sense. And it's robbing people of their rights on the streets of our cities.
Yeah. The Speaker of the House told reporters a little while ago he's going to be meeting with the president today at the White House to talk about this. But he made it pretty clear, Rick, and John Thune has as well, that this negotiation is between the president and Chuck Schumer when it comes to funding DHS. Will they figure that out in the next 9 days?
Yeah, I think maybe not in the next 9 days. I think everybody has made the point, especially Senator Thune, that that's just simply not enough time to, effectively address these issues. But at the end of the day, the president and Schumer can set that target and meet it if they want.
Could happen at any time. And of course, you'll hear about it right here if and when it does. Great insights from Rick Davis and Jeannie Shanzano. This is why they are Bloomberg Politics contributors, and I thank you both. Thanks as well to Mitch Landrieu. We're going to turn our attention to what's going on overseas coming up next, and the potential for another strike against Iran. This is Bloomberg.